Good morning, everybody. Welcome to TopstepTV. This is opening call. I bet you did not expect this duo on this morning. What is up, JD? How's it going?
All right, my man. Hey, everybody, get used to these two faces for the rest of the week. Andre and I are pretty much bell to bell for the next 3 days. We're going to be here taking you through everything. So buckle up. Here we go, folks.
Yeah, I don't know if that's a good thing or a bad thing. It's just a thing. Anyways, it is Fed Day. We will have wall-to-wall coverage starting at 1 p.m. Central Time all the way through the presser and the Q&A session. So make sure you stay tuned with us. Bell to bell, you're going to get a whole lot of me and JD today. But anyways, let's get right into it. JD, usually we do the tip of the week right now. So let's get into that. Tip of the week. There it is.
Oh,
wow.
sure.
Directions right on. I don't know. We're just tip of the week: adaptability. Be flexible and willing to adapt your strategy based on market conditions. Recognize when a trade is not working. Be ready to cut your losses. Big time. We saw that yesterday in fast markets with the fellas. We were not getting married to any positions and any biases, and we're willing to cut our positions early. JD, I think that's very, very important into trading. Actually, you had the nice short yesterday, and we didn't. I think we cut that one even a little early because it was coming against us, if I remember correctly.
It was. I was short going into the close. I was looking for a new low on the close. Didn't quite get it. Then right on the reopen, we'll talk about this when we go through the charts.
Sweet.
Right on the reopen of the NASDAQ, wiped out yesterday's low and then popped right back up. Now we're trading mid-range again from yesterday. So I got the move I was looking for. Timing was off, so I didn't get paid on it. But all in all, it was a nice little setup.
All right, not bad. We got more coming up. We got a big day today again. It's Fed Day, so I'm gonna get into a little bit of news and we'll get into some chart talk, JD. So let's get right into it. 5 things to know before the stock market opens Wednesday. That is today. The Dow Jones is in the dumps. 9 days in a row losing streak, I do believe. Yesterday, another ninth day loss in a row. What is going on in the Dow? Then we got counting quarters. We got the big Fed decision coming up today at 1 p.m. again. 25 basis point cut is baked in. Let's take a quick look at the Fed watch tool just to get, oh my goodness, 99.1% probability of a 25 point basis cut. It's all but a certainty, but we will see what they have to say. Dot plot and their hawkish tone, or we'll see what the voting was as well, and then we'll see what they're predicting for 2025. I was thinking about this right before we got on. I remember once when we started 2024, we were talking about 7 rate cuts coming into 2024. We're supposed to start back in March, right? Well, we never got the 7, but lo and behold, I think we're going to get, 5 when it's all said and done, JD? 4?
I believe it's 5.
It'll be 5. This will be our 5th rate cut. So all said and done, I mean, they weren't too far off. It was just the timing of it was a little bit behind. It was all backloaded, obviously, but we were all laughing on 7 rate cuts. Well, we got 5 in 2024. It's just backloaded starting, November something. But yes, very interesting how that all worked out. Oh, here's a story. Thomas, stop me if you've heard this one before. Spending stopgap in D.C. Congress is days away from a government shutdown. Seems like we run this story at least 2 or 3 times a year. Funding runs up to Friday. At the same time, government leaders are set to adjourn for the holidays. Go figure. Congressional leaders on Tuesday released the text of a bill that would fund the government through, just March 14th. Oh, it's a little 3-month stopgap. It feels like we run this story all the time, JD. People in D.C.
Just our elected officials being our elected officials, right?
Elected officials kicking the can 3 months, 3 months down the road at a time. Oh, this headline popped up overnight last night. We were talking about the Asian markets. Nissan and Honda are exploring a merge, right? Japanese automakers Nissan and Honda are considering a merger. Companies are preparing to enter negotiations that could result in the competitors coming together under a holding company. The combined operation, including Nissan-backed Mitsubishi, would amount to 8 million vehicles sales annually. 8 million, that's a lot. According to Nikkei, which first reported the merger talks, the sales volume would put the tie up par with some of the world's largest automakers, but still shy of annual sales of Toyota Motor and Volkswagen. 8 million sales annually, that's insane about. But yes, Nissan and Honda exploring a merger. I wonder how that happened. And of course, Luigi Mangione has been indicted on charges of murdering the CEO of United Healthcare. Brian Thompson, 26-year-old, is charged with 1 count of first-degree murder of terrorism, 2 counts of second-degree murder, 1 of which killing as an act of terrorism. He also faces charge related to possession of a weapon, a forged license. Mangione faces a maximum possible life sentence in prison without parole if convicted. That's not a very pleasant story. But it's something we keep an eye on because it is somewhat related to business with the United Healthcare CEO. Anyways, with that being said, JD, Nothing really more on my end. If we want to get some chart talk, we can keep an eye on the markets and then kind of preview the rest of the day. If that works for you, take a look at the futures. They are selling off a little bit.
Just a little bit. We're back into range from yesterday. It looked like we were going to open up with a gap in the S&P and the Nasdaq, but we're right back into range again. We did have some news out this morning already. We had the MBA mortgage applications out. Composite index was down quite a bit. Prior 5.4% up. Actual today down 0.7%. New home purchase applications were up 1.4%, and refinance applications were down 2.6%. That's down from a prior of up 27.2% on refinance applications. So a big drop there, which I don't think is necessarily a bad thing. Housing starts. Housing starts came in pretty much on par. Actual number, 1.289 million new housing starts. Consensus range was 1.25 to 1.45, so right in the middle there. Permits to build new houses came in at 1.5 million up. The consensus range was 1.3 to 1.45, so we did a little better in permits, housing start permits.
Not bad.
In the current account, I don't even know what the current account is.
What is that? I don't know what that number is either. What is current account?
I'm gonna read the definition for you. The current account on a quarterly pardon me. Frog in my throat. Okay, the current account on a quarterly basis measures the U.S. international balance in goods and services trade, as well as unilateral transfers. That is from the Bureau of Economic Analysis.
All right, there
so
you go.
So it came in at minus 3.11 billion. Prior revised was down to 275 billion. Consensus was 4287. So a little worse than expected there. Other than that, it's Fed Day, folks. We also have the EIA petroleum status report out at 9:30 Central Time. Treasury preliminary Treasury buyback announcement. The Treasury buyback results are out at 1:00 tomorrow Central Time. So we'll get a preliminary announcement today, followed by the final tomorrow. Then we have the much anticipated FOMC announcement. The Fed meeting is going to cut out. We're going to get that announcement at 1:00 Central Time.
Yes.
Uncle Jerry is going to be doing his press conference at 1:30 Central Time. We'll be airing straight through that. We'll be talking. David Green is here for group coaching at 12:30 Central Time. So we're going to roll from group coaching right into Fed talk. So make sure you're here for that. If you're trading around it, we'll be here too. Tomorrow is some big numbers. We got GDP, jobless claims, Philly Fed manufacturing index, more housing data, existing home sales, leading indicators, EIA natural gas report, 7-year note. I thought that said auction. It says announcement.
Nope.
And I mentioned that Treasury buyback and Treasury International Capital. Friday's another big day, guys. Quadruple witching. Well, it's actually triple witching because we don't trade single stock futures in the United States anymore. So Friday is triple witching, options expiration, futures expirations. And then we have the PCE number, the Fed's preferred inflation gauge, the personal consumption expenditure number out at 7:30 Central Time on Friday, followed by University of Michigan consumer sentiment at 9:00 Central Time. And everyone's favorite number, the Baker Hughes rig count.
Yes.
Yes, in case we want to get into it again, I was offered to take the University of Michigan survey. I did not solicit them in any way. I just received a letter in the mail with a nice, crisp $5 bill and a code to log in to take the survey, which I never took, and I kept the $5. So everybody knows. We definitely woke the chat up. I guess there was only 3 Fed rate cuts so far this year.
3? This is going to be our 4th then? There you go. Thank you, chat.
Yeah, I should have looked that up.
It's okay. It's okay. That's what we got the chat for, JD. But yes, every time I hear you announce University of Michigan sentiment number, I do chuckle to myself because we're all thinking the same thing. So who we got in the chat this morning? I see commands out there. We had him saying, give me a shout out there. Andre, regarding Nissan, the mergers because they are in financial crisis. They only have money to last for 2 years. Oh, yeah, that'll do it. Who else we giving shout outs to here? John Jones in the house. Shout out to Kansas there, A-Mile Style. Good seeing you this morning. Welcome to Fed Day. Some of our other regular bell-to-bellers in there. Leah, I see you. Command, of course. And Trader, good to see you. All right, let's get right into it, JD. I got nothing more on my end.
Yeah, let's see. Well, real quick, what happened in overnight markets? Looking at Asia, Asia closed pretty mixed overnight. Shanghai Composite up 0.62%, the Nikkei down 0.72%, and the Hang Seng up 0.83%. Stocks in Europe currently trading a bit higher. The FTSE's up 0.09%, DAX is up 0.08%, and the CAC is up 0.08 also. U.S. dollar index coming in at 106.98, up 0.02%. The VIX down about 1.7%, sitting at 15.6. And the yield on the 10-year note is resting comfortably at 4.403%, up just a little bit on the day.
Not bad.
All right. Without further ado.
Yeah, still selling off here in the futures a little bit. S&Ps, actually, S&Ps are down about 20 points off the highs, off those numbers, those 730 numbers, I do believe. Yeah. Keep an eye on that. Trading 61.27 here pre-market.
Nice little pop overnight.
Yeah, interesting.
Let's take a closer look.
Let's get into it, JD. Here we go. Fed Day. We'll chart talk with JD.
Happy Fed Day. Here's your daily chart of the E-mini S&P 500 contract. We are still in a very healthy uptrend going back to this August 5th low here. Continue to make higher highs, higher lows, which is obviously what you want to see in a healthy uptrend. Let's zoom in on some recent price action here. Here's the last couple days of price action. So now we've been seeing some consolidation the last couple weeks here. This could be a little bull flag forming. We'll draw that in just so everybody has a little base of reference there. Could this be a little bull flag forming? Possibly. What it looks more to me, though, is a little mini. Get the right tool back up. Looks to me like a little mini descending triangle right there.
Oh.
So the descending triangle, if you are studied in your chart patterns, typically a bearish chart pattern, a bearish continuation chart pattern, but we're seeing it at a major market top right now. Here we see prices consolidating, condensing, a couple of touches on this upper trend line here. We've tested this low 4 times in the last couple weeks, and we're just having trouble making new lows. We're having trouble breaking through this floor. It also coincides, it lines up perfectly with yesterday's low, 61.14 1/4. Yesterday's low was a low a couple days ago. Perfect little bottom channel line there. So taking a look into volume, we're seeing buying volume decreasing, selling volume increasing, which is indicative of a possible breakout to the downside on this chart pattern. We take a look at our volume and open interest. The March contract, well, I guess we're technically still in roll until the end of the week, but March contract gained 416,000 in open interest, trade about 1.8 million contracts. So volume a little skewed because of the roll still. But if I'm looking for a breakout on this market, I'm looking for it on the downside right now, just based off of this one simple chart pattern. Is it going to happen? Who knows? We're creeping up on those lows again right now. We're back to settlement 61.27 1/4 in the ES. Let's take a look at the 30-minute chart real quick. So let me zoom this out just a little bit. Here are our last 6 days or so of price action. We see how this low is holding very well, the 61.14 level. Also yesterday's low, like I said. This morning, overnight inventory was long going into the opening bells in about 15 minutes. So we had some buying. We took out overnight low just by a couple ticks in the ES. Rallied, overnight inventory got long. Now we're seeing a sell-off of those early numbers. I couldn't tell you if it was because of those MBA mortgage applications, because of housing starts and permits, but something sparked a move in this market right now in the last hour or so, and we are now trading back inside range, inside value from yesterday. So once we're trading, when we open regular trading hours, inside range, inside value from the previous day, what we like to do is sit tight, be patient, wait for better trade locations. You want to see a little bit of direction in the market before you start loading up on positions. So that'll be our first play today. Our strategy will be to sit tight, wait for better trade locations. There's a lot happening today. It could be really volatile. It could be real dead leading up to FOMC. So you want to sit tight, let the market dictate what it's going to do, and then try and jump on and grab a piece of it. That's about it. Not the time for picking tops and bottoms. This is a momentum type of trading day. All right, let's take a look at the NASDAQ. Here's your daily of the NASDAQ. So not quite the same look as the S&P. While the ES has been consolidating for the last couple weeks and forming sort of a bearish chart pattern at the top, we're getting a bit of different cycle from the NQ. NQ is still looking very strong. Solid uptrend, just like in the ES. Continue to make higher highs, higher lows. We've got 1, 2, 3, 4, 5, 6, 7, 8 touches of this trend line right here, and no signs of stopping. We're tapping on the ceiling. We were tapping on the ceiling of new all-time highs just a little while ago until that pullback happened. We could take a look at volume and open interest in the NASDAQ also. So NASDAQ gained about 51,000 in open interest. Again, could be because of the roll. Traded about 570,000 contracts. So bulk of the volume is now in the March contract. Bulk of the open interest is now also in the March contract. I would say, I mean, obviously, these contracts go off the board on Friday. December contract is going to expire in the equities. If you're still trading the December contract, I highly recommend you go where the volume and open interest are. That is now in the March 2025 contract. So get over there and start trading. All right, here is our 30-minute chart. Similar to the ES, right on the overnight open, 5 o'clock Central Time. Talked about this just a few minutes ago. Got that little liquidity grab right there in the NQ. Dipped, wiped out yesterday's low. Blew out all those stops, came right back. Overnight inventory looked to be getting long. We had some numbers out this morning. Now we are trading right back inside value, inside range, inside value from yesterday. So again, we're waiting for direction in this market. We sit tight and we wait for better trade locations. If we're going to keep breaking to the downside, selling new lows might be a good play heading into FOMC if it's looking like it's going to be a volatile morning. Again, you don't want to get too caught up trying to pick tops and bottoms ahead of the Fed announcement. Better off looking for those momentum plays, trying to take a couple ticks out of each swing. This is not the day to be a hero and hit home runs. This is not the day to go blowing up accounts. This is the day to sit tight, be patient, and wait for those moves and try and jump on board. All right. We will jump over to crude oil now. Here's our daily in crude oil. So we got a couple things going on in crude. I've been talking about crude all week long. I'm going to zoom out just a little bit. So mention that chart pattern in the ES just a minute ago, that descending triangle. Clean this up a little bit. And we're getting a pretty similar pattern lined up in crude oil, just on a much, much larger scale. In the ES, the pattern was only about 2 weeks worth of price action. This pattern is going back nearly a year. All right. This high was made September of 2023. So this is a massive descending triangle chart pattern right now. Again, we just mentioned this pattern in the ES. This one's just much bigger. We got 2 touches on this bottom trend line. Move that up just a little bit. A couple touches on the bottom trend line and about 4 touches on this upper trend line. What's that saying? It's saying buying pressure is decreasing while we're rallying, and you can see the volume increasing as we break. This is what you want to see with this pattern. It means buyers are drying up, and when sellers sense that, they step in, and they step in heavily. So again, this is typically a bearish price pattern, chart pattern, I should say. So if we were looking for a breakout, we'd look to see a breakout to the downside. I'm going to zoom into the last couple weeks of price action here. So for the last 2 months, we've seriously just been drifting sideways. This has been a range trader's delight, no doubt about it. Any skilled range trader should be raking in the dough trading crude oil for the last month and a half. Our weekly kickoff levels really haven't changed that much the last couple of weeks. And price has been holding true to this range. 71.40 weekly kickoff high, 66.90 weekly kickoff low. In the December contract, our weekly kickoff high was 71.20. So not a whole lot of change in those weekly kickoff levels. I'll show the 4-hour chart real quick. I was showing this yesterday. Just a perfect sideways range. You could be playing both sides of this range and be doing very, very nicely. We got a little test of it up here. Was that last Friday? Before coming back mid-range again. Might get another little test. Well, let's take a look at the 30-minute before we go too deep into the woods there. Here are our last couple days of trading activity on the 30-minute chart. Most recent test was the upper end of this range was on Friday. This move just about 71. The high was 71.02. Then we spent the majority of this week so far trading lower. It's hard to see with this volume profile right here down on the bottom. See what I'm looking at here. It's just yesterday was just a textbook V-shape bounce off the lows. 68.81 V-shape recovery. And we got continuation overnight. Looking at overnight price action, overnight inventory is long going into the open. We are opening with a gap, so gap rules do apply today in crude oil. What are gap rules? Gap rules tell us that if price does not come back to close that gap or retest, refill that gap within a timely manner, then we look for opportunities in the direction of the gap. So quick look at volume and open interest before we move on to gold. We are trading the February contract in crude oil. Open interest is up 11,300 yesterday. Traded about 280,000 contracts. So strong little pop off of this low at 28 or 68.81 yesterday. Gapping higher. Regular trading hours for crude oil is now opened at 8 o'clock a.m. Central Time. Overnight inventory long again. Look for opportunities in the direction of the gap if we don't come back down. Our gap fill is going to be right around here at 69.78. Call it 69.80 just to be safe. All right, couple of upside targets. If we do not return to fill the gap, couple of upside targets I'm looking at. We have a naked point of control here at 70.81 and our weekly kickoff high after that up at 71.40. So a couple of levels to watch on the upside. If we do return to trade back inside range, inside value from yesterday, if we start accepting prices back inside yesterday's range, then I'll look for a test of yesterday's value area low going back down to 69.03. Yesterday's volume point of control, 69.18. Those levels are all marked on your Topstep daily levels indicator on the Topstep X platform. Make sure you check them out. They're also pinned to the top of the chat. All right. Gold. Same with crude oil. Our weekly kickoff levels haven't changed that much in gold the last few weeks, and we've been holding pretty true to that range. Weekly kickoff high, 27.56. Weekly kickoff low, 26.39. We got this nice Dolby Dorito here. I talked about this on Monday. I drew this earlier this week. We're really starting to close in on the apex here, too. We're getting closer and closer, just grinding sideways. Hard to say which direction this breakout will happen in. But we have spent more time on the lower end of this range than the higher end. Every rally just kind of gets slapped right back. Every time we pop, it gets beaten back down. You can see here we had 1, 2, 3, 4, 5 days of rallies. Took more than half of it out in one single red day.
Damn.
Yeah, and we're just hanging out on the bottom end of that range right now. We tried to test weekly kickoff low yesterday, got real close. Didn't quite hit it. Open interest, volume and open interest in gold. What did we do? 347,000 in open interest. That's a decrease of 3,500. Traded about 147,000 contracts yesterday. So a little decrease in open interest on that slight down day. We're trading a little lower this morning. Let's take a look at the 30-minute chart.
We got 5 minutes, JD.
Oh, we got 2 minutes. We got to get out of here.
2 minutes. Oh, I got 2 minutes. See Tim B in the green room. What's up, Tim B? I see you there.
Be real quick here. Here's your 30-minute chart. last few days of price action. Yesterday just looked like we were going to make a run at weekly kickoff low, like I said, 26.39, but stopped just a bit short. Overnight inventory was pretty flat, pretty balanced. It looked pretty choppy overnight. We're opening inside range, inside value from yesterday. So what I want to see is, well, it looked like we were going to open inside range, but outside value. In that case, if we were accepting of higher prices, it looked like we could have been accepting of higher prices, but now we're trading back inside value. So what we do is we sit and we wait for better trade locations. Move back down to our lower end, our value area low, which is 26.48. And then maybe we'll see some selling pressure below there. See some shorts piling below yesterday's low, or possibly just a little liquidity grab below yesterday's low ahead of the Fed announcement. Either way, I'm going to stop. I'm going to wait, be patient, and look for better trade locations in gold this morning while we're still trading inside value from yesterday.
Yes.
All right, guys. There
Good
was
job,
your
JD.
analysis.
Good job, JD. We did all right for our first opening call together. Anyways, we got fast markets coming up next. We got, Jared J. Jared J lost his 5 funded account and is back in a trading account. He took 10 trades with 70% win rate and locked in $4,800. Go figure. We'll talk to Jared J and see how that went. And then we got Tim B. I see him in the green room making his debut on fast markets. Join us in the past on Power Players. He's been maintaining the same XFA since July. On Monday, he locked in $649 winner. And yesterday just took a $24 loss. So we'll touch base with him coming up next. We got fast markets. I see MP in the house. Who else we got to join us? Yes. More to come. Anyways, this is TopstepTV Fed Day. Fast markets coming up. Let's go. We are live and we are open. Welcome everybody to TopstepTV. This is Fast Markets. Get your Fed Day in the gauge. We are open. Everything's going fast and furious right now. We got Jared in the house. We got Tim B making his debut here on Fast markets, let's get right into it. We are selling off in the ES. We've been selling off ever since those 7:30 a.m. central numbers with housing starts, mortgage applications as well. We're starting to see some buyers stepping in here now in the NASDAQ. Last trade, 22,300. Let's get right into it. Tim B, welcome to you making your Fast Markets debut. What are we looking at today?
What's up, y'all? I am looking at MNQ as always. That's been my bread and butter here for a while now, so I'm just watching that. And I've actually also in the last couple weeks started to trade the Russell. I'm working on passing a combine, trading the Russell, so I've been tracking that too.
All right, we'll keep an eye on that MNQ. Jared, talk to us. Give us an update since we saw you last. Saw you live accounts put on ice for the time being. Back to the combine. What do you think?
Yep, back to the combine, back to the grind. Lost the live yesterday.
Did you?
I did. And
You know what? That's fine.
I'm going to talk more about it later. There's definitely some things to learn from that. I'm excited to get back in. Yeah.
Well, Dre, what was his highest rank? I know yesterday he's 529.
Jared, what was your highest rank? You were in the double digits at one point. I do believe.
Yeah, it was.
Bio.
Yeah.
High 16th. 16th. This is back in the summer. He was as high as 16th in the summer.
Yep.
So,
guys, trading is hard. Trading is hard to hold an account for a long time. I went through a $30,000 trading. Let's get in the markets, but we'll talk about this one because there are many people out there just like you.
I'm trying to scale into a long down here at the 250s, right into it.
JD's gonna be executing
to be
the
very
house account.
Specific if possible. I really want to try the 225. I don't know if I'll get it, but that's what I'm trying for.
225s. Why do you like that? What's down there? What's the 225 that you like?
So on the 15-minute chart, we have this long wick from the open last night, and that 225 is 50% between the first green bar and the bottom of that wick.
All right, good. Got a rhyme. Got a reason.
I'm actually about to get short here. My system is about to get me short.
The system says get short. Dueling opinions. I like it. What's your system? You're talking about the NASDAQ, right, Tim?
Yeah, MNQ. Yep. Let's see here. All right, so I am short from 254 quarter.
Man, are we going to compete against each other today, or are we going to?
We might be, man. It might be.
This might be rough. We might know why I lost my live account.
Get out. I like this though. I kind of like this. Let's just get out of the way. Let him do it. Let us know if you guys do take a position.
So I went long there. I'm long at 255.25 with a stop at 243. So if it takes me out, then I will wait for a lower chance. The reason why I went ahead and went long there at that level was because there's a gamma level at 250.25.
Long from 22,255 and a quarter. What's your stop there, Jared?
243.25. Thank
you. How many times you long? Thank you.
One.
It needs our discretion on that. Tim B let us know if you do take that short.
Out.
I just got out of 2/3 of my position there. Just a little quick scalp headed towards target 3 at 229.
Nice.
Closing in on it.
Moving fast and furious.
Right, so then I'll be patient and go for my original target for a long at 225.75.
225s.
Here we go. Boom. I'm out.
I'm in.
Wow, out and in. I love this. Making money to the downside. Tim B, please update your P&L when you get a chance. Now, Jared is long. This is fun.
Jab.
I'm just trading micros again today. Trying to keep the XFA alive. So I'm up 89.28.
Start jab. Up 89. And Jared, you are long from 225.
Yeah. Yep. Now I was also long from oil, but right before the open, I'm up in 110 in that in profit, but kind of watching it to see if I need to close that because I'm short oil right now at 70.38.
50-50.
MP's gonna love looking at my P&L because it's been jab, jab, jab for the last like 3 months. Talking about process over profits. My P&L has just been going dead sideways for like
That's right.
2 or 3 months.
It's better than that's a winning trade, is what we like to call it. Dead sideways is scratching. And if you're scratching, that means your head's above water. That means you're still seeing it, and you're just not seizing it. And
so I'm actually about to get short at the overnight low break actually as well. If we get there, 205.50, I'm gonna get short. Just another quick scalp to the downside. It's part of my system I trade every day.
Tim is beating me up against
these guys are ready
to right here.
That day, man. I like this.
It's just the system, my man. It's just like, you know.
Well, we got you guys both on here so we could keep fading each other, and somebody would come out a winner at the end of the day. That's what we do.
That's right.
We're new strategy now.
That's what they call hedging, I believe. Yeah.
There's definitely liquidity down for you.
Yes, there is.
Right. Sometimes
I'm getting too warm.
Sometimes the overnight range
I figured.
Sometimes I get smoked on it, but we'll see what happens today.
Looking to take a short at 205. Jared is long from 225 in the NASDAQ. Again, this is FOMC day. Make sure you stay tuned. Wall to wall cover starting at 1 p.m. Central. Last trade in the NASDAQ, 22,228.
And guys, just so we know, Hoag is still here with us. You don't have to worry.
Oh, he does work
drinking this
like that,
so we can trigger the Santa Claus rally today.
Well, he is leaning into the look very much so. So I think he's actually working at the mall right now. Is that what he's doing, Dre?
Kids on his lap? I don't know. We won't go there. He's got to
pay for those combines somehow.
Absolutely. Look at the S&P's last trade, 61.21. Half low of the day, 61.18 there. Hey, at the top of the chat, you got Topstep daily levels. Make sure you have those open somewhere on your screen, or you have them overlaid on your charts, like MP will. But we'll be referencing those. Yeah, Hoag's fine. Just taking a day off, a couple days off, getting some rest in, going into the new year. MP, I want to talk about how we started off 2024. 2024, that January was a tough trade for us. I remember January? We put us, actually, December of 23 put us in the hole, and we found ourselves just chasing all of January 2024. So let's kind of talk about how to set yourself up going into the next year, into the new year, not getting too crazy with the last 2 weeks of December. Again, this is the last full trading week of the year.
Good point. Oh my gosh. Who here, if you're not having a position, or if you're sitting on your hands in chat, who here filled out we did it last year, and I think I don't know if they followed up the new year, 2024 trading goals. Your goals for 2024.
We did those so long ago. Oh my gosh, I forgot about those.
Well, I know we should. Yes, we should lots to do this year. Higher priority items came up to then follow up on that. The data is there, and we can say, "Did you accomplish this?" We can just.
That's a great callback, Michael.
If you remember what yours was, share it and tell us if you hit it or not. If you remember what you filled out at the beginning of this year and said, "Hey, I'm looking to do this by the end of the year. This is what I'm looking to be."
I think mine was like being a 50 lot default trader or something. Something like that.
I just find a Lambo to sit on and take a picture and post it on the internet.
There's plenty of those out there.
Also, what was their plan? They put in a goal, but what was their plan? Because a goal without a plan is no goal at all.
Correct.
All right, Jared.
And without a fishing pole is.
What is? Here we go. Finish that one.
I don't know. Is a guy who forgot his fishing pole.
All right. So, you're not going to be catching many fish unless you go noodling. Anyways, 22,250 last trade. Jared is long from 225. Jared, where are you looking to take this thing to?
I wanted to retest the overnight high.
Ooh, okay.
Yeah, for overnight high.
Yeah, so at least back my overnight high, which ends at 5 a.m. Sorry. So, which I have at 375.50.
Oh, okay. Nice. What makes you
so the story today is Jared's on a combine, Tim's on an XFA, We got some questions in there. Who's trading what? Always got to know. We're trading. Jared would talk about his setbacks. He was talking about them a bit when I was on with him this week. That will be a good learning experience for all. It's also great to do that in front of everybody. It's almost like getting up on stage.
There's
and saying,
not a feeling not a better feeling than doing that live in front of everybody.
Well, I don't know about that, but yeah, it hits home. How about that?
I commend you for being back on here today, man. That's good.
Thanks.
I like that.
Is that why you ditched out? Is that why you ducked out? You busted out when we were on?
Oh, no. I had a prior appointment that I had to take for 30 minutes. Sorry. That I couldn't get out of. No. So Tim, on my overnight high thing, so I take the overnight high range. I start calculating it from the open at 5 p.m. Central to 5 a.m. Central. And the reason being is that over a period, I went and tested several weeks. And what I found was that if price 5 a.m. was just had a good stat around it. So if price traded back below that after that 5 a.m. high, I could kind of tell what was going on. I know a lot of people take it to 7 or 8 a.m. But if, for example, on my screen, let's see if I can draw this real quick to demonstrate what I'm thinking. Come on, where's my pen? But if price traded up over that 5 a.m. high and then came back and visited it and then continued on, for me, that rule is no shorts, because at this point, prices are always going to be higher. Same thing on the 5 p.m. low. Price came down, did not break through the 5 p.m. low. So to me, statistically, we are not going to see lower prices until maybe FOMC rate today. But for the rest of today, we're either going to have an inside day, or if we get above this 5 a.m. high, then we will see a breakout. And it's one of the things is 75% of the time that 5 a.m. worked best for me. I've tried a couple of the 7 a.m.s and sometimes they're better. It might be a discretionary thing. You look at it. But in this case, we can see that price hit this level, this 5 a.m. level, tried several times and to me rejected it. So at this point, we are not going to see higher prices. That's going to be a wall for us.
Okay. You're long from 225. Last trade 265. So about 40 points
and
in the money
everything
right now.
In markets, it works 100% of the time, 60% of the time.
That's right. That's right, Yogi Berra. I like that. All right. Upper left-hand corner of the screen, you'll see the hashtag Fast Markets. Use the hashtag Fast Markets or hashtag Power Hour. Hit us up at TopstepTV. On the
you got long 225s. So you took what, about 10 point heat? About 10 points on that?
Yeah.
Am I reading? That's a good. That's a nice pivot.
Get in there.
I'm looking at that. That's carving up the corner of the market right there. It's really nice.
And for some reason, also the 7 or the 15-minute range, sometimes the market tends to do a 15-minute time frame is just my bread and butter. Sometimes maybe there's a different participant and it seems like a 30 minutes working a little better, but pretty much my 15-minute is just where I go.
The 15-minute is solid, man. It seems like the price action that you see on the 15 is pretty, you can very much factor it in. It's pretty reliable.
I've always liked 15-minute charts.
Yeah, 15 is good.
If I had to pick a time frame, I would be like, hey, you got to choose that on the island the rest of your life and trade with. And that would be it.
So random. I love it.
That would be
Tim,
awesome.
Same XFA since July. How do you do it? How do you maintain that consistency? I know you said your P&L is going sideways, but is this just managing your downside ultimately?
Yeah, dude. So what's funny is I knew I was going to probably be coming on here this week, and last week my XFA was on life support. I was like, oh man, I really don't want to, kind of like Jared. I was like, I don't want to get on there and lose my XFA on camera. So he's much braver than I am.
It's real.
But yeah, man, it's just been I've been trading my strategy, trading my system, and just sticking to it religiously. and it's mechanical. So like I take my trades regardless of whether I think it's a good idea or not. There are actually many times with my system where I'll be trading it and I'm like, I don't like this trade. I hate this. I do not want to take this trade right now because I don't think it's going to work.
You still have to journal that. I used to journal that.
Hard.
Tim. I used to just put that stream of consciousness while I've always have a notepad in front of me, so like pen, and then I just like, I'm mad. This sucks. I should take the trade off right now. Instead of actually doing it, and then let the trade play out to where I had my stop and my target, and then at the end of all that day, you go back and read, and then at the end of that stream of consciousness, you have your target and your stop in there, and then whatever it plays out there, you write that in your journal. Hey, that's page number, whatever that page is. The next trade is another, and then you go through and just read each one of those stream of consciousness. How are you feeling? And then you can start to get your pulse of your emotional awareness. Per trade when you reflect at the end of the day.
Yep,
that's kind of those are the things that help me.
Michael, one thing that I've been thinking more in terms of is football, and I know we got combines, and that's where that came from, right?
Yes,
okay.
Sir.
So I've been thinking a lot more, and I've been watching, obviously Mahomes more lately since he started, and it's kind of I've been finding so many parallels between him and trading. And so I've also started changing my terminology and using the term, for example, playbook. So what is your playbook for this chart setup? What is your playbook for, if price trades below the RTH open, and started putting it into playbooks. And then why that matters, I think, is because then I can practice that playbook. And we know, like
MP's language.
If you got a wide receiver and you tell him go run a hook route, that's our playbook, right? Andy Reid says, "I got you to run a play."
But you have to be the quarterback and be able to read the defense too. Hook pattern's coming up, and he's going to do that, and he still has to do that. But then you got to read the defense and then know if that's still the right call to look that direction and make that play or check down to whatever.
Exactly. And what happens when you get a wide receiver that runs out and then just does some squiggle route? And everybody's like, what was that? And he goes like, I don't know. I just wanted to try something new. I'm like, well, guess what? He's not going to get the ball, right? It's not going to work. And that's what we do. We see that in trading all the time. Well, I saw this pattern. I thought maybe it would work. I'm like, it's not going to work.
Is it a part of your playbook? Did you ad-lib it? You don't go ad-libbing shit in the games when the clock's on. You do that in practice when you're effing around.
That's exactly right.
The playbook that they have. Now, just think about it. Starting quarter, like, well, I'm going to try to do trading as easy as possible. It's not easy. Period. Okay, it's not easy. Like Mahomes, any quarterback, their playbook, they know that like the back of their hand. They know it probably better than anybody, and they can switch, and then they have to read the defense. Then they have to have situational awareness of the time and where they need to put the ball and all that kind of stuff. Their goals for what they're trying to do, drive the ball. I'm just throwing Hail Marys all the time. We got to drive the ball. How are we going to drive the ball? Blah, blah, blah. So they have the game plan as a whole, as a team. That would be where you say your trading plan. And it just, if you go back into all that, and then you can go 4 quarters in a game, 4 weeks in a month, 4 quarters in a year, and then you get to your Super Bowl at the end of the year. Right now, did I hit my Super Bowl? So back into all that, guys. It's really, really fun to do that. And say, hey, what's your Super Bowl next year? Just like we talked about at the beginning of January, we did that. Hey, what's your goals for the year? What's your Super Bowl?
Yeah.
What is it? Some people are like, I'm going to win it. Well, you just got in the league, buddy. Like
make the playoffs.
Why don't you
make the playoffs first?
Yeah. How about shoot for the playoffs? Yeah. So if you back into that, you start to make this much more attainable in this professional sport. We are athletes of the marketplace. It starts to become totally attainable. And you may not be a Tom Brady. Look, there's not very many Tom Bradys at all, period. We all know that. But you may be a guy that is a long snapper. And it's, $50,000 a year guy. A long snapper. Call it like if you're playing in this whole analogy game with me. A long snapper, trader that makes $50,000 a year. Maybe that's a long snapper. Yeah, I don't know. Put it that way.
Nope.
Whatever works for you is what you're supposed to do, and I love the playbook.
Oh, man.
Like
Jared,
going back to what happened there at the Open, Tim said,
yeah, I know.
I'm taking my strategy says go short here at the bottom, and I went long. Neither one of us were wrong. Even
Exactly.
it didn't matter the outcome of it, right? Because what would have been wrong is if we would have changed our strategy based on something that we hadn't tested, something that was not part of our playbook.
Exactly.
Yeah. Hey, Jared, John Jones says something pretty funny here. Can you imagine the O-line ad-libbing? No, the O-line.
Oh boy.
You're like, dude, good luck being a quarterback. Your body part is broken.
Kelsey being the center line for Eagles, right? And like, hey, I think I'm just going to go out for a reception now. What? No.
Quarterback gets killed.
Your guy over there.
Yeah.
Having a playbook, having a plan, and then the market's going to throw you whatever, and you got to be ready. And then the more screen time you get, hey, he's like we're talking about Caleb Williams, and if anybody starts talking about sports, you're missing the forest through the trees. But Caleb Williams,
John Galt in the chat just said
he's a freshman. Did he? Yeah. Well, okay. There you go. Missing the forest through the trees. Trade your trade, but there's a story here of how people can rise up and get to. Some people takes a little while. New to the league, new to trading. Caleb Williams, the whole thing, or Mahomes won a bunch of Super Bowls. Dakota's on the top of our thing. He's been holding rank all year. You could say, okay, he's kind of like the all-star of the Topstep trading team. We're all here. We're all seeing the same markets. We're all trading the same thing. And you're going to see that big board rank go up and down. People come on it. You were double digits, which is incredible. And then you move down it. I see that mindset that you have moving. You're going to be back up on it. So we'll see you again on the big board for sure, in my opinion.
Right.
So
never done until you're done.
So one thing here, Tim, see what you think about this. So I was on the 15, I was like, okay, what's happening here? It's kind of stuck, right? But does that mean we're going farther down or not? So then drop down to 5. Okay, maybe something right here at the 251 level, drop down to a 2. And what we have is green bars up with this red bar right in the middle. And I might have missed the entry to add on right here. And what I'll do is I'll take the tail of that red bar and the difference to the next green bar. See if I can change the color here so it shows up. Let's just do this. All right. So you take that and try to get in somewhere in the tail of that red bar. Now, maybe I missed it already, but that might have been a nice spot to add on to that trade.
I love taking trades in the middle of a big wick like that. That's part of some of my strategies that I do as well.
Sweet.
Yeah.
All right.
Really? Got a couple trading buddies here, MP. I like it. I know.
You guys got something that you like together. I got a 50-lot clip size ready to queue up.
Ooh.
Well,
I can give myself a present.
100%, Michael. Give yourself a present. Buy yourself that Ferrari with the house account today. All right, let's get back to the market's last trade in the Dow. Again, Dow down 9 days in a row. Will it be a 10th day today? We'll find out. Again, we got Jerome Powell and the Fed coming out later today at 1 p.m. Central. Let's take a look at the gold last trade, 26.55, about $3 off the lows there. Looking at crude, a range trader's delight. You heard JD talking about it in opening. Oh, look at that. NASDAQ go. Well done, Jared. I'll get right back to you. Last trade in crude oil, $70.36 a barrel. Right now, Jared, someone in the chat, I believe it's Travis, asking, when do you trail your stop? You were long. You were about 60 points in the money. When do you trail your stop, Jared?
Yeah. So now I would be comfortable moving my stop. So should have added at the blue box, but I was yakking away about football.
That's all right. We were talking sports. Made no
playbook.
You missed the forest. You missed the forest talking about the trees.
So that was the entry. Green bars out of there. We traded, the next bar traded above the red bar and closed. And now we're working on the third bar. So at this point, I could move my stop up to 245.75, which is below this last red bar.
Okay, so I've seen a pattern being on with you. You get these 50 handle in the money trades.
Yeah,
quite a bit. quite a bit, 50 plus. I mean, you're at 70 now ish, give or take.
Yeah, we're still cooking here.
Those are big moves to try to get out of days. I'm just saying, like,
Yeah. So what will happen on this, Michael, is I drop down to a smaller time frame and I will blow away my big days. So when I trade the 15-minute charts, I have really good days and I catch bigger swings and fewer trades. And I will go on with a 3 or 5 lot generally. And you can look at like the combine that I passed yesterday. So and I opened it yesterday. So I opened a combine yesterday, took a trade in the afternoon after I lost my live, and then took another trade at the open last night. And it was a 150K combine. And I did I did a 4,700 day and then another 4,700 day back to back. One trade each time, I think. 15-minute chart. So like that's my strategy and it's buttoned down pretty tight. What'll happen is I'll be feeling pretty good or not feeling good, and I will try to scale down in size, but I will drop down to a lower time frame. And it usually happens after a day, like maybe a trend day, where I'm like, why in the world could I not see that was a trend day? I need something to help me realize that there was not going to be a reversal. And so I'll like test something. So I love trying things. It's just my whole life I've always been super curious. In trading, it's helped me, but it's also killing me. So like I tried stuff with a 100 tick chart. I tried stuff with, moving averages, all that kind of stuff. And I'll think I'm working and it's not consistent enough. And I'll get, like some kind of good results, maybe 50% good results. And so then I'll try it and then it just blows me up.
Okay.
It's trading. That's trading. Hey, keep an eye on tilt really
I'm
quick.
actually
We got
looking at
73.
taking a little.
Go ahead, Tim.
Sorry.
Nope,
I'm actually
Tim,
looking
go
at
ahead.
taking
You're
a little
trading.
long on the Russell here in my combine.
Tilt's getting pretty
23.69.
heavy long too.
Yes,
Sorry, Tim, go ahead.
Oh no, you're good.
Tilt's long, 73% long in the ES
for an entry. I'm gonna get in with 14 micros.
Nice.
14 micros.
So I don't know, because I've been exploring this idea, and this is actually something that I think would be interesting to talk about is controlling risk. Because actually, I'm actually kind of looking into next year and not even considering the minis at all, exclusively trading micros, for the sake of being able to control my risk better. Because with micros, you can get a lot more granular with what your risk parameters are based on like the size of your stop. So once if I get into this trade, I'll walk through what I'm thinking here after I take this trade, so I can focus on the trade here.
But please do.
Listen when you get in.
I'm kind of like, why would you go for minis or micro? Like, just stick with one. Either be that's what I like. So sure. I do like that. Yeah. Focus on one because they're both separate markets. When people are like, well, it's the NASDAQ, one's the E-mini, one's the micros. They're not trading at the same price. They will every now and then cross over and they'll be very close always. But that's what we did in the trading pit. I traded in the Dow pit, but then I also had the Dow minis. And everything was always like, those are two separate markets. There's bitter, like, of course there's, market makers on either side and they're arbing and doing all that kind of stuff. Yeah, go ahead.
I have a question about that. So most people on here trade minis, but there's like the big contract too, right? Which is like one step above the minis, or isn't there?
Those no longer exist.
No more bigs.
Oh, no longer exist.
No more bigs. Johnny Hogan. Yes. What Johnny Hogan used to trade the bigs S&P, which means for five of these S&Ps, when you put a one lot on, times that by 5, and that's a big in the pit. So what's that? It was $250. It was $250 a point. $250 a point.
Dude. Yeah, I know. Yeah, I know, dude.
61.21 to 61.22 is $250 for one lot. Still called the one lot. but it was a big.
78% long in the ES, 73% long in the NASDAQ. Looking until this is a really good discussion going on right now, guys. This is awesome stuff. But yeah, we're looking at a heavy tilt in the ES. Long 78% long from average price of 61.26. They're about 5 points in the money right now. Last trade 61.30 in the ES. NASDAQ chugging along to the upside here. Jared is long from 22,225. Last trade 285. 60 points in the money right there. Let's keep an eye on this tilt, Michael. Now up to 79% in the ES, 74% in the NASDAQ. Tim's looking to take a short in the Russie. Keep us posted on that.
Oh, sorry. Did I say short? I meant to say long. If I said short, I meant to say
No,
long.
you said long.
You said long. I misheard you. My bad.
Okay.
Come on, Andre.
Yeah, you got me. There's a lot of things going on right now.
Sometimes I'll say the opposite of what I mean to say, and yeah, so
it only cost you $1,000.
Yeah, no, yeah, it's no big deal. It's fine.
81% long in the ES. 81%. Heaviest tilt we've seen all week. Yeah. Clip that thing.
Yeah, so I guess before this trade triggers, we'll see what happens here, because there's a good chance that we might just kind of, like what Jared was saying, might just kind of chop around in this range until FOMC later today. But what I'm seeing here is I've got actually, let me see if I can put this on my
Lido. Strength of Celsius. I am
I'll
charged
show you
up
here in a second.
Chat.
But I'm seeing so I also, for my Russell strategy, I've got the pit pivots on here, but I also have like the regular ones that are set from like the total price action for the total day. But then I also have pivots set on here that are set just from the New York session. So like just regular trading hours. And so there's a regular trading hour pivot level at 2369.8 on my charts here. Let me see if I can get that over here so you guys can see.
Russell 2373.
Andre, you know the Dow.
So,
go ahead.
Down 9 days in a row.
Since 1970, before I was born. I can start saying that now. Before I was born. Yeah, I've had that since before I was born. Something. It's all going to shit. Just 9 days in a row, Grandpa. Okay. All right.
Yeah. Okay. What were you guys finish your thought? What were you gonna say?
Yeah. So if you guys can see my screen here, perfect. Yeah. So I've got these new lines are being drawn. This is a
we kept going
edgeful. This is a edgeful.
Just talk over him, Tim. It's okay. Just keep going.
Yeah, Michael. We need to zip it, Michael. You and I. Go ahead, Tim. Please.
Oh, God, we're talking. Turn your hearing aid on.
I know. I got it.
But yeah, so there's a R2 level here. This is based on the regular trading hours for the pivots. So if I take this trade here, if it hits it, I'm going to get long right there. And so what I do is I base my initial stop on the ATR, which is at 3.5 right now. So I do 2 times ATR, and then I sequentially like bring my stop in as the trade progresses. So entry candle is 2 ATR away, and then the next candle I'll move it up to 1 ATR from the opening print of the next candle, and then on the third candle I'll start trailing it bar by bar. So we'll see if this works here.
See that? Yeah, let's see that in real time. Interesting.
I like this.
All right, coming up to 22,300 now in the NASDAQ. Tim, let us know if you're getting that Russell trade. Look at the ES. We got that heavy, long.
Hey, Dre, is NVIDIA and NVIDIA in the Dow?
Go ahead.
No. I'm now annoying right now. I'm zipping it.
Yeah, there's a slight delay, and I was a little slow in jumping in before you started, and so I cut you off.
80% long. 80% long in tilt right now, guys. It's a pretty big number. It's tilty. 80% of all open positions here at Topstep are long. 80% of all open positions in the sim environment.
All right, I am long Russell.
Okay, 14 times.
I'm long Russell. 69.8.
369.8.
I got my stop at 63.2.
All right, long Russell. How many
And
times,
so
Tim?
my target, say again.
How many times are you long? 14. I believe you said 14 micro.
14 micros. 14 micros, yeah.
Thank you.
Yeah. And my target is going to be 76.4.
Upside target 76.4. Boy, you are very precise with these prices.
It's
I like it. No,
doing it this way is the only way I've found that I can like consistently do this, because when I try to like
right on.
use kind of like discretion, I'm like, I think it should be like in this zone today. Like, nah, I need to be like,
Yeah.
razor sharp.
Robotic.
With my... Yeah, exactly.
The
like,
ball
that's
kind of went through the arms. Like, I mean, it went outside, but we'll call it a 2 point.
Like the sports analogies.
One
Michael,
rep
keep
says
an eye
it
on
went through it. The other rep says it didn't. Yeah.
All right.
It lightened up 77% a bit, and it when it rallied. So that was interesting.
Yeah. So
NASDAQ and S&P.
VPOC on the NASDAQ migrated up to 290. No, sorry.
VPOC.
Point of control. What did I say? No.
Point of control, same
Point
thing.
of control. Yep. Migrated to 290. So a lot of volume sitting right up here.
By the way, I'm trading a 5-minute chart on the Russell, just so everybody knows. In case you're wondering what I'm looking
Good job.
at.
Who's on the overlays back there? Whoever's on the board, just really keeping up. I think it's Gabe.
Yeah, who's ever on the polls is good too. Like, should we do another tutorial with Gabe? Yeah, Dolby time, killing it.
Dolby time. Charles Chapman in the chat says RTY is a buy. Go ahead, Jared.
Charles.
I don't like that the NASDAQ is having trouble getting through this 300 level. There is on the 5-minute chart, there is in the downtrend, there was one green candle I have highlighted here, and it's struggling. So I really wish I could peel off and leave a runner. But since I only jumped on with one contract, never take just one contract trades.
Reason.
Okay, tell us why.
This exact reason.
I call it dipping your toe in the water.
Okay, so here's my playbook on this. If you feel like your lack of conviction is so strong that you can only put one contract on, then there's two things. Either one, you're trading on too big of it, so you maybe need to go to the micros in this case so you can trade a proper size, or you are taking a risky trade that you have a low probability of winning. And it's not worth it then.
Okay. I like it. That's a part of your playbook. I like it.
Man, we are clicking today. I like this.
No, if you're doing it just to learn to, like, feel like you got a little skin in the game to say, hey, I'm going to buy here just because I want to, feel it. That's different. But when you're actually trading.
I've been there.
Yep.
Definitely been there. I want to feel
That's why
something.
they say when you first start trading, just get in with one, get out with one, just get in with one, so you get the feel. Or when you first started in the morning, when I walked in the pits, I would put a one lot on just to get a feel for the markets. Yeah.
The old dip a toe
trade. Here's my problem also with that, though, is generally my first trade is my good trade because I'm waiting for an entry and I'm usually trading a bigger range. It's when I keep going like the third or fifth trade. And I think a couple things. One, usually maybe my confidence, it grew too much, or two, I started getting tired, or it's in the middle of the range. And so I start trying and not waiting for, it's a harder setup. All of that you got to understand. You're like, do you need the sample trade? Okay, then know that you need a sample trade versus statistically, I know generally my first one or two trades are my best trades. So those need to be, they need size.
I like that because the first one or two being your best trade means in my history that you were like waiting for either your high probability setup or high probability trade. I always call them the high prob trades. Like, wait for my high probability. Just stay patient, stay patient, stay patient, and then boom. So your first two come out of the gate are strong.
Yep.
All right, so I just moved my stop up here to 65.7 on the Russell.
All right,
65.7. So I have my entry bar.
You were just talking about
my
this.
entry bar here. So now on the second bar, I'm trailing it up to just one ATR below the open of this candle, which is at 65.7.
And you moved your stop to what again?
2365.7.
Russell.
Gotcha.
Okay, cool. All right, like Jared said, we are hovering around these 22,300 level in the NASDAQ. I want to throw it to JD. We got some P&Ls to come through. We got a lot happening today on TopstepTV. Again, we got FOMC day. Some of the chat said, when is FOMC? 1 p.m. Central Time, 2 p.m. New York time. The rate announcement, then we got a prepared statement, then we'll have the Q&A and the press conference with Jerome Powell this afternoon. Let's go to JD. JD, hit us with some P&Ls, my man.
What's up? Yeah, we mentioned it during opening call this morning. David Green's going to be here for group coaching today, and we're going to roll right into the Fed announcement from 12:30 until 2 o'clock. We'll be on.
I love David Green.
Straight through. David Green's awesome. He's a great trader, great educator. He's a good guy to have around for sure. All right, yesterday's best top 5 live funded P&Ls. Here we go. We got Pinson. Number 27 on the big board, mixing it up a bit. Made 2,400 trading the ES, 14 grand trading gold, and $40 trading copper for a total of $16,485 in profits for Pinson. Pinson's been around for a while. Scott K, number 20 on the big board, 7,378 trading the NASDAQ. Joseph L, number 11 on the big board, 6,696 trading the NASDAQ also. Then we've got Tushar, number 165, moving up on the big board. Awesome. He mixed it up a little bit too. 5 grand trade in the NASDAQ. Lost $140 trading micro NASDAQ. Lost about $230 trading micro Russell. Made $250 trading the Russell, mini Russell. Lost $214 trading MNQ. Anyway, $4,716 in total profits for Tushar yesterday. Nice job. And then Anthony, yes, we met him. Got a nice shout out on the shoulder tap last week. We were talking about him quite a bit. Number 30 on the big board right now. Picked up $4,564 yesterday. About $550 trading the MNQ and $4,000 trading the NQ. 4 top 30 traders on that list right there. And another one moving up the list real fast.
That's what we like to see.
There are your live funded P&Ls from yesterday.
A lot of ones on the big board, JD. That's awesome. Pinson.
All of them on the big board.
A lot. Yep. Let's get into it. Jared, we're looking to push out of these 300s, try to get in the 310s. I believe. What's your unrealized P&L in this trade, Jared?
1,500.
Nice. See a little bounce in gold here. That's trade 26.52. About $4 off the lows there. Look at gold or crude. I'm saying crude. Last trade is $70.42. $70.42 per barrel. High of the day, $70.58.
Closing my long.
Closing it. All right. When you're flat, please update us with the P&L so we can update the board.
994.
Up 994. Nice job.
Looks like I'm about to get stopped out of my Russell trade here.
Okay.
No.
Exactly.
Been there before.
Every time I stop out, that's what goes to my head.
If I take a short right now, will that make you feel better?
That's teamwork right there.
Only if it works. Only if it works. I might be getting long in the NASDAQ here, actually. Let's see here.
Ooh.
Trying for a short on the NQ here at 312, going 3 contracts.
Turn it up.
312.25.
For short. NQ 312.25. I'll ask why that price after you get in.
Tom Wheeler, you made me laugh on that one.
Why?
Tom Wheeler goes, when we did the big board, we're talking about the big board. I made the big board. I made the big board on the part where it says a majority of traders are not profitable. Oh, we have to have fun. You have to have.
That was pretty good. That's pretty good. Crude numbers in 15 minutes. Thank you. Hoop EIA numbers in 15 minutes.
All right, I'm going to scale into this one because it could be either or. So got a 5-minute green candle right here. The open of that green candle, I was trying to get in just below the open of that. And it didn't quite come up there. So this is where I might not get in, and I don't want to chase it. So 312, going to put a 1 lot on there. But then looking at the current order book, there's quite a bit at the 319, 315 level. So that makes me think I need to be patient. So then I moved my other entry up to 319 because of that, which is the difference between the red candle and the previous green candle. So I got filled at the 320 or 312.25 with the 1 lot. So I'm going to take and drag the stop loss up above the previous green candle. So 321.50. And now I got my stop loss in, and then obviously Topstep X will fill in. If I get filled on the other 3, then it'll update me a stop loss to 4.
You just got 12 quarters?
Yeah.
Hell of a fill.
Yeah, it's a hell of a fill. How many are you short?
1, of course, never enough.
Whatever. I know. Never when it's going your way, you never have enough fun. I know that. It's going against you. There's too many on.
Shout out to Hoag.
It's the best line in the world because it's the exact feeling that you have all the time.
Yep.
It's going against you. You have too many on. You're like, damn it, why did I put a 6 lot on? Should have just had a 3. Should have had nothing. Should not even taken the trade.
Should have been 0.
Should have been 0.
So one more lesson learned out of the live P&L or live account, if we got time for it.
Yes.
So another analogy with football. So lately I've been realizing indicators or things that are in the market, on our charts. A trader needs to learn to understand what they mean, not how they're confirming something for you. So as an example, you got a playbook and you see 2 defenders on Kelsey. Okay. You don't wait to see, are those 2 defenders going to stay on Kelsey? You say 2 defenders are going to be are showing on Kelsey. So we're going to run this play, right? You don't wait for the confirmation because it's too late then. So what I noticed in live is once I started trading in fear, which really almost from the beginning, it happened. And there were several things that caused me to step into that pit. Not necessarily my trades. It was just like the setup. There was several things that just triggered it for me. And I started trading out of, so I was always late. And I noticed lately in Mahomes, for example, he's been throwing either overshooting his players, his receivers, or undershooting. And you can tell he's trying too hard and he's almost waiting for confirmation to get there. And that's what I basically was doing. So indicators aren't necessarily a bad thing in the fact of it's on the chart, but if you wait for confirmation, like let's say price comes down and touches VWAP. Well, it's going to be too late to get in if you wait for the bar to close and then, that did hold. It's too late. It's already, you missed the entry. It's gone. And then you got to take a bad entry. As a professional trader, you say, when price touches VWAP, I get in, if that's your strategy. That's not mine, but I'm just saying as an example. It doesn't matter if it's going to work out or not. That's your strategy. You take it. And if it may work, it may not. And the percentage of that. And I noticed too, once I lost my live account, sadly enough, there's this huge relief that came over me. Like the burden was gone. I slept that night.
Really?
And I think, back to Hoag's analogy about the balancing beam, I got on the very high beam in the live account first time. and freaking out on top of that beam, and basically had to fall off the beam and like, okay, that actually got that done, got that over with. And now we get back in, focus on the strategy. And maybe the third thing out of it is I probably need to take breaks, meaning I can probably trade for 3 months maybe, and then I probably need to take a month off and let my body, my mind recover.
Interesting.
Otherwise, I'm too exhausted. I can't handle it. Trading takes so much mental strength and fortitude. I just don't think we realize it, especially when we've been trading or we're trying to learn our strategy and everything. We're just in there beating ourselves up, and pretty much we're exhausted.
Well, they say take care of your eyes. Good traders take care of their health. I mean, that's a part of that, your mental health and all that kind of stuff. So stepping away. I mean, you got it. Every month or every quarter, you have the roll week, which is now. Like I stopped trading that when I was in the pits. I would never trade the roll. I had one of my worst experiences or losses was during the roll, and I'm like, I'm not doing this. It's choppy, stupid, and it's every 4 times a year. So 4 times a year, I'm going to go on travel something, do something, staycation, or get the hell out of Chicago.
Yeah. No, I think I'm going to probably do that. Like when you're learning and stuff, maybe not so much, you're trying to figure out what your strategy is and stuff. But once, I'm kind of past that now. I'm not really trying to learn a new strategy. I'm just trying to practice my playbooks. I don't need another playbook. I don't need another indicator. I don't need that.
Yep.
I just need to trade my playbook and take breaks and rest and
dial it in. Yep.
Yeah.
I like that, man. So it was a relief, you said. And I want to get to Tim's trade. I want to get to Tim's trade in the Russell really quick because it has bounced back a little bit. You are close to your entry point. I just want to touch on one thing you said, Jared. Jared, you said it was a relief when the live funded account, when that funded account closed. It was a relief, you said.
I think subconsciously I was trying to be a person that had never lost a live account. And there was such a burden to hang on to that and to like prove that I finally made it. And that, just there was some kind of burden of proof on my shoulders to hold on to it, to prove something.
I mean,
more than just
you
money.
Said that because I always just said at the trading combine and just in general, you should come in here, create, develop, and then hone your strategy. So when you get that strategy, that baby with the bathwater, you don't throw it all out and start a new golf swing. Everybody knows how those are very like start over moments. It's finding that core that you already have and working and polishing and working and polishing every freaking day. And then you'll eventually settle in, and that's what you are. You're a long snapper, or you're Tom Brady. Like, where are you? I wasn't a 7-figure-a-year trader. I was a 6-figure-a-year trader. But it took me, like, can I even be a 5-figure-a-year trader? You have to, first get to, can I even be in the league? Can I be in the league? Can I scratch? Can I break even? Like Tim, you're saying, can I do that for 3 months in a row? If I can't do that for 3 months in a row, what the hell am I trying to put a bigger number on that for? If I can't even throw the pass and keep getting picked off, like I'm in arena football now. Now I'm playing flag football. Now I'm watching my kids football. Okay, so
yeah. And it was weird too. Like I even tried. I knew it was a completely mental issue.
Sorry.
On the live account. So I took a day off one time. I traded in a combine a couple times, and I could not shake it. And I don't know if maybe I would have taken a month off or a week off straight and just turned the charts off, tried to walk away from it. I don't even know if I could have shaken it then. It literally is that burden was sitting there, and the fear of I've got to recover.
Yeah, right.
Dude, thanks for being so vulnerable, being transparent here. Not easy for people to do that.
It's funny you say that, Jared, because like in the back of my mind, this whole time of talking about coming on TopstepTV, with my XFA being kind of, because I took some payouts back in August and September, and so obviously my balance got lowered, and so as a result of that, I took my system took a couple of hits in September.
Yep.
And so my XFA balance got down. And so I'm coming on TopstepTV. I'm like, I don't want to lose my opportunity to be on TopstepTV because it's a live funded trader. I got to be live still. So, so I really identify with what you said. So I think it's awesome, man, that you're still going at it and and having that attitude even after having a loss like that. So I think that's great, man.
Good vibes today, man. I like this combo, man. I'm not gonna lie. I really like this combo. You guys, we got some trading buddies here.
Are we the dream team right now? Are we the dream team?
Become best? Did we just become
You're
best
the glass
friends?
half full team. How about that? You're the glass half full team. You made positive vibes. I love it.
Absolutely. Let's get back to this Russell trade, Tim. 23.69.
I'm a proud dad sitting here on the sidelines, Dre, watching these guys.
Yeah, watching your kids playing football. You went from NFL
Watching
to
the
arena, flag football, to Pop Warner football. Watching your kids. That slope was down and to the right.
Actually, MP, in honor of that, I'm gonna throw on my Nebraska Cornhuskers hat.
Man!
Wow! Go Big Red.
What's funny is I'm not even.
Do I know this?
I'm not even a Nebraska Cornhuskers fan. But
I was just gonna
say what?
Yeah, are you a Nebraska? Hold on, you're not from Nebraska? Are you from Nebraska? Yes,
No,
that's a sweet ass hat.
So I'm from Indiana originally, and
That's not.
I was looking for Christmas decorations, and I found this in my closet in my house, and it was my dad's old hat. I don't even know why my dad has this hat, but coming on here today, I was like, well, MP's from Nebraska, so like I gotta wear my Nebraska Cornhuskers.
Love
hat.
it.
It's Christmas colors.
Love it. That's a badass hat. That's vintage.
This is vintage. This is like 80s, like legit 80s.
It's like a fashion thing now in Nebraska. Andre, you're into fashion.
Hey, Dre, what do you think of my shirt? I had it made specifically for the show.
What is it? Believe in? What is it?
Yes.
Shots fired, Michael.
Shots fired. You're not getting into that one.
Yo, Dolby's
wow, just shot over the bow.
Can you say that one more time, Jared? One more time, Jared. I think Dolby's gonna
move your mic. Yeah.
Tim. Oh, baby,
that's an incredible shirt, man. Oh my gosh, I want that.
The chat just went crazy.
Okay, so you all that are on Twitter, you take that screenshot, go post it, and just say we're having some fun at TopstepTV. If you do that, we'll throw your name out there. We're having some fun on TopstepTV. Do that screenshot, tag ICT. I've been wanting to get him on here. I always want to talk to him and say, hey, how's it going? We had emails going. He said he was going to be on, or he would come on, but haven't heard.
Okay, so a couple updates with my trades here. I didn't want to interrupt anybody because we were in some good discussion, but I stopped out of my.
Go for it, Tim.
Russell. Say what?
Where'd you go? Jared, where'd you go? What is going on? Go ahead, Tim, please. Jared's getting crazy over there.
Yeah, so I stopped out of my Russell trade, and actually what I ended up doing while you guys were talking, I actually ended up adding to my position down here because let me go back over to my screen here. And I'm also long the NASDAQ, by the way. I'm long from 295 3/4. And I've got a third of my position on left because I hit my first target. But over here on the Russell, over here on the Russell, you can see, so part of a strategy that I'm starting to develop and use is actually a stat from Edgeful that I got. And it's the consecutive bar data. On the 5-minute chart on the Russell, on average, when a move happens 5 bars consecutively, so there'll be like 5 red bars in a row, then there'll typically be a green bar. So a part of my strategy that I do here is I look for a 5-bar move, and then at the very end of the 5th bar, I get in, and then I target close to the highs of the candle right before it, so the 4th bar, to retrace roughly like a quarter, like half the move.
Mm-hmm.
And so I got long at the bottom here at around 66.7, and then I got out around 69.8. So that was the added leg that I did, and then I got stopped out of my original position on this trail out up here because it wicked the bottom of this candle. So,
awesome. Hey, crude number, EIA crude numbers coming out in 15 seconds. 15 seconds, EIA crude numbers. Go ahead, Tim.
Yeah. That was I was hoping that this would have a nice bounce right here, but it seems like the Russell is just kind of pushing lower. and not really having a lot of buyers come in here. So kind of makes sense. But we are at yesterday's high right now on the Russell, or just above it. So it might still be a good area for a long, but if it breaks through this level with any kind of strength right here, we could see it push a little bit lower. We shall see, though.
Tim, I wonder if you got an order block on the Russell there on the 15-minute at 23.66. I'm not for sure. I'm not the best at those. Yeah.
Well, so something I probably should do and want to do in 2025 is get better educated on order flow and order blocks and looking, like, trading the tape and that kind of thing. Because I know that
yes,
Mike Bellafury from SMB Capital, he's like, you got to learn to trade the tape, like read the tape. You got to learn how to read the tape, and that's something I've never actually done. And so I really want to learn how to do that better next year.
I think you have to at some point. I just don't think you can be consistent. Because in football analogies, reading the tape is they normally have one defender on Kelsey. Today they got two. That's reading the tape. Yep. To me, it's no different. Yep. And so in the market,
what I was saying,
so you got a location for a setup. Okay, now what does the tape look like in that location? Is it really weak, or do the buyers step in that location? Boom, confirmation, because we don't know who's in the market. And if no one's in the market at that location, normally that works. But today there's no big buyer, so the price isn't going to move in that location. So I agree. It takes a ton of time. It takes practice, a lot of screen time to do it. It doesn't change your strategy. Like you had a setup there. It doesn't change that. It just, you use it to understand what today looks like. And I put it off a very long time, and I finally stepped in and did it, and it's extremely worth it.
Yeah, I can imagine, because I can definitely see the benefits. Like I've dabbled with looking at Bookmap and stuff, and I just know that it's just like reading charts, right? You gotta get some screen time. You just gotta get a bunch of time in front of it, and then the more you look at it, it starts to be like the Matrix, where it's like you can just kind of read the screen, like, oh, okay, this block here looks like that one from the other day, and that kind of thing. So actually, on the Russell here, this is an interesting,
looking good.
This interesting thing of following my plan, because right now it's like, well, dang it, like, if I had only left my stop under here, it would be working better. But it's like, now my plan is to just trail it bar by bar. And that's what's working for me so far. Because right now I'm trading a combine. And as of right now, I'm less than 1,000 away from passing it. So
pass with the pros.
Hopefully I can get that sometime soon.
Heck yeah.
All right. All right. Hey, question in the chat for Jared has been asked a couple times. Is it possible to get Jared to discuss how he trades the 15-minute TF? 15-minute TF. What's TF? TF.
Time frame.
Thank you. 15-minute time frame. Which is please possible to get Jared to discuss how he trades a 15-minute time frame.
All right. Let's see if I can do this.
And then somebody else goes in here. Please stop talking about football. So I'm going to ask you
oh boy. Why can't we talk about football, man?
We're trying to do some analogy that somebody might connect with, because you watch it on some sport.
Sorry. All right.
Do it with ballet. Connect it with ballet.
We don't know ballet. We're a bunch of cavemen
here. Okay, so the person says no football. Then what other analogy do they want us to use?
We could do a soccer.
If you don't use analogies, then you just miss a little bit of an opportunity to connect with something that you can relate to outside of trading and be like, oh yeah, I understand. So whatever.
No, we're just goofing. Please, Jared, talk about the 15-minute time frame. S&P's still moving higher here. Shot out of a cannon. Last trade 61.40, about 7 points from the high of day. 61.40 last trade. 61.47 high of the day. Rusty looking good, moving higher here for Tim. But go ahead, Jared. Talk about the 15-minute time frame.
All right, 15-minute time frame. So I'm looking for number one, swing high, where the green candle was higher than the following red candle. So if I blow in on this, here's a swing high, and we have a high wick here, followed by a red candle and a down movement. So I draw a box in that area with the 50%. and that's going to be my entry. Stop is going to be above the wow, can't talk now, above the high of the green candle. It really has to be a swing high of some sort, like for that to work. Here's another one. So this one, it wouldn't matter to me. Give me 1 second here, see if I can.
S&Ps.
To me, this one is not valid. I probably wouldn't mess with it. This one, I would work with. I would draw another box there. Flip it around to the downside. We're looking for a red candle that had a swing low followed by another green candle. So this one wouldn't work because we already had a lower low here on a red. So this one was a very high area. This was last night's low. And so we got the green candle, which was higher right here. We got the red candle right here, the 50% right here. So we go long. Now, because this one is so wide, last night's movement was so wide, then I would have to do a smaller position to get in. Or if I was really focused and lasered in and watching the tape, I might kind of wait as it traded into this area and then try to get in discretionally watching the tape because it did trade down pretty low. And so maybe I'd get in on size. Whereas if I go back to one of these other setups that I have, like this one right here, this one is only 5 handles wide. So I could get in really heavy here with an entry, and my stop is really tight. And, I would hardly take any heat if that was my setup. I don't really use any other type of like 3-bar reversal patterns or anything like that, especially on the 15-minute. I might use an order block, some kind of impulse move, but I'm not very good at those for all sorts of reasons. And I just don't find them as reliable. On a 4-hour chart, I will more likely use that, but that's really, and then with that, I use the overnight high, overnight low. I will also consider the opening range, the RTH open. So right now we are butting up against that. Well, that was at, we're just above it, right? So 280.50 was the RTH open. So kind of in relation to price action where that's at. That's the main thing of my 15-minute is those swing high and lows and how to get into those.
So we got a long and we got a short.
Ooh.
We have short from 12, 312.
Thank you, Michael. Yes, we do.
Shorts from 312. That's Jared, the dude in the not the one of the red hats. It's the one with that looks like the Santa Claus red hat. That's Jared. And Tim has
the shirt,
the coolest of that red hats. Go big red.
Right.
It's so funny. I'm actually a Michigan fan. But I don't know why my dad had this Nebraska Cornhuskers hat, but I've just had it in my closet forever. And I saw it when we were getting out Christmas decorations. I was like, you know what? Red and white, Christmas time. I'm just going to wear it for Christmas colors and because it's cool.
It works.
Don't ever donate it. If you're going to donate it, I'll take it.
That's a cool hat.
For sure, man.
That is a cool hat.
Uh-huh.
Look at the Dow. Dow is shot out of a cannon finally. 44,202. Shout out to all the Dow traders. Dow been down 9 days in a row. Trying to break that streak today.
Holy moly.
Hey, NVIDIA's in there from what we're saying. And Dan Emmons, thanks for sharing. The Dow is stronger today. NVIDIA's got that young whippersnapper in the Dow that just slinking up all around, huh?
Wake them up. A little jolt of energy, man. Get Intel out of here. Later Intel. Yeah. Here comes NVIDIA.
They call it the grandpa index. You know
that? The boomer index. Yes, Dolby likes the goof on the Dow as well. Yeah, you kids. Look at the S&P chart. S&P, talk about a V-shaped bottom there on the 5-minute, man. Bottom there in the S&P, 61.18.
That is quite the move.
Yeah, it is. 25 points. Wow. That is just, you peg that bottom, good on you. Closing in on the high of the day, 61.47. It looks like there's some resistance up there, at least from the overnight. We'll see what happens if we get up to those 47s. Again, last trade, 61.42. Tilt has leveled off a little bit, Michael, but we never got that fade. We saw that heavy 81% long tilt in the NASDAQ. We saw 75% long tilt. in the ES and never really turned around. So they're sitting pretty there, those heavy longs. Again, all open positions in the sim environment here at Topstep.
I'm now short 4 on the NASDAQ.
Cooling positions. Short 4 from what price there, Jared?
So
317.31.
317.
How's that even work?
How'd you get 31s?
Because I guess because I scaled into it.
We'll call it 317s.
Yeah.
So I'm actually still long the NASDAQ, and I'm looking for 326.75. That's my final out here.
326.75.
Nice.
Okay, cool.
Isn't that your stop?
Okay,
Isn't that your stop?
I will move my stop to 328. Just
pay attention, chat. Pay attention, chat. You got to know where people's stuff is, what they talk about. Yes, I'm like, well, hold on.
Talking about order flow, right? I mean, that's exactly what order flow is.
Price levels matter, not just looking at a chart and saying a pattern, but knowing prices, and always being able to quote them. I will say, it's kind of like reading the tape.
It's coming into the NASDAQ is coming into the 200 EMA on the 3-minute, so that could be a place where it does turn around and like bounce off the high and go down lower. So hopefully we both can win on this trade.
Right now, you're winning
just like before.
Nicely.
We might get there because the NASDAQ likes to turn around at the quarter levels or like have some kind of reaction at quarter levels. So like 0s, 25s, 50s, and 75s. So we'll see what happens at the 25s here.
Up the 25.
See,
last year,
right there.
2003. Yep.
At the 25, it bounced off that 25 right there a little bit. So we'll see what happens.
So you're going to be completely out on your longs, and then Jared, you're going to have a short on, right?
Yep.
Both can make money.
It's kind of fun watching.
It's kind of fun
this play out together. Yeah.
I kind of want to pick one.
Dueling NASDAQs.
Yeah, dueling NASDAQs.
House behind one of you guys.
You got to pick a pony here.
I got to pick a pony. House has to pick a pony right now.
My only problem with saying the house should get short is there's some liquidity sitting there right up on this ladder here. It's there's plenty of liquidity right there. It's not small either for the NASDAQ. So is that people filling in to get short there? Or yeah.
Like Jay says, you don't know their intention. You don't know if they're getting in or getting out. It's tricky. If you did, oh boy. That's kind of, Delta kind of gives you an idea if they're getting in or getting out. Open interest kind of gives you an idea if they're getting in or getting out. That's why Hoag looks at it every single day, just to know where they're at. That's what MP, when he was a pit trader, he'd walk in, want to know where the locals were before he got in. Locals long, locals short.
That's what I said. Where are the locals?
Where are the locals?
That's a good point. You made that. So my book map froze this morning for some weird reason, lost connection. And so I lost all my Delta information. And, if you're really relying on that, then that might be the day to not trade because you just lost. What are you going to do on that? You got to I can trade anyway. I can make it work. Or do you say, nope, not worth it? I don't know. That's something to understand. I think a new trader would be like, oh, it's not that important. But wait, your playbook is built around it. It's pretty important.
Exactly.
Yeah. I lost my connection to my bookie as well.
End
of the year. Let's wrap it up.
Yes, it is. It's holiday time.
I think it's kind of there's hope here that my short will work because we ran up, but we didn't have a sweep here at the highs of the 325. So not a lot of confirmation yet that my short is going to pan out for me. I think it'll probably cost me.
Got a question. What are the locals in the pits? A local is anybody that walks into the trading pit and trades their own money. So technically, everybody with a personal brokerage account, I hate the word retail. The retail. There's institution. No, I mean, technically, we were called locals. Like locals in the, hey, where are you? Well, I'm a broker. I'm a local. Brokers didn't trade. Well, brokers, let's just make it very simple. If you got order flow from somebody, through a headset, and they said, "Hey, buy me 10, sell me 20, blah, blah, blah," you're a broker. Sure, you could trade in between there, your own. But brokers then pretty much traded with all the locals. Locals then created liquidity. They were on the other side of the trade. Of course, there were big institutions that then took the other side of the trades too. Susquehanna. Who's the other one?
Susquehanna. I did not expect to hear that name today.
I got stuffed by Susquehanna one time. Yeah. I'm like, she turns to me, it's like quiet market. I had my laptop in front of me. She's like, "Are you bid right now?" I'm like, "Yeah, 30 bids." She's like, 300. No, she was like 100. It was 150, something like that. What? Stuffed. It was like 2 ticks higher. I'm like, "Thanks, Noel. Thank you." Now I'm going to work myself out of this position. Yeah, work myself out of this position. And they lay it off all over the planet, of course, because they have people in every pit. Everybody's on a headset. Everybody's on a screen. And then whatever they do, they're always arbitraging it, and they have whatever system telling them to drone, buy it, sell it. But that's like a prop firm.
Are you bid right now? That's hilarious. We're
right.
Go ahead.
Well, so talking about order flow and stuff, like that reminded me of just like changing your number of contracts you're trading and stuff. I have it's really more of a request / suggestion for Topstep X, but
here we go
on my screen here. One thing I think would be really cool is like when you get this, if you right click on the chart and where you can do like the different number of like buy and sell orders, if we could have one more option that is like it's like a custom option that correlates to like the number of contracts you have selected over here on the left of like how many contracts you want to be putting into the market on the main order ticket over here. Because sometimes I want to trade a different number from here, and so you can get really granular with it. So like, let's say I wanted to trade like 7 and I need to get in like really fast. If I could just switch it to 7 over here, if there was like a custom, just one more bar right here where it was like, stop, sell 7 that matches whatever number I have over here. That would be
okay, cool. See, I recorded the whole thing, and I'm sending that to the folks that build shit.
There you go.
Damn. And now we'll be knocking on their door, being like, "Hey, my boy Tim wants this. What do you guys think?"
Oh, Tim's not done. Tim's got something else. I can tell. I felt like Tim had something else there. Another request.
I've got ideas, man. I've got ideas.
No, I love it. I love it, man. I love it.
What's great is they're doubling that size of the team that's building that the platform. It's getting tons of people are like very interested in it. It has the limits, the risk management that nobody else has to the depth and detail that you can manage. We'll do that. Well, at some point, Gabe will jump in here and do the risk limit tutorial again on what we've done. But this now helps you execute in a different way. So it's kind of an execution thing. So they're doing order types. This would be an execution feature. They're going to be improving the ladder. Be like a smart ladder. All your levels will be that show up on your charts will show up on your ladder. That's just the basic same color. Like you see my chart right here. All these colors, blue, green, or whatever, all show up on the ladder. Stuff like that. I mean, it's going to be bananas. It's going to be built towards the prop community feedback on what they want in a platform.
So if you want another idea, I have another one for you.
Yes.
If you're ready for it.
Yes.
Wow.
Yes.
I've thought this for a long time, and I think it would be really cool. And I've never seen any other platform do this. So it would definitely be, I think a first for Topstep X, but in our P&L, when we can check our performance stats, instead of having a line graph, what if our P&L graph was actually a bar chart?
Okay.
So you could actually see our look at our P&L as if we're looking at a stock. Because then if you have like 3 really bad days in a row, it'll be 3 big red candles in a row.
Ooh. Do you want what you opened at? What you opened at? What your high was? What your low was? And what it closed at? And you'll get a candlestick going.
Open, high, low, close. Yeah, open, high, low, close, just like a candlestick chart.
Recorded that one too.
would
Hey,
be
new
so
highs in the
sick,
S&Ps.
I think that would.
Yeah, they got the
I think that
it's
would
all
really
there,
help a lot of
dude.
people.
Coach Jay
Yeah,
likes it.
that'd be sick too. Like,
Wow, the chat
damn,
really
what is
likes
that?
this one. That's him.
Is that Nvidia or is that Nvidia? Is that Apple? Is that what chart is that? Dude, that's my account balance.
That's my balance,
Exactly.
you know, bro.
Exactly.
Yeah.
Good stuff. All right, guys, we got a little housekeeping to do here. Keep us posted on these trades. Again, new highs in the ES. Take a look at that 5-minute chart. You want to talk about a V-shape bottom. Look at that chart. Whose chart is that? Look at that. Nice rally in the S&Ps. I'm going to throw it to right now. Get JD in the house. JD, we got some hot streaks. Let us keep us posted. We still have that neck and neck tie. No, we don't. One person faded. So, yeah, let's see those hot streaks, JD.
Yeah, we are missing. The streak is still intact for.
That's right.
Oh God, I
okay,
just
yes,
forgot
we
his
stopped trading for a day.
but
All good.
not trading this week. Taking the week off. Yeah, but
Okay.
Good for
we
him.
did lose a couple traders. We did lose a couple traders yesterday. A couple people we mentioned, Ali or Adelaide and Amol. I was kind of bragging about their trading yesterday, and then they went and both hit their max loss limits on the respective XFAs. So they both ended their streaks at 33 days. I did jinx them. I feel bad. Go get them next time, guys. All right. Moving on. We got Ali. Ali made another $2 trading the MNQ. I don't know. Ali's starting to give me those Delesh vibes, you know, making $1 or $2 a day. I think Ali's trolling us. Or Ali is Delesh in disguise. I'll have to do a little more digging on that one. But $2 trading the MNQ for Ali, 61 days worth $5,268. Nathan had a nice day trading the MNQ. $187 in profits yesterday for Nathan. Now on a 37-day ripper worth $3,571. Jacqueline made it for another day. She made $400 trading the MNQ. Now at 33 days worth $7,452. And Jason and Puneet are also both at 33 days. Jason made about $250 and Puneet made just over $200 trading the MNQ yesterday. Jason at 33 days were at $19,877. And Puneet, 33 days were at $6,804. While I'm here, we do have a live call up from yesterday too.
Excellent.
Yes.
Just
Pro
one.
ballers
It's a good
coming
one.
in the league, coming in the Pro Ball League. Hard Knocks. They got a Hard Knocks AFC now, Andre.
Do they really?
Yeah,
I
think
didn't know that.
Mm-hmm.
It was, I know the Bears were on Hard Knocks in the preseason. How'd
Yeah,
that work
whatever.
out?
You know, the McCaskey family said they couldn't cuss on there. I didn't know that.
No swearing.
They didn't allow them
No
to
swearing. Yep.
No swearing.
Yep.
Okay.
No
Well,
swearing. Orders from the top.
yeah. Okay. Hold your
Check this out,
emotions,
man.
I guess.
This is what they're concerned about.
I got so I got to drop in 7 minutes for another appointment. But I'm thinking since price hasn't really blown through the overnight high, we're kind of back in the range from now on until FOMC. We're just going to sit around here in the middle. What do you guys think?
Well, hold on now. Hold on. We got to get that call up. This is very important because we're all about moving people.
Wait,
getting people.
We're still waiting for this? My goodness.
Still doing it. Hey, Jared. Well, you got.
I'm still here. Let's
Yep. Come on.
Let's pull up that call.
Let's do it.
Let's do it. There it is. Laura R from Brownsville, Texas. Closed out that XFA 50K, hit the max in the XFA. Took a $5,000 payout, opening the live account with $45,000. Trading gold and
Brownsville.
NASDAQ.
That's where snowbirds live.
Brownsville.
Uh-huh.
I'm not familiar, but I'll look it up on the map later.
A lot to shake a
Nice
stick
30
at.
pounds.
What's the max on the XFA?
$50,000.
There is no
max.
Oh, well, max on the XFA. Yes, $5,000 payout. Yeah, per request.
And
Per
the account
request.
can't get over 50.
Yes.
Yeah. No, accounts can get wherever. Well, accounts can get whatever. We have certain things in the back that set this up. We'll watch on profit for a day and stuff like that. There's some things that we're working on, like a $10,000 profit for the day cap that we're looking at right now, because we have some folks in here that if they get flagged as a boom or bust type of trader, we're hyper focused on you because there's the way in which you're doing this isn't really going to set you up for long term, and we know that. We also have, if you got into live multiple times with a certain strategy and that just doesn't change, maybe there's a time for us to part ways. So we're trying to make sure that we're getting the best traders and not the ones that are trying to game the prop, but the ones that are trying to be the best they can be and then get themselves that level. So starting with 45 grand, I mean, whatever. This is I don't know this individual's certain things, but that's good. That's a good starting balance. They've been much bigger. We've had $250,000 starts. We have I don't know, whatever, thousands of dollar starts or whatever, tens of thousands. So, however,
I love that graphic.
It's our proprietary way of which we call up traders in the background.
I love the graphic. MP, do you see the graphic?
Hey, I wonder.
That's a great graphic.
I wonder if when you go live for the first time, if that should automatically put you in with a coach for the first 30 days, and just and you.
If some of these guys don't want to be in the way, and I get it. You've been trading all the way through. You're trading really well. You get called up. Next thing you start talking to somebody. Who's the first person they're going to blame is you got in my way. I was doing just fine.
Yeah.
And we have to watch the blame game because the blame game's like, oh, I was doing just fine until you emailed me this new trade limit on Topstep X. And that just distracted me.
Last year, I kept getting that email from Mick that says, "Hey, we noticed you trade really well today. We're watching you." And like the next day I'd have a terrible day. So I just put a rule in my email to delete that email because I didn't want to jinx me.
It was Mick's fault. It was Mick's fault. It was Mick's fault.
No, I mean, the
for congratulating you.
You're trading really well. Yeah, you're trading really well. We're looking at you. And then you kind of get, like maybe for you it got you a little nervous, but at the same time it got us a little more seeing that. Can you rise up to? Hey, we're looking at you. Hey, Andre, sitting there, next to the water tank on the bench, about ready to go in.
Oh, why am I on the bench?
And I mean,
come on, man.
If he turns bright red and faints on the ground, then you're glad he's not starting quarterback on the team. Give him more water.
It's good water boy around here, man. Oh man. All right, let's update some positions. Jared, are you still short?
I'm short at 347 even.
340. How many times? Oh,
three.
Never mind.
I think
I'll probably just kill it because I got take care of some other stuff and I just can't watch it.
Sounds good.
Where'd you stop at on the 47?
355.25.
55.25. All right, well, keep us posted on that. I'm gonna we got some news really quick. We want James. If you're ready, come on in for
the Russell. I just got short the Russell at 73.7. It hit the 30 EMA on the 5-minute here. This setup is inspired by David Green.
Really? Go on.
Yeah.
Are you gonna blame him?
I actually really want to take his course. So that's something I'm also looking to do.
Green's a great guy. And lots of people are connecting with David.
Yeah.
In general, everything comes down to, even going back to the ICT joke and everything. If there's things that they've shared with you, aka taught or whatever, that worked for you, that's the name of the game.
Yep.
Like
100%.
Yeah.
Yep. But you can't. I have never seen it work successfully where you take trades off of someone else. It just does not work.
It doesn't work. No, it doesn't work. Yes.
Yeah. You can take an idea or concept and then practice it, turn it into your playbook and, own it. But you can't just like, hey, what trade am I going to take? Like, the trades even here on Topstep. I love when people ask, okay, why are you using the 15-minute? What is your thing? Okay, that's a concept. Now, how are you going to make it your own? Then practice it and turn it into your playbook.
Yeah. So there's this. I will always jump in and jump down somebody's throat, so to speak. If they go, well, those that can't do, teach. Well, hold on. If you're asking a lot of a coach. If you're also asking him to throw the fastball like you can, and read the defense like you can, but if they support you in being the best you can at throwing the fastball and reading the defense, and these are two different sports. Hopefully, we're going to try to cover all analogies at this point, but. That's the goal. That is a coach. That is a mentor. And I think the more we can lean into that, which leads me to my last point before you leave. We're kind of doing this recruiting for coaches because we're going to be adding more coaches, adding more teams. Actually doing a league. But some of this is like getting Topstep VIP to have more coaches that people can really connect with. Now, Jared, you'd be like, once somebody goes in here, is Jared going to be a coach? Can Jared, is he coaching anybody? Now, the question now we're talking about is like, hey, when a trader gets up to the big board and he makes it to a certain high level, like that is ranking. That actually gives you an accolade to say, hey, anybody you're teaching or working with or talking about, you've actually gotten yourself to 26th or something like that. Is tough to do. That's tough to do. So we're kind of like saying, who can we find in this coaching recruiting network? How do we build that in a way that we're getting ones that people that have legitimacy, credibility, they've done it, they've gotten paid out, they've gotten funded, and oh, by the way, people actually like listening to them. So you may be one of those candidates, and that's the kind of the exciting part about it. There's a future here at Topstep, even for those traders that come up and then people find out that they can, or that individual finds out that they can lead those, be a good teacher, a good role model, good coach. Topstep's really going to lean into coaching. How can we find this farm system of coaching into 2025 so then we can build out a league so coaches have 50 people on their team and it becomes a really tighter knit network of traders helping traders, and they've all been there and done that. So that's kind of exciting 2025 when it comes to coaching. And if your coach can help you get to a better spot, that's perfect.
Yep. Really cool. I moved my stop to 343.25, and then I'm going to drop. And the reason being that I did is when I dropped down to a 2 minute, it traded into a previous green bar area and rejected with an impulse down. So I moved my stop up to the top of that green bar. So just FYI, I'm still in that trade.
Nice.
But this green bar right here, I moved into the top of that and it ticked right there and then rejected out. So 343.25. Peace out, everyone. Have an awesome day.
Jared, thank you so much. We'll check back in with you. If we don't see you until after the holidays, happy holidays. And we'll check back in with you in the next year if we don't see you before then.
Tim is awesome.
Great trading this year, Jared. Good stuff.
Thanks. Jared, likewise, man. Hope to see you again soon, man.
All right. Later, we got our man. You guys know him. We got Coach Jay waiting in the wings. He's going to be jumping on here shortly. We got some news with my man, James Harden. If you're ready, we can do that. Or while we bring
let's knock out we'll knock out some news stories. We'll get Jay in here next. So first off, I bring you some feel-good news for your Wednesday. A new federal rule bans junk fees on hotels and live event tickets. If you're familiar with this practice, it's when you are thinking you're going to pay $50 for a concert ticket, you get to the checkout, and it's all of a sudden $120 after hidden convenience fees, ticket fees, all that stuff that you're like, where is this even going? It's just going to those companies' pockets. So starting in April, those fees are gone. What you see when you select your ticket is what you pay. So thank God. I'm tired of paying $600 to go see artists and the nosebleeds.
Taylor Swift.
Taylor Swift. Blink-182 drained me. All those big bands. Next story. A good Christmas feel-good story. We're talking about Paul McCartney's Wonderful Christmas Time, and one expert analysis said there's no getting around the fact that he repeats the phrase, simply having a wonderful Christmas 17 times.
Hey, whatever it takes. Tim liked that one.
Tim, I'm a songwriter. I get it.
Yeah.
I know you are.
17 times, Paul McCartney. The song, which is estimated to make Sir Paul McCartney between $400,000 and $600,000 per year, really doesn't do much. They blame a lot from the repetition of the lyrics to the synths in the background. But looking at all the covers over the years from all the artists, I think this song is here to stay, no matter your feelings on it. So, simply having a wonderful Christmas time. In other news, we have been talking a lot about drones recently. It's on everyone's mind, so much so that a Republican lawmaker mistook a Star Wars prop for a downed drone. That's right. Republican Pennsylvania lawmaker posted on his X account that we need to do something. The government needs to stop hiding the truth from us. And this is the picture he included in that tweet. Yes,
Whoa.
that's right. These drones are TIE fighters now. They scream in space. They are piloted by the Empire.
Yes.
They're coming for your planets.
Can you imagine driving down the road and seeing that? That would be crazy.
Yeah, it would. Yeah, it would. What a time to be alive. Oh my god.
Imagine driving down the road and never seeing a Star Wars movie. Like, I love it. Anyway,
look at that.
I got one last news story, and this is for you, Richard Harris. I hope you're listening. Rare Pokemon cards are being used to finance organized crime.
Wow.
That is right. Over the years, some Pokemon cards have skyrocketed in value, and criminal groups in Japan have taken notice. A former head of the Japanese crime syndicate tells the Shungan Gendai Online article that his organization was using Pokemon cards to launder stolen money abroad. If you're familiar with most trading cards in general, not just Pokemon, sometimes the packs include a rare card. These rare cards are coated in a different type of metal, aluminum, and metal detectors can pick it up. So they were buying booster packs en masse, scanning them with a metal detector, picking up the ones that went off, and then using these high-value cards to quickly and easily launder money across country lines. So, Richard, take a look at your collection and,
very smart.
Start some crime, do crime. Anyway, that's my stories for you today, Andre. We're going to bring Coach Jay in just a second, but until then, back to you.
Thank you, James. Wow, Pokemon cards to finance organized crime. I love that. What a time to be alive indeed. Hey, we got a question here in the chat. MP, a chance we'll get to see some female coaches in the VIP program. Yes.
I was just going to grab that.
Go ahead, Michael. What are we doing in February?
No, you probably know more than I do. That we've yes. Yeah, the answer is yes. Go ahead, Dre. You know.
The answer is yes. We got Deanna and Anne Marie. Deanna and Anne Marie locked in as coaches in February. So your wish is our command, Leah. We got you back. In February, we got D and Anne Marie.
Two badass coaches. Awesome coaches. Super exciting.
So, all right, let's bring in Coach Jay from the Lunatics. You also see him at the buzzer on After Power Hour 5 days a week, putting up big numbers on At the Buzzer, man. Really good to see him and Coach Paul cutting it up 3:15 Central Time. Also, head coach of the Lunatics, and speaking of VIP coaches. Hey, Jerome in the chat. Hello, Jerome. Bring in real quick. All right, let's get a quick ding dong. Hello. What's up, Jay? How you doing, guys? Man?
What's going on? How we doing today?
Yeah, man, these guys are training. This is awesome. Tim. I don't know if you guys have met Tim. Tim, that's JJ. That's Tim.
Tim's awesome. Jared's awesome.
Tim, I don't think we've met, but great trading today. Great trading today. Are you still in there?
Oh, thanks, man. I appreciate that. Good to meet you as well, man.
Nice to meet you.
I'm actually my Russell short.
I'd say Coach Jay's one of
pretty
go
nice.
ahead, you Russell.
So I got in here at 73.7, and we're cruising to the downside here. So we will see how this plays out. I got about a minute 31 until I adjust my stop here. If I do adjust, or when that happens, if it hasn't popped up at all, I will move my stop to 72.3 at the top of this candle.
Really nice trade.
Profits. Who says we don't always trade the NASDAQ and the S&Ps around here? We got Russell traders in the house.
Yeah, Russell's showing some love, man.
I feel like MP was going to say something good about me. So MP, my bad. Go ahead.
I was going to say one of Topstep's number one coaches, hands down. And you'll see when we talk about VIP, he helps traders. And he helps his team, and he has a very high pass rate. And I kind of like throwing that on a coach, even though it's still the player, the trader that gets themselves to it. But the whole lead a horse to water, can't make them drink. He gets them to drink a bit enough that his percentage of pass rates, guys that he works with that gets to the funded level, is higher than I think any other coach. I think so.
He's definitely up there.
Yep, we're up there. All credit to the traders doing a great job. I just realized I'm sharing the wrong screen with you guys, so let me pull Topstep X up here. We talked about, full transparency about, Jared losing his live account today. Jared, if you're still watching, I'm sure you'll get back there. I lost an XFA this morning trying to trade micros. Thought I was trading micros. I actually got in minis. It was 5 minis instead of 5 micros, and that ended up being a losing trade. So that's how my day is starting. But it's okay. It's okay. We'll get back into it.
Yep.
But full transparency there. I do like the shorts in the Russell that you're in right now. I do also like potential shorts in the NASDAQ down to 22,280. We pushed up to this 22,350 level. We didn't see, much buying at that level. So if I can get a short somewhere around 340 to 335, I'd set my risk above 355.
Downside to 22,280. Okay. Right.
Yeah. So, Jay, you heard about Deanna and Anne Marie coming on board on the coaching.
I did, yeah. As a coach, I got to go back to the drawing board because those are two. If we're talking about competition in the league, those are two pretty strong coaches. Completely different styles, but two pretty strong coaches.
When the league starts, there's going to be incentives for the coaches with the high pass rates, so you're motivated to help your folks, your traders even more. There's a lot of things. These are ideas right now. They're floating around, but it's Topstep Trading League, not just a typical leaderboard of what's happening, but actually a league with coaches and traders and an event. A World Cup of Trading event that people go to, and we're all there, and we have our badges on, our name tags, trading badges, but name tags, and we're all, hey, you're Coach Jay, blah, 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 or you're XYZ trader, and I saw you on Coach, Deanna's team, blah, blah, blah. That, what about, to me, it's community. That's a fun community because everybody's passionate about the same thing. You're going to have rising stars. You're going to have ones that fade out. You're going to have ones that stay up, and then it's going to start to be like a real league of traders.
And speaking of community, if you haven't checked out our Discord, you can access community of over 100,000 traders. In addition to that, you can find all of our coaches in there as well. So make sure you go check out our Discord. Tim will post the link in the chat, and there's a beautiful graphic congratulating us on 100,000 traders, one of the largest trading communities for futures.
We fill up a stadium bigger than Taylor Swift every day in Discord.
The Rose Bowl. I think Rose Bowl might be able to do 100,000.
Is that what it is?
So maybe I could be off on that one. And what about the Robbins Cup? Your thoughts on the Robbins Cup?
I mean, it's my grandpa does that when he focuses on the Dow.
I knew I'd get you on that one. All right, good stuff.
They do really quickly, Dre, for lead gen, and then their commissions are banana expensive. But that's just from what I heard. By the rumor,
MP's Big Rig Trucker Team. MP's Big Rig Trucker Team. Yeah, MP used to mess with the big rig truckers, man, back in the day. He'd get on those CB radios. Hit them, just mess with them. I can only imagine what those guys
being a trucker.
I about started trucking. I about when I was 19, I wanted to buy a semi and get a couple trailers because we were around Warner. We were around my buddy's dad, who's probably a billionaire now, does the container off the shores all the way in, all that kind of onto trains and then onto his trucks. All the logistics. You got to ship. You got to ship. I didn't do it.
I think it worked out, Michael. I think it all worked out in the end.
I think it worked fine, man. We're doing just fine.
We're starting to see some sellers here in the just a clean S&P chart today, all the way down, back to all the way up, back to all the way down. We're going to see some sellers now in the S&Ps. We topped out at 61.48, and we're now trading 61.37. So sellers are coming in. VWAP is 61.33. Let's see if we can get there. Now we got some shorts getting paid here in the NASDAQ.
Yeah, where was Jared's target? Because he's looking at it on his short.
Where was his target? Jared,
stop
that target.
Yeah.
80s? No, that's Jay's target. Downside 280 for Jay, I believe, right?
Yeah, 280 was for me. Yeah, I would, if I kind of thought about how Jared traded, I think he'd probably be looking somewhere around that 280 area also, and maybe thinking position management around this 300 because we saw it to the upside, right? That 300 level kind of acting as a resistance, giving us some hesitation. So then seeing it to the downside also, do we have the order flow to continue selling below this level? The reason my target was 280 is because the anchored VWAP from the New York session was at 280 when we were talking about that trade. Didn't really give me an entry for the NASDAQ, but we can see the trade playing out. So let's see this bottom green line that I have here. It's at 287 now.
287. All right. And then we also
So
have
if we want to
Tim,
start
who is-
cheerleading this trade, I think if
Yeah.
we start cheering this trade, it might go down into my target at 66.8.
Jerome.
Come on, baby.
Jerome. We need the Jerome chant for the Russell, everybody. Here we go. Dolby time. We need the Jerome chant for the Russell right now. We are selling off, looking for. He is short from 73.7. 73.7. There's Jerome in the chat. The Jerome. And we'll have the other Jerome this afternoon doing a little press conference. We got our Jerome, Topstep Jerome. And we got Fed Jerome this afternoon. We are seeing some sellers here in the NASDAQ and S&Ps. They're listening to the Jerome chants. Can the Russell do the same? Now the Dow is taking.
Definitely selling off for sure.
If we want to get in a house trade here, we can keep it small size, but if we get any kind of bounce up towards 300s and we don't see the buyers step in, I do like a short just for a continuation lower.
Okay. What's the risk?
So let's see. If we get in short somewhere near 295s, I would say risk 310, so about 15 points.
Okay, MP. 295.
310s?
310. 310. 310 is the risk.
Like that
295 is the entry. 295 is entry.
Let's see here.
They'll get the shorts
JD
nervous. The weak shorts nervous. Now up around then because they've been getting squeezed. Get all the weak ones out and then take it lower. I'm not saying it's going to do that, but that's how I feel that from the price point we're at right now in the 80s all the way up to 310s. Yeah. So if you're getting short right here looking for continuation, you're going to get squeezed out 20 handles higher, which is 05s, 10s, and then, yeah.
So we like an entry at around 295. We like an entry around 295. House account is open.
Oh, JD's executed. Okay, cool.
Looks like I'm gonna go without us.
Just to let you know, I silently there's a green up there. See my my house account screen.
Oh, nice.
what trade was
that? Jared, when Jared left, I put the exact same thing on. I'm like, the house will get behind this, and then I ran into the rest from 33s, and I had 43s. What was his stop? It was like 43. I'm like, I'll take the 10 tick risk right here. Jared's been. I like how he talks. When he talks all loose, like he kind of like he's like this beautiful mind starts to like he's seeing the market and he's doing a stream of consciousness. So the sell off that he called out is beautiful. You're seeing it right now.
Yep,
this is what he was looking for, and he caught the rally.
Yeah, Jared's
still selling off here.
Yes, he is. Yes.
We're still selling off here in the NASDAQ. Boy, someone just hit the sell button, and we are pushing lower. S&Ps and NASDAQ.
JD, I know you were putting an order out there. I would not leave the order out there at 295 now, because if we do get a bounce here, it could get aggressive, right? Because sellers, any sellers who are joining this move right now, if they don't get the price action that they want, may flip out of this trade. Yeah. So I would want to see that price action slow down. Tim, how's that short in the Russell looking?
I just took my profit at
nice.
What was it? I got so that was a let me look at my trade here. Took my profit at 367.5.
Done, Tim.
Great
Russell
trade.
Getting some love. This might be a first on Fast Markets that I can remember. The Russell being front and center here on Fast Markets and being profitable. Love to see that. Good stuff, man.
Boom! Yeah, it got within like one tick of my target, so I just took it.
Smart.
Yep.
Smart. Good
stuff. But there's the full target right there anyway. So there it is.
Beautiful.
Boom, baby. Let's go.
Oh yeah, he's back. Good job,
there
Tim.
You go.
Love it, man.
There
Love the passion. More selling coming in here in the NASDAQ. More selling coming in here in the S&Ps. Dow as well. Dow. Dow. We're trying to break the 9-day losing streak. Good right now if this keeps selling off. Jay, we never got those 295s. Market is just running away from us right now. market is just running away from us right now.
We got a 244 on a daily level on a Topstep daily level. Now, I don't know. I don't have it in front of me right now what that level is. So if you guys want to chime in.
244 is also the low of the 3-minute opening range, MP. I don't know what that level is on the daily levels, but it's always interesting, right? When we have a bunch of coaches and a bunch of people looking at the same area.
Yeah.
And then the market agrees with it as well, right? Because for some reason, when the session opened, 244 was important. So it means something to someone.
It means something to someone. Yeah, somebody with much deeper pockets than us.
Yep.
That's a Coach J-ism right there. The price means something to someone. That's good stuff from Coach J there. All right, so Tim, you are flat, correct?
I am flat. Yes.
Up $600. Trading the micros, man. Well, job well done. Look, it's possible, folks. That is great risk management here on Fast Markets on Topstep TV. So, Jay, what do we do next now? Go ahead, Tim.
I was just going to say a little P&L update. I'm plus 610.28 on my combine here for my Russell. And then I accidentally, that very first NASDAQ trade I took this morning, I accidentally took it in my combine. I meant to take it in my XFA. But my XFA is plus 123.78 on the day.
Green on both.
123.78. All right, nice. Rodrigo. First time over 4,000 in XFA, 43.40. Let's go. Rodrigo, I want you to lock that up today. Lock it in.
Oh.
Above 4. You want to do whatever? You can do whatever you want. Okay, fine. You can. But awesome trading. Lock it.
We're selling coming in here. This S&P
might
chart
getting into a short on the NASDAQ here. We'll see if my system gives me a short here.
Right. Would you take this for the house account, Tim? Your system is seeing it
possibly
well
so
right now.
The thing with the house account with my trades is that I've got like a huge wide stop. So I mean, if we do get in with the house account, we want to get in probably with minimal size.
House account's got the cash in it. Yeah.
House account solvent. House account solvent.
Everything's very cool. Just fine. It's been like that since 2010.
All right. Well, yeah. Keep us. All right. What price are you looking at, Tim?
It's going to be if I do get in, it'll probably be at the end of the close of this bar. So whatever the opening print of the next bar is, that'll be the entry. So I'm kind of waiting to see how this plays out here.
I think, Dre, while we're talking about the house account, Kevin, house account bought a reset. House account it's been an idea that we built in the air. My idea that I put in there, and I'm going to take, we're down $400 grand. Real money, my idea. I'm taking full responsibility for building the plane in the air. And we started off doing all those check boxes. Remember that, Dre? How many check boxes do we need? Should we do this? Blah, blah, blah. And we're like, how do we make this so we can get show that we're behind our community and our traders on their ideas, make it entertaining, make it educational, and then without taking a bath. Well, we took a hit. So we're like, oh, you guys can't trade over there. Well, it's not doing something that we've never done before.
Never been done before. We're testing it live.
I got
thousands of people. Yeah. I mean, it's low hanging fruit.
Right,
I get it.
I got a jet. It's like, exactly. So we're now going to bring out kind of like, get your input on what this is. I think we're going to do a survey at some point. But we're also kind of changing it up. So if you're going to judge a man by his past, then judge them by what they're going to do in the future. And the future is what you learn from the past. Can you make it better in the future? That's what we're doing. And it's always been something like how Topstep TV needs to have. We wouldn't be doing this if it wasn't like on Topstep TV. We would be letting our traders trade and talking to them how we typically do. We're like, okay, let's do a house account so we can be on air with Tim, be on air with Coach J, and take if they got short 2, we'll get short 5.
Short, guys. I'm short.
We go short. We're short MP. We're short NASDAQ. How many?
I'm short. I took too many micros, so I'm actually going to close that out real quick. I took too many.
Short
I'm
MP.
Trying to get short, so I would get short at. I'm gonna get short 3 micros. Basically right now.
Boom.
Okay, we got short
risk
5 lots.
And then
what price did we get MP?
My stop is going to be, well, let me see, 61.25 minus. It'll be 75 points higher. So whatever that is from,
What?
and then the first
75
target will
points higher,
be,
Yeah, you heard you heard him, MP.
Okay. You want to know why we're down for the year? You want to know why we're down for the year? Because
No.
this guy's doing a 5 lot, and he goes, "Yeah, it's stopped 75 points higher." We're not taking that.
MP, no, we won't take that kind of heat.
We're not taking that.
Oh, look, the
No.
check marks are back. Oh my goodness. Hey, pin to the top
Oh,
of the
please
chip.
get rid of those.
Out. Yeah, we got
These
stopped out.
micros.
I vote fine. That cost $1,000. We were up $1,000. Whatever. Okay.
He's
Yeah,
micros.
yeah,
He's micros.
that's fine.
He did
That's
say
why I
that.
was saying
This
get in
is a
with minimal
surprise.
He did
size.
say it. I stupidly got trigger happy, and some of the hundreds of thousands of dollars was me getting trigger happy. Oh, let's go a 50 lot on this one. Blah blah. It was. I don't know. I look back and I don't regret it at all. Didn't work out,
We learned.
and we're still
MP,
working
speaking of
towards
house account.
bettering it.
We got the survey pinned to the top of the chat for the house account.
Oh, send
pinned to
it.
the top of the chat.
Yeah, send it in there, guys.
Send
Help
it.
us out. We already had all you
So
guys say
I actually have
75.
thoughts on this, MP. If you want to, I have some thoughts
Well,
on
really
this. If
quickly,
you would like to hear.
Really, yeah, I do want to hear this stuff. So 75% of we did a survey to you guys, and you guys want us to continue the house account. I mean, like let's all try to improve it. If it can help you and get exciting and entertain you, whether you just watch it, I don't say I wouldn't trade off of it, of either fade it or go with it. I wouldn't do anything. That's just the disclaimer that we have to say, and we're going to say. But yeah,
European close in 4 minutes. Euro close in 4 minutes. Go ahead, MP.
no, that's really it. We do want you guys' thoughts. So Tim, give me your thoughts.
Yeah. So a couple things. One, it actually kind of makes sense that the NASDAQ is bouncing right here because on the 3 minute, we are down 1, 2, 3, 4, 5 bars in a row on the 3 minute. So I don't know exactly what the stats are on that for a 3 minute chart, but that is some extension. So, I mean, this is an example of where with this trade, personally, like if it was just my discretion, I'd be like, I don't like this trade
right here.
But
That's
it's
it.
just my system. So,
But
but
you
anyway,
like
my
short.
thoughts on the house.
Hold on
account.
really quickly. Who likes it short? Coach Jay, you like it short here as well?
Yeah, 1 second here.
Okay.
I'm just I'm looking at it. I like this area, but I'm just watching. I want to see these buyers kind of slow down. We rejected at VWAP 286. So if we can keep the stop pretty tight on this, I think if we could get short here, my stop would go above 305, but not in yet. Not in yet. Just looking at an area.
Cool.
So go ahead, guys.
Go ahead. Go ahead, Tim.
Yeah. So my thinking with the house account is, all these people who are on here calling trades, they're all funded traders. They're all, they all know what they're doing. But what I've noticed is just like if the house account were just like a person, then the house account is trading different strategies every day. And so my thinking is, what if we took like a survey or had all the people who've contributed to the house account and have all of us put our heads together to create a specific house account strategy that the house account always trades this one or two strategies that the community has built together and we've all had input on. And then that's how we trade the house account going forward. Cause I think that would introduce a lot more consistency. Cause I think that's part of the problem maybe with the house account. That sometimes we're trading stuff that Rips is calling. Sometimes we're trading stuff that Dakota's calling. And both those guys are incredible traders, but they're different. And so I think if there was like some kind of continuity to that would be helpful.
I think there's something there. I think there's something about like, hey, you go time frames. We're not doing 30-second hold time. Like that's what we're not doing. So that's a part that's getting us closer to a strategy that's somewhat in the vicinity of we're all thinking the same for this house account. The house account, guys, is the house account. Our prop firm has sub accounts all the way down. And then one of those accounts is the house account. So anything we do on the show is a live trade, and it's whatever we either get from the chat that we've done in the past, or we've gotten from on-air guests in the past, or just us thinking. It typically hasn't been any of our trades on the house account because, again, our trades aren't the ones that's supposed to be trading. We're the coaches. We're the ones on the sidelines. We're the ones cheering. Hey, we got the best on here. Hey, you're a funded trader. Blah blah blah. But then we expect them to be hot. Right when they come on a live stream, and do this. And that's Timmy said in the very beginning, coming on, you were nervous, your XFA is getting pretty low, blah, blah, blah. So that's why we're also coming up with these XFA charity accounts. Maybe they'll take some of the nerves off.
10 seconds.
Okay, here's your 10s. Is there a short that you liked up here, or no? Is that off?
We flat.
Just waiting on it. Yeah, we're flat. Just waiting on it.
Oh, nice, Michael.
I'm not seeing. There's still too much buying come in to just short it right here.
Yeah. Okay.
Nice risk.
Yeah.
This is pretty.
The house is down 220. I got it wrong. And I wasn't gonna stay in it. So needless to say, the house account is an ever evolving, iterative process of improving that we're trying to do with the community. And hopefully the trolls can get out of here and you guys can't make any money. Well, yeah, I'll evaluate you. Hey, guess what? That's what the company does.
Stop.
Why are you jumping here? Yeah, here we go.
Easy.
Put you on there. Yeah. Shut up pretty quick.
We do have a little VIP, a little high level VIP check in. MP, go get another cup of coffee while we get that VIP. I'll evaluate you. I love them. Absolutely.
We're all in this together.
We all are in this together, man. We try coming up with stuff. We're trying to innovate, man. Not everything's gonna work, or we will keep on evolving. We're gonna keep evolving. We will get this right in some form or fashion. So
Richard Harris goes, house count has been doing better lately, Dre. And because we've been talking about how we can improve it. And a lot of it was, okay, I'm going to get out of it. I'm distracting it. I'd rather just be a part of this. You guys are going to execute. You guys are going to talk to them. I'm just going to be a part of our traders, my traders that are in here that I feel like I'm rallying you. I'm your biggest fan. I'm everybody here's biggest fan as far as supporting you to get you to fund it. And then when you're funded, the live funded traders are the ones that are okay, these are the top of the top step of jobs. So this is all
proud pop.
This is all what we planned out to do in 2010, Dre, when we wanted to do this.
I know. We're getting there. Finally getting there. All right, so everyone's flat. Jay, I know you've been watching intently. Yep. I can see when you get silent like that, I know you're watching something. So what's going on? What are you looking at, Jay?
Just looking at this area, right? Settlement is right above us at this 315 area here. So I'm just watching the tape to see whether or not these buyers slow down at all. And the second they do, that's where I go short and just risk above where they came in. But they haven't slowed down yet, right? They're getting exactly what they want. So if I'm looking to short, I don't have a trade because I can't manage my risk. Now, as we come up to these 225s or 325s where we were before, where we got some selling to come in initially, we'll see whether or not the sellers step in there. So just
it seems like there's a lot of resistance at the value area high from yesterday around 346. That's where we had this little turnaround right here. So that if you're looking for a short, that could be an area for it. I'm taking some serious heat on this trade. So that was a good early exit MP. That was because with what I said before getting into this, logic or from my discretion or from looking at my charts, if it weren't my system, I would not have gotten into this trade. But
the system, though.
My system told me to, so I did.
Yep.
This is the game.
Robotic as possible. Oh, real quick, we're a little light on the likes. Only 600 likes. Please click like. Please click subscribe. This has been a very enjoyable fast markets, if I do say so myself. We got Coach Jay Star at the buzzer, as well as head coach of Lunatics. We got Tim B joining us. You're in Nashville, right?
Nashville. That's right.
Very cool.
Oh, wow.
Music City, baby.
Music City. I'll be out there in May, actually, so I'm looking forward to that. It's a very fun town.
Dude,
joining us. We got MP and Snowman. Yes.
Yeah. Timmy, you look like a cool Nashville guy.
Definitely, he's got the vibe.
It's the Nebraska hat on. You'd have no problem going out.
I'm wearing the
Broadway.
I'm wearing the musician's uniform. I call it. It's the musician's uniform. There's lots of people that dress something similar to this around here.
Hey, is Broadway Street strictly for tourists? Where do you go? Where do people go? Where do locals go?
80% tourists down there for sure. Yeah, locals don't really. There's a couple spots downtown that are cool, but most of the spots I go to are not downtown on Broadway.
they got a Senior Frogs there.
They got Kid Rock's got to join on.
I can't. I don't think so. Honestly, can't remember off the top of my head. I don't think we have.
Well, do they have any chains? Play the story. Do they have any like? I don't know.
Chains down on Broadway.
Like chains like this. No, like yes, bar wise, restaurant wise.
Pat O'Brien's, Senior Frogs.
There used to be a. It's not there anymore, but there used to be a Joe's Crab Shack.
There you go.
Oh yeah, well, yeah.
I don't think it's there anymore though. I think it's gone now.
Yeah.
All right, I'm short one. Stop
Short
is
one,
going to be pretty
MP.
tight on this. Short one from 304. Stop is at 320.
320.
Target is
from 304
270.
Downside 270. Get it right here if you want it, MP. Nope. All right, cool. Short one NQ.
Yeah.
Short. You get a better price right now if you want it. Do two or three guy if you want.
What is it? What is it? What did you call out? Sorry, I was
short NQ. Short NQ. I got he's short one from 304. Downside target 270.
What's the stop?
I like that.
320. Really, I wanted it at 330.
We might actually be forming a little head and shoulders pattern here, potentially. Kind of, sort of. Got the shoulder here.
You got 06 quarters.
Excellent. How many times?
06 quarters. 5 guys.
All right. Stop 320, Michael. 320. Downside target 270. Working 270 on 5. Pay 270 on 5. Straight 22.
Yeah, we're probably going to get stopped out of this one pretty quick. I was looking for sellers to come in right there. It looks like the buyers slowed down and they didn't.
Well, we'll see.
Yeah, this is not looking promising for my trade here.
Let's see.
Moment of truth right now. Look at the NASDAQ ladder. Again, there's some liquidity to the downside here in the ladder. 10s, 20s, and 30s downside here.
What?
I got close. No, I got close.
AJ, quit posting that. You keep posting this. You're better. You're the same as Apex, blah, blah, and we keep it like, go to Apex. I don't give a like. If we're the same as Apex, then go to them. You're not welcome here. Just like quit littering the thing. Our guys keep having to remove it.
Polluting the chat.
Polluter. Got it, AJ.
Cool, man.
Registered.
Cool. Come on, man. It's the holiday season. Year end. Looking forward to big things in 2025. Let's all make money together, man.
Andre, what's the reason for you coming here in May? What are you coming for?
A concert, Rufus the Soul concert at the amphitheater out there.
Okay, yeah, Ascend.
Yes, I'll hit you up for sure.
Yeah. Nice.
Yep,
man.
yep.
Very cool.
Speaking of concerts, that news that James shared, I wish I heard that before I bought tickets. I bought tickets to Kendrick in Toronto. Kendrick Lamar concert in Toronto.
Nice.
It would have been nice to not pay those fees, but it is what it is.
Well, all they're going to do is take the line. They're going to take the line item out, like the chat was saying, and just add it to the total. So it's just like, oh, it's just one.
I'd rather they do that.
Yeah,
I'd rather they do that. To be honest.
We have what Topstep does. Topstep in 2025 has sales tax coming out. Sorry, this is what we have to do. We've triggered it with sales tax is a line item. Everybody has to pay for it. We have sales tax that when you go to buy anything, we have to charge sales tax. And you'll see that probably more.
Remember that.
That's coming in 2025.
Yeah, we're going to get stopped out of this one.
We're good there for a second.
This is rough right now for shorts.
I don't want to move this stop. I think it should be at 328, really, but I don't want to move it. We set it where it was, and we're not going to move it.
I like that. Do you think we should have a risk limit that if once you set your stop, you can't move it? Somebody put that feedback in on risk limits. I don't know where it was at, but I grabbed it and I go, that's pretty interesting. You can only move it tighter. You can't move it wider.
Huh.
In chat, let us know, because if we're so much like
that's interesting. Yeah. Interesting to think about. What would the unintended consequences be?
the intended consequence is to do exactly what Jay is thinking he should do, but then his discipline just told him not to do. It helps you stay disciplined to your true first thing. This is something you would set, guys, your own. Would you use it? Would you, or maybe let's just do a poll.
So
I don't know.
That's an interesting thing, MP. Dakota was actually on the other day, and he took a trade where he was initially going to move his stop, and like you said, you're able to move it closer to the market. But then he decided that wasn't the right decision, and then moved it back. Would you be able to do that still, right? Where he said, "Hey, my stop should go here."
Yep. I think you're right. That's very good. If it stops 20 that you just said right now, and you said I think it should be 28 now, and we're already in the trade taking heat, you would have not have said that if we would have been in the money. We all know that. We're all traders. I would have said the same thing. I would have said, like what. So 20s was a stop. We all talked about that when we put the house account trade on this short, and then 28's what you talked about. But then you stayed convicted. We're like, but we're not going to do that. We're going to stay on the 20s. So it's going to allow you to stay on the 20s, and then if you want to move down to the 10s and down to the evens because it's trading 70s lower and you want to just trail it, but then you could also bring it all the way back to the 20s is what you're saying, and nothing higher?
The original.
I like that. The original.
Yeah.
Yeah. If they remember that, I don't know how the tech all works. If it remembers your last one, or anytime you move it as your new originating stop.
All right, I might be flipping long here at the end of this candle. We'll see how this candle closes. I might be flipping long, actually.
Okay.
So I don't know if people liked it or not.
The one thing I'll say, MP,
they did.
and you say with everything, there's people in the chat saying, "Oh, this is a great idea." There's people in the chat saying it's a terrible idea.
Yeah.
The one thing with all of the risk settings that we put out, it's an option. So if you think it's a terrible idea, you don't ever have to think about it.
Yep.
Right. Don't use it.
And you can't say that we're trying to hurt you or trying to cause you to fail on Topstep X at all. Everything in here is trying to set you up for the best success. You need help? We got it. Position limits or trade limits, trailing your
lockout.
This and that, and all that kind of stuff. Yep, lockout, all that kind of stuff. We know the issues we face every day, so let's try to build it in, and if it can help, and you can set it.
I am long, guys. I am long from 316.50. That's where my 316 is actually evens is where I'm actually long from.
How many times?
3 micros.
Thank you. Tim, along 3 micros, 22,316. What's your risk? Where's your stop?
Okay, so my stop is going to be, let's see, 16, so 241.5.
Okay.
Way down there.
My stops using micros. I like it. Jay, great point. If you don't want to use it, this is optional. All optional. Just giving you options at your disposal.
It's no different what they're doing. They're doing with cars, Dre. I mean, you want driver assist when keep you inside the lines, like press a button.
True.
It'll help you keep your car right there. I think it's annoying.
You and your analogies, man. You always got the analogies.
I was on my way to dinner with my wife. I'm like, how the hell? I go, for one to set it, and then I don't know. But I was trying it on her car.
Nice car. Drives itself.
I'd rather just get in the car, face each other. 4 people face each other with a table in between us, and just have a conversation while the car drives me to.
Going there. We're getting there.
Yeah,
I think that's the goal. All right, we got a little VIP update in the wings. We got the head coach of the Lunatics in the house, Mr. J himself, also the star of At the Buzzer. So if we want JD, let's do a quick little VIP update. I'm going to jump off for just 2 minutes, get some more water while they do that VIP update. We got 14 minutes left here in fast markets. Things are moving fast. Again, we got a house account trade on. We'll throw it to JD and Jay. Go ahead, guys.
What is up, guys? Coach Jay of the Lunatics. You're looking right at him. Coach Jay, what is happening today, my man? How you feeling?
What's going on, JD? Feeling good. How are you?
Very good. Thanks. We're gonna keep this real short and sweet. We're gonna do a super high level overview. If we could just pull up that Topstep VIP leaderboard real quick. We had a couple changes to some of the teams from yesterday. Coach Jay, you did lose one trader in the XFA yesterday. You had 4 traders in there yesterday. We lost Ronald L. Ronald L had a couple days of drawdown. Lost 950 yesterday, 2,300 last week, and that was about it. Hit that max loss limit after 6 days in the XFA. Never got eligible for a payout. Had 3 total winning days. Got real close. Put up a great fight. But shout out to Ronald. We'll see you back. I was just looking at his trade report. He's got a couple other open trading combines, so I'm sure we'll see him again. Other than that, Coach Jay, your pass rate is leading the league. 65% have passed the trading combine into the XFA, and you're number 2 in payouts by just a couple $100. 8,000 total in payouts for the Lunatics. A couple other things to note here. We had the Profiteers picked up 2 new traders in the XFA. They had 2 traders yesterday. They now have 4. Still no payouts for Coach Paul's Profiteers just yet, though. Those are the major changes from yesterday. Not a whole lot of movement on the board in the last 24 hours. Just a couple shifts in the XFA numbers. But Coach Jay, did you meet with the Lunatics yesterday? Did you guys talk about what to expect going into a Fed day or anything?
We're actually going to meet right after I get off of here. We had to move some things around because I was on fast markets yesterday. Looks like we just got stopped out of that house account trade. So we'll see whether or not moving that stop up to 328 was the right call. If it just blows right through it. But we'll be meeting right after this fast markets, JD.
Excellent. Make sure you have them all tuning in. We got David Green here for group coaching. We're going to go straight through to the Fed announcement up into the press conference and then some. I'm not positive where we're going to air the press conference, but yeah, make sure the Lunatics are tuning in. We're going to put on some live trades. We're going to see what happens when that announcement comes out. All right, guys, real quick. Said it would be short and sweet. That is short and sweet. Coach Jay, I'll catch you in a little bit. Everybody else, back to you.
Thanks, JD.
All right, so 28 is where we would have moved it.
Mm-hmm.
And let's just play the game that we did, and then we would know that we saved ourselves more.
Is it? But Tim did get lost.
Yeah, my target is actually 26.75. 326.75 for my first target here, and my second target will be 341.75.
And then 41.75. Yep.
Yeah, 341.75. Yep.
Boy, to the tick. I like your precision. If I may must say so myself, to the tick.
Coach Jay, your stats are solid. Coaching stats.
Yeah, man. They all credit to the traders
so far. I guess that's I don't know.
All credit to the traders who are placing trades. Again, I just hold up a mirror to them, try to get them to do what they say they're going to do. And, I don't want to try to change anybody's trading style or anything like that, unless they ask, right? Hey, coach, how do you read order flow? How do you use volume and things like that? But everyone pretty much came to me with their own trading styles. And it's not my job to change that, right? Everyone sees the markets differently. So just getting them to do what they say. Oh man. I think we just got
Jay.
your mind's racing now. The 28s would have not hit the 28s. You're right. Yeah.
Yeah, I know. All right.
Let it play out though. You'd still no matter what be in the trade.
Yep.
If we move to 28, so technically you wouldn't be out with any profit. So
right, we'd be down 8 points right now. So let's see.
Yep. We're out of the 20s, and you like that feeling that the fact it's out of the 20s.
Yep.
Yeah.
Last trade 22,
and going into the rest of the session, expecting the markets to potentially slow down a little bit here. Everyone's how much of a directional move are we going to see 2 hours before FOMC? Right, the markets slow down a little bit. We reviewed this in at the buzzer yesterday, where the last September FOMC meeting, there was a great trade early on, a really nice short, and then the markets consolidated for 2 hours before the decision. So that's kind of what we're going into now, which is why I like the short, right? We're up near the high of this range, near it, maybe not at the highs, right? 346, like Tim was saying, that value area high would have been extreme highs of the range. But we see we're starting to have kind of a topping pattern. This is the short we were looking for, just running out of momentum here.
This is our entry though, right here. Tim, you would have looked for 26s though, right? As an out. Were you getting out at 26?
Yeah. Yeah, 26.75 is what I'm looking for. but I could see it. That's the thing. Again, like with the way this is moving, I could see this actually pulling back into the range that we just came from. So yeah, we'll see how this plays out. Because just like Jay said, we're getting into the part of the day, especially on an FOMC day, where it's quieting down. Definitely once you get to like about noon Central time, it definitely gets super quiet and into the announcement. So not a lot of movement. So I could definitely see this just kind of chopping for the next couple hours potentially.
Hey, Dre, before we get off, did anybody do the Jared funny little ICT shirt gag thing on social?
Let's go take a look. Let's take a look.
Go take a look.
Let's go take a. I know Dolby said pray for our Twitter account if we do this, so we'll see if he did.
we're not posting it. I said, hey, anybody want to take a screenshot, have some fun with this?
We might be posted.
It's just
hit us. Yeah, pray for our Twitter account. That was very, very funny, unexpected. Hopefully it makes its way back to him. Get his thoughts. Hey, last trade 22,000, 3, 2, 1. Tim Long in the house right now. Well, not Long in the house. Long his account. Tim, great trading today, man. Oh wow, here we go. Look in the. Oh boy, look in the Slack, Michael. Look in the Slack. I love my new background. Look in the Slack. Oh, I definitely posted it. Dolby posted it. Oh boy.
Oh, hold on.
It's on the old Twitter.
Hold on. Oh wow. Ew, there it is. Oh, I definitely posted it. Oh, God, laughing.
Stay tuned. Yes, 100%. Stay tuned for Power Hour to come check out all those submissions from this morning. Again, hashtag Power Hour. Just up at TopstepTV. One more time, give us a like, give us a follow, click subscribe, share with your friends, share with your neighbors, share with your enemies. 6 minutes left here. We got a full day again. It is FOMC day, just like Tim was talking about. We're going to have a wall-to-wall coverage here on Top Step TV starting at 1 p.m. Central. We'll get the rate announcement. Again, a 99.1% probability of a 25 basis point cut. That is pretty much baked in. We're going to keep close language on what color tie he's wearing. No, I'm kidding. We're going to keep close eye on what he says in the press conference and how he answers questions moving into 2025. Obviously, he's going to say data dependent, dual mandate. Check off all those on your bingo card. But you're going to have to look into and see how many more rate cuts they are predicting for 2025. You guys remember coming into the year, they were predicting 7 rate cuts into 2024. And I think we're talking about this, and we've had 3 so far, and we're going to end up with a 4th today. So, we're making fun of 7 rate cuts. Yeah, they didn't get too far from that. So, it's a tough job to have.
You're right.
We like to goof on them and criticize them, of course. But yeah, from 7 to 4, everything being data dependent.
There's nobody that gets trolled more than the Feds.
Oh, yeah.
Wasn't the last FOMC like pretty muted? Like it was either the last one or the one before. It was like this, like just kind of super muted. It was just like not much movement at all.
That was
like the market.
That was election week. It was election week. So
that's right.
I think it was the day after the election. So I think markets cared a little bit more about something else.
That's right.
Where we saw that crazy rally, and then we just consolidated on FOMC day. Yeah.
Huh? Right, so make sure you stay tuned. Well, you guys, we're coming up close to appreciations. Now we got a full day.
Did you
we
get
got some shoulder tap.
Your target? Sorry, Dre. I've been cutting you off. I apologize. That's my first appreciation for you not yelling at me.
Who, me?
Just got target 1 there, or just got
well done.
Took out 2/3 of my position there. Thanks, man.
Nice. Good job.
So trading indeed for those 41s.
I hope this goes to 441 for you and doesn't stop right here, because then I'm going to really regret not moving that stop to 28. So let's just get another 100
I'm the same way.
Jay's
never been more of a
a bull.
Long goalie. Yeah,
I'm
big time bull right now.
I want to, let's just run.
2 all-time highs.
Well, it will help us. Like kind of, I like this type of thing because I'm doing the same thing you are. Trade's still in my head, If we would have done the 28s, where would we be? We would have not got out of the trade. It came down to our break even, and now it's back in the 20s. And the 20s is what we were talking about when I said we got out of the 20s, and you were liking. So the amount of emotions and thought process that goes on in trading is just incredible in the short time frame. And also what makes trading so damn hard.
All right, well, it's that time of the day where we do our appreciations. First, I'd like to throw it into the chat. Actually, before we do that, I'll do what we got coming up next. We got Jeannie coming up with the morning recap. We got the appreciation graph. I'd let that cook. Chat, we want to know what you're appreciative for. Again, this is the last full week of trading for 2024. It's crazy to think about. Coming up next, we got JD with the morning recap. He's going to give us our analysis and break down what we've seen this morning. Maybe give us a preview of what to expect coming up. And then 11:15 Central Time, dorm room trader Sergio makes his TV debut. A couple people making their TV debut. We got Tim. And we got Sergio making he's a master's student that's also working to launch a sparkling water brand. Ooh, very interesting. He made $1,600 trading the micro NASDAQs. So be sure to tune in for that. Again, dorm room trading in about 15 minutes. All right, appreciations. Chat, what do you guys appreciate for? Appreciate for MP. He's my hero. Oh, you're their hero, Michael.
Thanks.
Yeah, awesome. All right,
in this together.
We are in this together. Michael, I'll throw it to you last if you have something you are appreciative for. But first, I'm going to throw it to Tim. Tim, very, very glad you came on for. I know it's not your first Topstep TV appearance, but it's your first fast market appearance. So you did awesome today. It was an absolute pleasure trading with you. Great trading today, too, by the way. Give some love to the Rusty.
Oh, thank you.
Give us some love to the Rusty. Shout out to the Russell fans. Anyway,
Rusty's showing some love, man.
Yeah, man. What are you appreciative for on this Wednesday?
I'm grateful for this opportunity to be on here. Thank you all for having me. This is super cool. Just grateful to be on here. I'm also grateful to have people in my life who support me in doing this. My girlfriend and my mom are watching right now, so shout out to them. I'm grateful that the people in my life support me, and I'm just I feel really great about that, and it makes all of this much easier because then, even though they don't completely understand what it is that I do on here, they're like, well, we support you and, keep going. So I'm just really grateful for that too.
I mean, you crushed it today, Tim. Awesome work.
Tim.
Thanks,
Tim,
man.
and Tim's girlfriend. Awesome stuff. You got a good guy in your hands. It was awesome having him on here. You should be very proud. And yes, our significant others typically don't know what we do or what we're talking about. Hell, no one really in my family does. We just talk a bunch of jibber jabber, but they know. We know. We got each other. They're selling off here. Jay, I'm gonna throw it to you. Jay, what are you appreciative for besides the sell-off in the NASDAQ?
I'm appreciative of losing trades because they are information, right? If we could look at a loss, we can look at a loss as a loss of money, or we can look at it as information. I'm taking information from this trade and saying that the stop should go in a place where the market has not traded before. Coach Paul says it all the time on At the Buzzer, love your losers. Sometimes love is a hard thing to do because I hate you, but I love you. So I hate that we got stopped out of that trade, but I love the fact that it just gave us some information for the next one.
Yep.
And appreciate always jumping on here and trading with you guys.
Awesome. You the man. Make sure check them out, Coach Lunatics, as well as At the Buzzer after Power Hour every day. MP, what are you appreciative for on this Wednesday?
Well, I'll be off next week. I'll be on probably tomorrow. But like I'm as the year wraps up, the Topstep TV community, everybody in here is awesome. Even if we have some trolls every now and then, 99.9% uptime of awesomeness here. So that's what I appreciate because it was fun this year with Topstep TV. And all that good stuff. But Jerry, I need to ask you, what are you appreciative for?
I'm appreciative for how far this Topstep TV has come along, all the cool things that we've done, whether it's 100,000 subscribers, launching Topstep X, here for all the world to see, meeting cool guys. I said this, they asked the people for the social
a lot of people.
I'm appreciative for all the people, different races, different sexes, different religions from all across the globe that all come together here on Topstep and Topstep TV for their passion of trading. It's really cool. We got Nashville, we got New York, we got Riyadh, Saudi Arabia, we got London, England, Brooklyn. I mean, it's insane how we find all these people. Toronto now, Kansas City. They come from all across the globe just to come hang out and not be lonely in this journey, which is just so damn cool because we all know how lonely trading can be. So when we bring together, we're all in this together trying to make a couple bucks together. It's pretty damn cool. Australia in the house. Argentina in the house, Tucson in the house, Minnesota in the house, we got Israel in the house. You guys, This is TopstepTV Fast Markets. Let's freaking go.
Why Topstep? Because traders shouldn't have to risk everything to participate in the markets. And since 2012, we've provided capital to over 10,000 futures traders just like you. From the pits in Chicago to screens in over 143 countries, we've been motivated by one simple idea. We don't care who you are or where you learn to trade. If you pass Topstep's trading evaluation, you'll be invited to trade with our capital in a fully funded account. As a Topstep funded trader, you keep 90% of profits and we take the losses. We also offer educational resources for all levels, live classes, and free group coaching from a team with over a century of professional trading experience. We're invested in your success. So what are you waiting for? Ditch the brokerage account, start learning by doing, and become a Topstep funded trader today.
Good morning, friends and traders. I'm JD. This is your morning recap. We're going to talk a little bit about what has been happening in the market so far this morning and what our traders have been up to. We saw some decent trading out of Tim and Jared this morning. We took a trade in the house account. Didn't work out in our favor, but it is still early on in the day. We'll fight back from it. Good calls from Jay. Also, Coach Jay came in and nailed a couple really good calls in the NASDAQ. Let's take a look at our E-mini S&P 500 futures contract real quick. All right, in the market, the opening call, we mentioned right off the 5 o'clock Central Time open, came down, took out yesterday's low, rallied up, looked like we were going to open the morning with a gap higher. We were trading well above yesterday's range. Some reports came out at 7:30. Earlier this morning before the 8:30 Central Time bell. And we broke back down inside range, inside value from yesterday, creating this nice, almost perfect V-shaped formation here. This looks pretty textbook, doesn't it? Nice V-shaped formation. Rallied back up, took out the overnight high, and now we're just kind of bouncing around. We bounced off the 61.29 area, yesterday's volume point of control. We stopped. Bottom of our V formation was right at yesterday's value area low. We talked a little bit about that during the opening call too, finding acceptance back inside value from yesterday. You like to see them take a run at the previous day's value area low. Eventually, the previous day's low of the day. Didn't quite make it that far during regular trading hours, but came pretty close. And now we're setting up a nice, we're looking at a 5-minute chart. Setting up a nice little up channel here, heading into the FOMC announcement. So we're kind of right in the middle of that channel range right now. Pointing higher doesn't necessarily mean that we will be trading higher, but we're seeing volume drop off a little bit. We got 2 hours until that Fed announcement, and then an hour and a half until the Fed press conference. So there's a lot happening this afternoon. I can be pretty quiet. We might just be drifting higher or sideways until that announcement comes out. Let's take a look at the NASDAQ futures. Pretty same scenario. 5 o'clock open last night. Took out that previous day's low. Rallied. Looked like we were going to open with a gap higher. Didn't quite get as high as the S&P did. But we ended up opening the day inside range, inside value, making that V-shaped formation, printing the low of the day on just the second candle. Our initial balance low remains the low of the day in the NASDAQ. That price is at 22,211 and a quarter. This is regular trading hours. Pretty similar in the trade since then. Rallied up to, what is that? Yesterday's value area high. Bounced off that, came back down to yesterday's value area low. That's not yesterday's. Yesterday's low, 22,244, and sort of accelerated off of that again. Now we're bouncing, just sort of jockeying around settlement. This looks like it could be another choppy one ahead of the FOMC announcement. Again, that's at 1 o'clock Central Time, followed by the Fed Chairman press conference at 1:30 Central Time. We'll be talking through that. David Green's coming in for group coaching at 12:30. He's going to stay right through until I think he's here for the end of the day. He's going to be here for 2.5 hours today. So make sure you stick around for that. Let's take a look at crude oil real quick. This is a 30-minute chart. We're going to break it down to a 5-minute. So we had yesterday's V-shaped formation in crude oil. We got follow through this morning. We opened regular trading hours with a gap. We mentioned gap rules applying today. If you don't return to fill the gap in a timely manner, then you look for opportunities in the direction of the gap. And those opportunities were pretty fruitful in the crude oil market. If you were playing it from the long side, we called out a couple targets early on. We wanted to see 70.81 hit. That was a naked point of control from 70.81 was a naked point of control from last Wednesday, the 13th. Last Thursday. Came up there, just missed it. Really just missed it. Bounced right off that 80 level. 80 is the high in crude oil right now. So that was a good target area. Our next target after that would have been 71.40, our weekly kickoff high. So we're in during regular trading hours. We're in a pretty solid up channel, just like we were talking about with the equities. We're right at the bottom trend line of that channel right now. We could be seeing a little break of it, maybe a return to VWAP. We'll keep an eye on that. But buyers are in control in crude oil so far this morning. All right, gold. We didn't see much action in gold earlier. Here is our Dolby Dorito triangle. We tested the bottom trend line of this triangle again this morning. Let's scale down to a 5-minute chart. Get a closer look at today's action. So, double bottom at 26.49.70, which is last week's low. Tested last week's low twice, dropped just a tick below that, and bounced right off again. We're sort of just jockeying in between yesterday's low and yesterday's value area high, 26.56.30, yesterday's value area high. So really, just some sideways price action. But if we scale out a little bit to our 720 open, I should say, we've been playing with a nice healthy down channel, right? So we did just bounce off our midpoint of this down channel, drifting back towards 26.52, which is yesterday's volume point of control, 26.52.80. That'll be our next stop. If we keep moving, this could also just be a little bit of a tiny little bear flag on a 5-minute chart. This could actually be more of a little bit larger of a bear flag. But so far, all signals here pointing to me personally, my personal opinion, pointing to lower prices, unless something really violent happens in this 1 o'clock announcement. Maybe we see something we're not expecting. That's what the markets like to do, though. They like to fool us, do what we're not expecting, especially with equities. We say this all the time, and Hoag says it also. The equity markets are going to do what screws the most amount of people. The pain points trading those markets are deep, you know. You need to be able to hold on. You need to read the market, get out while you can, when you can, not hoping to get out if you can. So keep that in mind. Again, I'm going to keep repeating it. 1 o'clock FOMC announcement today, 1:30 Fed Chairman press conference. There's going to be some volatility during that time. It's probably going to be pretty quiet leading up to that. These next 2 hours are not the time to go blowing accounts. So just sit back, relax, wait for better trade opportunities. And when those numbers come out, we're going to be here trading live right alongside you. So make sure you stick around. All right, there is your morning recap for Wednesday, December 18th. I'm JD, TopstepTV. Let's go.
Topstep VIP is an experience unlike anything else in the trading industry. This exclusive opportunity gives a select group of traders a VIP shot at funding on us. Imagine getting the tools, support, and coaching you need to take your trading to the next level for free. With Topstep VIP, we'll set you up in a 100K Topstep X trading combine for free. Plus, we're giving you 6 free resets if you need them to help you stay on track. You'll also get exclusive access to our VIP Discord channel, where our performance coaches will be there to guide and support you every step of the way. And when you pass the combine, there are no activation fees. We'll activate your Express funded account for free. If you ever need assistance, our white glove trader support team will be there for you, making sure you have everything you need. As a Topstep VIP, you're getting something most traders would pay thousands of dollars for: personalized coaching and mentorship from the best in the business for free. Meet your VIP coaches. Coach J's Lunatics. Coach J brings 8 years of experience, including 2 years in Topstep trading combines and funded accounts. Coach Hoop's Pit Raiders. Coach Hoop spent nearly 14 years working at the CME. Coach Ray's Mindset Hunters. Coach Ray, aka Wildebeest Trader, brings 25 plus years of trading experience, specializing in futures since 2017. Coach Vince's Market Makers. Coach Vince brings 20 plus years of trading experience. Coach Paul's Profiteers. Coach Paul has over 40 years of trading experience, including 20 years of trading on the floor of the Chicago Board of Trade. These elite coaches have years of experience helping traders succeed, and you'll have direct access to them as part of your VIP experience. Want to be the next VIP trader? Make sure you stay tuned to Topstep TV for all the latest updates and details on how you could be selected for this game-changing opportunity.
Well, I hope you guys really like that little transition animation thing we had there. James, give credit to James for that one. We didn't know if that was fully going to work, and sure enough, it did. I thought that was very, very cool. Anyways, welcome to Dorm Room Traders. We got Sergio in the house joining us from Arizona, Dolby time as well in his log cabin. Let's get right to it. Sergio, first question I ask everyone making their TV debut. How did you find Topstep, and how did Topstep find you?
Well, I originally trade on TD Ameritrade with Charles Schwab's, and a friend of mine, he trades on Topstep, and he's like, "You should check it out. You don't have to use your own money, so if you make bad trades, then it won't really hurt you." I was like, "Okay, I'll check it out." I found it about 3 years ago, and it's been one of the best prop firms. I mean, it's kind of cool just because when I started, I was about 17 years old. I'm 27 now. I didn't really have prop firm. I didn't really understand what they were back then. I didn't even know they existed. So I usually had to work sales jobs and try to sell as much as I can to fund at least $1,000 into my account versus paying $50 here. It won't really hurt you versus $1,000 every paycheck was kind of tough when you're 17 and trying to pay for school. So
wait, what sales jobs did you have?
Yeah,
I had a bunch. I used to work at 24 Hour Fitness in California selling gyms. I used to work for a telecommunications company, Verizon Wireless, which was one of the best sales jobs I had, making about 6 figures. So 100K a year is what usually funded my obsession with these random stop sign.
Nice.
But yeah.
All right. Well, talk to us. You are a dorm room trader. You said you're 27, so you're a grad student. What university do you go to?
ASU is it right now. I'm trying to transfer to hopefully a bigger school like a UCLA or a more Ivy League school. UCLA, Wharton, or Harvard for mathematics. So
you're
the next 2 years I can transfer.
What are you studying?
Yeah, you're like.
So I originally had aerospace engineering, and now I want to go back and try to get my mathematics degree, and then with minor in finance, just so I can just dabble into quantum, just quantum algorithms, and try to be like the next Jim Simmons. Well, hopefully, it's kind of a high goal to reach to be Jim Simmons.
Wow, I think Andre understood about 5 of those words.
So yeah, he's smarter than both of us, Colby. He's smarter than both of us. So. Yeah, 100%. We're going to try to stay on your level. Maybe you're going to have to come down to our level, Sergio. But anyways, thank you for joining us here on Dorm Room Traders. We greatly appreciate it. Let's get to know Sergio, the trader. Tell us about what you trade, indicators, chart setups, all that good stuff so we get to know Sergio, the trader.
Sure thing. So I mostly trade NQ, ES, gold, and kind of dabble into Bitcoin. I don't really trade natural gas anymore. That was one of the ones I started with back in the day with inverse ETFs. So natural gas and oil and NQ, which was called TQQ and QQQ, were the inverse ETFs I would dabble in. When I was younger, I don't really use any indicators. I do like the VWAP. I used to use a lot of indicators when I first started just because, watching those YouTube videos when you were younger, it tells you to add everything down to SMAs, EMAs, VWAPs, MACD, RSI. I had I think 32 indicators and I couldn't see anything on my charts. So as of right now, I'm just mostly using higher time frames, using accumulation on the 15 and hourly. I'm still learning how to use order flow properly with a toss. I know that people like to use Bookmap. I like a toss better, just personal preference. And
what's toss? What is
so
that?
A toss is it's like Bookmap. So you're able to read footprint, order flow, tape, anything that you want. So
Sergio, I got a request from the producer. Can you try resharing your charts? They disappeared for a second. So if you want to use video and try to reshare them.
Sure thing.
Get your charts up. NASDAQ is doing its best Dorito impression currently, so not missing a ton of NASDAQ. I mean, it's like perfect Dorito.
S&P
is the one with all the seasoning on it and everything. I mean, look at that.
Look at that. Yeah, so Dow is. Go ahead, Sergio.
Oh no, my bad. Go ahead, do your thing.
No, I'm doing my thing because we got the S&Ps popping right now. NASDAQ kind of stuck right now, like Dolby was saying, and the Dow has popped as well. Last trade in the S&Ps, 61.45. We were about up 6 points in this 5-minute candle. Looking at the Dow, last trade, 44,187. Remember, Dow is on a 9-day losing streak. Looking to break that streak today, trying to be up on the day. We'll see if it happens. Stay tuned to the closing bell. Now we're watching this NASDAQ. Can it get out of this upper end of the channel, upper end of this range? Last trade in the NASDAQ, 22,318. Go ahead, Sergio. Did you get those charts squared away?
Yeah, it says it's sharing as of right now. I won't be able to place any trades. We're good. I was telling Gabe, I think it was Gabe, the gentleman I was speaking to last night. I was like, I don't know if I'll be able to trade because I'm going to try to finish my trades earlier in the day. I recently just blew an XFA account as well yesterday. It happens, I was telling him, it's kind of harder to do this, which is combines and XFAs, just because you're restricted to only 2,000 or 3,000 or whatever your risk limit is compared to a normal account where you're able to be more, I guess, risk averse or more aggressive. And I know my style may not be the best style or the perfect style or best fitting style for everyone. It's just what I've been accustomed to. And what I was telling him yesterday was it's really different, honestly, trading on these XFAs or combines, just because one, at the same time, you're not really thinking it's real. Two, at the same time, you're like, well, I can be more aggressive just because it's not my real money. And then three, your limits are different versus on a real account. You'd be like, if I have a $10,000 account, I was like, oh, I risk $1,000 and I trade 10%. You'd be like, well, that's a lot. It's like, not really if you average in. So when I'm mostly talking about these higher numbers, it's because you average in. So I guess in speaking terms with Topstep X, using MNQ and going with 2 MNQs, and then as your position grows, as it goes into 100 or 150 ticks, you start adding into the position. But yeah, I mean, I've completely passed this one today, and I was looking to trade NASDAQ, the NQ, and gold. I took the gold to trade off the short, and then NASDAQ, I took it off, or how do you say it? NQ, I guess, on here. I took it off this consolidation level right here.
What's the price?
Nice.
Oh, wow.
See a range.
Consolidation level here when it came back in. Yep. And then just took it to the swing high. So nothing crazy. I'm not like you guys. You guys are kind of crazy. You guys hold like, you guys say points, I think. So for every 1 tick, it's, for every 4 ticks, it's 1 point. So it's like 20, 50 points, 25 points, 40 points, give or take, is what I accomplish. And I usually just like to aim for swing highs or swing lows. So for example, if I was to enter here on this pullback after market open, I like to use 5 minute or 15 minutes and look for those swing highs. On the 15 minute, you really can't see it, but on the 5 minute time frame, you really can. So for me, I like to call them gas stations, like I was teaching my little sister. The swing highs are pretty much like gas stations. So in order for price to reach a specific level, they're like magnets, right? They try to reach a specific level, and if it has enough gas, like I would explain to my little sister, right, then it'll either break or retest and come back to a different level, collect more gas, and then break through that gas station. So swing highs and swing lows. So I only like to use 15 an hour, honestly, and I like all this. So accumulation based on me is just how I think people now call supply and demand. But for example, like this, these are pretty much high, at least for me. I'm kind of cracked out right now. Sorry, I'm like on 4 cups of jokes. I've been up all night training the London session.
You're on your caffeinated soda beverage right now.
Back up.
Yeah.
Why are you on 4 cups of Joe? Why are you on 4 cups of Joe? What's going on? Is this how you fuel? This is just speaking of gas stations.
Yeah.
Your Joe gas station.
Say that one more time.
No, you said you're on 4 cups of Joe. Do you typically drink 4 cups of coffee every morning, or is it just something staying up all night studying? Why 4 cups of coffee this morning?
I like to trade the London session. Usually the London direction for me tells me where most likely, not all the time, just because not everything is perfect in the NASDAQ. It's just kind of like unorthodox and just, it has its own little paradigm shift. But for me, I like to trade the London session and then see where price is moving and see if sentiment is closing strong above or below, and then take that consideration on the higher time frame, whether it be the 1 minute or the 5 minute, the 15 minute, or the hourly, and see where pretty much most orders will lie. And if it has a huge, like say for example, this right here, these swing lows, right, have just pretty much a bunch of buyers. And I'm kind of nervous, so I keep stuttering, and I apologize, but
you're good, man.
Yeah, so swing lows,
doing great.
All these swing lows and all these huge wicks pretty much show buyers in control, at least for me. Maybe wrong or maybe not. As you can see, when price moved up, swept this pretty much swing high up here on the 1 hour. Swept it, came back down, swept pretty much the low of the PM session. It never really reached the low of the day or the low of Sydney, but it did start showing the same thing. So accumulation came in. It failed to break or close below this whole box, and then as you trickle down to the 15 minute, you're able to see the exact same thing, right? So it never really actually broke out this range. So we trickled down one more time to the 5 minute, and then you see when market opened 9:30, it came down, swept, right, giving this like false sense of like, wow, sellers are in control. And a lot of people who trade, like I say, the market open or the bell open. I call them like the FOMO traders. They like to like, oh wow, look, there's like a huge area of supply right here, so they're going to short, and then minutes later after market open, it's going to reverse on them, and then the market's going to try to pretty much collect all the liquidity that it was collecting. So if it tries to run up pretty much Sydney and Australia for me, and then it just tanks itself, but it fails to close below pretty much high key levels on 15 or the hourly,
And for me, key levels are pretty much swing lows or swing highs that are respected across multiple time frames, mostly above 15 and hourly for me. And if they don't close or they don't sweep and they don't actually close below that price point, then it's just showing it's pretty much like the opposite, whether it be buyers or sellers have control, and it's going to reverse. I don't really like to hold trades for too long. 100 points is what I used to trade on. What's it called? TQQ. So same thing here, 100 ticks. A lot of people would be like, that's not a lot of money or it's not a lot of ticks. But for me, 100 ticks, if you do a one fold or 10 MNQs, that's $500 on a 50K account. That's 1%. I mean, you don't really need more than 1% a day to trade.
Dude, give it up. Give it up for Sergio in the chat, man. Absolutely nailing it, man. That was awesome what you just did right there. Taking another swig of coffee, hopefully. Look, that's a victory gulp right there for
that's
Sergio.
right.
Give it up for Sergio in the chat, man. That was awesome, awesome stuff. He is locked and loaded, ready to get into it. Man, that was awesome. David said that was money. Nice job, bro. Great. Chat's loving you, Sergio. Great job. All right, let's get into these markets, man. What are you seeing here in the NASDAQ? We got the house account. We don't want to put the pressure on you. The chat's loving you, dude. That was awesome. So let's get into this. Dolby time. What are we seeing here in the NASDAQ? We said Dorito, but Dolby, what are you seeing over there?
Big time Dorito, Dre. If we're just talking NASDAQ, let me get my little Dorito chip. Here we go. You can see it very, very clearly. Lower highs, higher lows. I even have my little like midpoint tool here. It's just a modified, I think, like fib extension. But the midpoint for this range today is like 22,300, and we're, I don't know, 5 or 6 points above it. This is a market waiting for news. Kind of felt it yesterday. Definitely feeling it today. FOMC is in an hour and a half. I have to assume big money's on the sidelines waiting. Risk is off for a lot of people. If you like scalping like 10, 20-point ranges, feel free. Just modify your risk. But it is very, very tight today. And it's going to be tough. It's a tough trade. Big news really slows down the market.
It does. Sergio, question for you in the chat. Sergio, do you look for long wicked candles as an entry level? From Kim. Kim asks, Sergio, do you look for long wicked candles as an entry level?
It all depends, honestly. It depends on what overall direction is. So you can't just be like, well, there's a long wick here and it's showing us a bunch of buyers. Because sometimes, if you may know, especially, let me back up just because I speak, I'm kind of all over the place, but I speak like unorthodox. So let me just start over. So like, you have to first understand direction. And if you don't understand direction and you're just being like, wow, look, if I go to the 1 hour, right? Wow, look, there's like a huge candle frame, candle wick right here, and I'm going to go long or I'm going to go short. Technically, you would have been correct. But entering on that price point, if we zoom in on this area, would that have been the best option? And depending on how heavy you're going in, whether it be on MNQs, which is most recommended on 50Ks or even 150Ks, no matter what account size you have, is it's better to start with the MNQs. I mean, and this is my perspective, and I may not know as much as everyone else on the chat, because they're all great traders like Mr. Dobie and Mr. Andre. But starting with MNQs and then slowly scaling into your account or slowly scaling into your trade would be the better option. But for myself, if we just see these huge wicks showing a lot of buyers, if the direction is short, and especially if you don't know what kind of week it is, because sometimes we have NFP week, sometimes we have, for example, we have Jerome week. Hopefully that pushes the markets down. That way we can find a great pullback. But we have Jerome week, right? Excuse me.
It's Jerome week.
We have a Jerome. Yeah. So FOMC in about, I guess, 30 minutes to an hour, right?
Hour and a half.
Hour and a half.
Hour and a half.
Oh, hour and a half. Sorry. Yeah, hour and a half. My time's a little off. So things can be a little unorthodox, meaning that price will be pretty much pulling back to certain areas and giving you like a fake out. Sometimes they're called bull traps or bear traps. So it's understanding. So if it was a normal day and there wasn't such like a unorthodox kind of news coming out or just heavy oil injection of or just overall just political news, right? Then yes, I would like to find pullbacks like this, right? Okay. Failing to break above key levels here, having a pullback, respecting it with a demand area, trickling down. So once we have our HTF, we go to like the 15 or 5, right? And seeing where the most liable area is. So for me, I like to use breaker structure. It's like a very simple thing that most people can like to use. It may be too simple, it may be dumb, but like the saying goes, if it's not broken, don't fix it. So
that's right.
For example, right around here on the 1, and sometimes I don't like to use the 1 just because it's a little too much information at once. But for example, right here, right? So we have that major pullback on the hour on the 15, as you can see, right? We have a failed, we have an engulfing back up. There's like a break, technically a small break of structure right here. So a break of structure just means like swing lows, whether it be on the 1 or 5 or 15, right? That's broken by a solid close of a candle, showing dominance. But the reason why I think this is fake, at least for the first 15 minutes of the market opening, is because what market normally likes to do, and you guys can backtest this and just don't take everything you hear online as true facts, backtest it and see if it's proven for yourself. But for me, the first 15 minutes of the market technically are always a liquidity grab or a injection. So what that means is the market will most likely, I guess about 60 to 70% of the time, if my analytics are correct, if it's a long day, market open will pull back, whether it be the first 15 minutes, half an hour, it'll pull back, give all these bears like a sentiment or a little, like, I guess like a little fish to like clamp on. It's like a little bait.
Yeah.
And then you grab onto it. Market will understand it. Exactly. Market will understand it. Find the price point, enter on, you can see that on order flow of the tape, and then start reversing on you just because you think, wow, look, market open, it's tanking short. The market's going to know that you're going to want to do that or whatever the hell. Excuse my language. And then eventually just return because the direction was long. So that's what I mostly like to understand. So here's a break.
That was incredible.
Right? We finally
keep going.
Sorry. Yeah.
Keep going. This is awesome.
Break right
Let
here.
him cook.
Right. So we have a swing high right here, right? And then we failed to break it above it. So we have a small pullback and then right around here. So technically my entry was right around here. The reason being was we have failed. And then this little candle, as I call it, bullish reversal, was still a weak bullish reversal just because of the way that it closed. And I'm really good at reading candles, or I like to think I'm really good at reading candles, just because the candles tell a story that most people don't want to read or don't want to understand. So this candle itself, so again, long direction, failed. If this candle would have closed strong, then we would have seen a potential pullback to this area, which is another swing low, and then potentially sweeping this, which would have been a more optimal level, which is the low of the candle. But we didn't, right? We had still learning how to use this thing. We had a pullback, a bullish engulfing, change of structure, right? Failure of the sellers to gain control, so seller's exhaustion, right? Reversal, fake out, engulfing, swing high, failed to break, came back down, bullish reversal. So entered, my stops were here, and if I wanted to be more aggressive, then I would move it to here. And my first target was here. And then once it hit, I was done for the day. It hit my target. I passed the account, and then hopefully on the XFA, I can do the same thing, and I'd be a complete goofball and mess up. So that's pretty much it, honestly. But for another break of structure, like right here, if we move to the 5-minute time frame in that little consolidation area, which is right here, there's a micro one, which is kind of hard to see. And again, this may be a little unorthodox. So swing high. So for people who know swing highs, it's just a higher high, and then left and right are lower highs. Lower high. So it makes kind of like a U. So if I was to draw this out, I don't really have a drawing tool. Right here. So N's are swing highs and U's are swing lows. So the easiest way, I was teaching my little sister who's like 16 years old, right? So it's the lowest low, right? And then the left and right are higher lows. It makes a U, and then that low is a swing low, and then highs is the high, lower high and lower high. The highest high is a swing high. So we remove all that and then just get into it. Right here,
for NASDAQ.
Right?
Yeah, we're selling off.
Right here, we have a little bit bailout. So run up, failed to break this high, came right back into it, and that's where my entry would have been. Again, if I wanted to stack again. So that's a break of structure entry. And you can see, again, it's always about having your direction in mind. So we have a bunch of buyers in here, a bunch of buyers in here, and if you take it one more step down, trickle down right here. So failed on the 1 minute, right? We see a bunch of sellers coming in, but it's not really coming in. It's just exhaustion. We don't have enough gas or volume or liquidity, whatever you want to call it, to actually break the opening bell ring. Came back down, failed to break around the swing high, right? And then it's really hard to enter how I enter. Not really, just because I limit order this, and then my risk would have been, again, if I was to enter again, down to here, right, where it's like a little liquidity grab, or I guess more buyers. And then again, target A, and then just go into higher time frames if I wanted to hold it, and then start targeting, different swing highs. So if we entered again here, then here's one, and then so there's none here, right? We have a little failed breakout right there, on the 15 probably, right? And then we won't have any. So for myself at this point, we're like, well, what can you reach for at this point? If there's no swing highs or swing lows on the 5 or 15, then we're going to use pretty much an unorthodox way of seeing where liquidity was mostly grabbed, which is around here, right? Which all these buyers. It's a nice little area. If we move to the right, that's where exactly I would have mostly liked to target. So if we entered here and here, then I'm going to target A and then potentially be into this area and to see if we break. We broke out of it. So at that point, I wouldn't really care if it broke out of it, just because we hit our target profit. then who cares after that? And that's what I want most people to understand. Even I'm still learning to understand. I'm not great enough, and I recognize that, to hold trades for the whole day or range it. I'm more like Mo. Mr. Mo is a cool trader. I don't consider myself a scalper, but I like to hit 100 to 150 points. I know people are like, but you're leaving so much on the table. It's not about leaving so much on the table, like Topstep advertises. It's not about making money. It's about keeping. It's about it's not about profit. It's about preserving capital. So that's my little rant.
That was awesome, man. Sergio, bravo. Let's do a recap on the markets. We did see some selling here in the S&Ps. S&Ps did bottom out. Kiss VWAP 61.35. Last trade 61.41. Go ahead, Dolby. What were you going to say?
Sergio, I need to talk because I love talking, being on air. It's part of it. So I got some questions for you, Sergio. First off, you said you lost your Express funded account. What does it look like when you are losing an Express funded account?
Well, I'm kind of emotionless. I like Mr. Dakota just because he's like emotionally dead inside, like myself. It's really frustrating. It is, but it's like in the meantime when you're actually in the, he's probably like, "What the hell is this kid?"
I love that. Emotionally dead.
Myself, I lost it. So when I lost it, I was just like, there's things that I can reflect on, and I like to keep a lot of sticky notes around my area, or even just like keep everything into data, right? So if I want to be like one of the greater hedge funds and quantum analysts, you have to collect data. So for example, yes, I blew the account. Yes, it sucks. You have to do it all over again. But who cares? I mean, this is a part of the process. I know some people want to grab onto whatever prop firms or put into like Wall Street bets and just YOLO everything. And it's like, you understand, it's like I think everyone on here always says it's this marathon, not a sprint. So when I lost the account, I took down all the trades, and I like to record myself with OBS.
Nice. So
record the whole thing. Yeah, it's a pretty cool tool. Record the whole thing, and then what I do afterwards is after my session, probably like around 6 p.m. my time, I watch it back, whether it be 45 minutes to an hour, and I try to take notes on what I did wrong. And you can pretty much see your emotions come through, no matter how we try to, I guess, be stoic about it or even control about it. You can eventually just see it. You know, even if you have a dead face, you can see your eyes, you can see your hands being anxious. And the best thing to do, I guess, for myself is backtest what you lost from it and see what you could have improved. Were you too patient? Were you entering full margin off, market open? Is news going to come out in 5 seconds and you're like, you know what, I'm going to put a limit order when you should have just waited probably 30 minutes before that or 20 minutes afterwards. And for me, it's mostly like, what could I have done better and what can I improve better? And it's just that 1%. I know it's very cliche and very like, everyone says that, but it's just the truth, like 1% better every single day is what makes you a better trader. And it's not about making millions of dollars or buying a Lambo. It's about how long can I stay in this game, about being profitable. And it's not about winning every single day. It's month over month, whether you make $20 or $20,000. Was it green? Were you following your criteria? Were you following your systems? Or were you emotionful and just being like, okay, well, I was anxious. Why? Well, my trade was too heavy. Okay, cool. Well, I'm scared. Why are you scared? Well, I have no plan. Okay, cool. And then so everything can be combated with a plan, like sizing, positions, a plan, entering and exit, and just overall strategy. If you have it, you can combat every emotion with every one of single those things. I always say, but that's just a little thing. I don't know if I answered that question. I usually rant.
Go ahead, Dolby.
I got a follow-up question as well. You said that you were teaching your 16-year-old sister how to trade.
Yeah.
What have you learned maybe about your strategy or about yourself in teaching someone else your system?
Great question, man.
Well, my business mentor, he always said, you're not great at anything until you can teach anyone on any specific educational level or any background, whether they speak your language or not, whether they went to college or not, whether they're in your niche of work or not. If you can simplify it down to the simplest terms, then you're able to teach people. And what I understand from my sister was a little project for her where they gave her like a SIM account she's on an AP or IB. She's in college now, I think 17.
She's in college?
She gave her a SIM account. Yeah, she goes to Cal Poly Pomona.
At 17?
She was like part of this GATE program. Yeah, she's part of this GATE program in California. It just means that you're smart enough that you can, take advanced levels. But anyways, yeah. So what I learned from it was learning to reframe things into a different perspective of how how different people's minds works, kind of reflects it on yourself. So, for example, if I know it as 1 + 1 = 2, and that's all I've been taught and that's all I've learned, but for her or for anyone else you're looking to show, 1 + 1 for some reason doesn't make sense, but for her it's 4 - 2, and you still get the same answer. Seeing outside the box or being outside your perspective gives you a better insight. You'd be like, okay, well, if I learn it like this, and you just step out of your time frame or you step out of your box for a bit and be like, if I do it like this instead, it's the same way of doing it, and it's the same way of doing it. We get the same results, but I'm able to look at it a different perspective. Then you might be able to, I guess, improve. And I don't even know if I'm answering the question at this point. I'm like losing myself in this question. But I guess it just makes you a better trader, because if you can't teach someone what you know, then do you really know the subject? I guess that's what I was trying to say.
Yeah. I think Dre still might be trying to do the calculations for 4 - 2 right now.
That blew my mind. 1 + 1 = 2, but so does 4 - 2. 2 times.
Dude, how does that work?
2 times 1. 2 times 1
How does
also
that
equals
work?
2. That was fascinating. This is you're
that better not be on the series.
17,
I don't know if
18
I-
is the
that
typical age for college. No, it's not. It's 18 to 19. 17-year-olds are very rare in college. Sorry, Adrian, whoever said that. Oh, the know-it-alls in chat. Yeah, what would we do without you? Anyways,
chat's
really
spicy
quick.
today.
I know. It's just okay. Yes, I'm fascinated by this. Him and his family. Sorry, Chat's jumping on my ass. Get out of here. Anyways, we're selling off here in the ES 61.36 last trade. Looking at the NQ 22.285 last trade. Keep in mind we do have we've got group coaching coming up. I think we got JD and what else? We got JD.
Wait, are we done already, Dre?
David Green. Yes, let's get that group coach. It'll be an abbreviated group coaching because we do have FOMC at 1 p.m. Central. Let's make sure to get those. We'll pin the link to the top of the chat. Get those group coaching questions in. We'll have the form pinned to the top of the chat. Also, I do want to say, we do on this day come. Man, this went by fast. We're going to have you back on. Also, Sergio, when you're not trading, tell us about the sparkling water company you're launching. Get a load of this, guys. How about this? You guys didn't know about this part. Sparkling water company. Tell us, Sergio. Go ahead. Let's plug this thing.
Yeah, it's put me on blast. Okay, it was supposed to be a secret, and I was supposed to send it to you guys, and you guys like advertise it. It was supposed to be a faceless company, but yeah. So long time ago, I went to. Let me just concise everything real quick. For like my 4 cups of Joe, that's actually diluted down a lot. I used to drink energy drinks, like 2 to 3 a day, and then have a cup of coffee at night, and try to stay up on London and just try to grind it out for years when I was younger, until like I was 23 at my peak of, I guess, my career. It just started going downhill, and my health went downhill with it. Like taking care of your mental health and overall health is very important as an investor or a trader. Excuse me. And I ended up going to the hospital just because half my face was starting to go numb, and my left foot was starting to freak out, and I couldn't feel my arm anymore.
Whoa.
So I drove to the hospital with my brother, and I eventually couldn't feel my right hand either. So I pulled over to the other side of the road, almost killed all of us. And he took me to the hospital, gave me a whole thing, and it's just like your cortisol levels are through the roof, and you have to actually sleep. Because I was sleeping around 4 to 5 hours a day, and then on top of that, having all the stress from school, work, and drinking excessive coffee. So I was like, okay, well, the doctor's like, if you continue this, you're gonna have a stroke. I was like, very cool, thank you so much.
Very cool.
And I was like, okay,
thank you.
So how can we supplement? I know there's other companies out there that do the exact same thing, but it's like, how can we just change it? And it's like, okay, I'm gonna start a sparkling water company, and we're gonna just try to like do the same benefits, right? So we're gonna release electrolytes into it, and then caffeine, and as well as like what's called lion's mane to keep you focused. So if everything comes from organic, there's no artificial flavoring, there's no sugar. All the flavor just comes from the actual condensed juices, and then even the caffeine isn't artificial. It comes from guarana, specific seed, and then we put L-theanine in it, which comes from green tea. But we refined it and extracted so much that you can't even taste the green tea. So that gives you focus. And we added B6 and B12 to actually help the metabolism of your energy and stabilize everything. So at the end of the day, it's like 50 grams. Or excuse me, not 50 grams, 50 milligrams of caffeine.
What to say?
It's just supposed to be like while you're drinking. Yeah. So it's not Celsius.
Will this get rid of the jitters that I get from drinking coffee? Because that's why I can't drink caffeinated coffee, because I get the jitters. Will this eliminate that?
Yeah. It will. Just because you have to have some components of it. So when you're having jitters, if you have B6 and B12, so like right now I just take B12 gummies in general.
Really?
But what B12 is it's energy itself. But what it does is it helps metabolize the actual caffeine, so it doesn't give you the jitters. And the L-theanine on top of that is what keeps you focused as well. So it combats the actual jitters as well. And then keeping yourself hydrated with the electrolytes that we're putting into it will combat all of that, just because caffeine does actually dehydrate you a little bit. So putting the actual or the electrolytes in there to combat that while giving you a soft energy boost, natural energy boost that your body can actually adapt into. And then those 6 electrolytes that we put into, we refine them, and we had to do, like, for example, instead of sodium, citrate, and so on and so forth, magnesium citrate. That way it's called like biovitamins or bioavailability, which means like how much the body can actually absorb into those vitamins. Because all of you are like, we have 100,000 electrolytes. It's like, well, can your body actually absorb that? Can this person actually absorb that? Can it be for everyone? And so on and so forth. So yeah.
Wow.
Man, that's incredible.
Wow is right.
We definitely want some samples at the Topstep office.
You come back.
Dre and I will do a
um,
taste test. We'll give an honest review.
100%. Look at that.
I
Chat
appreciate
saying, where can I buy
it. I would
this?
love to
Mark
thank
me
you.
down for 12 cases. This guy is speaking my language. I'll take 12 more cases. So far, so Sergio, make sure you send those
Girl
our
Scout
way.
cookies?
Yes, absolutely.
I will.
With that being said, hey, Sergio, real quick, we're going to do a little bit of a history lesson here because we like to do that during dorm room traders. We're here in class. We got the professor. Hell, you're the actual professor today. Anyways, I'm going to throw it to my main man, James. James, what happened on this day in history?
That's right, Andre. The day, December 18th, the year 1620, the on this day event in history. The Mayflower arrives in the New World. December 18th, 1620, with the English ship Mayflower anchored in Plymouth Harbor, Massachusetts, a small party of sailors from the vessel go ashore, and its passengers prepare to begin their new settlement, Plymouth Colony. So the famous story began in 1606, when a group of reform-minded separatists in Nottinghamshire, England, founded their own church separate from the state-sanctioned Church of England. A lot of bad things transpired. They were accused of treason and forced to leave the country and settle in a more tolerant Netherlands. 12 years later, not having a good time, they sought financial backing from some London merchants to set up a colony in America. On September 6, 102 passengers, dubbed Pilgrims, they would go on the crowded Mayflower to begin the long, hard journey to the life in the New World. Dolby, Andre, can you imagine getting crammed into a ship like this?
No, that'd be awful.
No. Andre and I
There's
are
no
too pretty for that, James.
1620, you don't have a phone. What are you going to look at for all that time? You know how long it takes to sail to America? No phone, no
shower.
What do you even do?
No air conditioning, no heat.
Scurvy?
No coffee for Sergio. No, and then
It's pretty bad.
welcome. I'm sure they're welcome.
Up and they're like, "Hey, new life, get on board." No, I'm good. I'm good here. I'll make do.
I'm sure they were welcomed with open arms too, and they just showed up this new territory and just started. Yeah. Anyways.
Showed up and said, "This is mine now. Thank you for holding it for me."
Yeah, I mean, then there's that whole part. But anyways, yes, thank
on
you,
this
James.
day in history, back to you.
No Starlink. Yes, Dead Cat Bounce. No Starlink.
No Starlink.
Indeed.
On that one.
Colby has a Starlink out there. All right, so right now it looks like no trading. Sergio, will you be trading the FOMC? I know you've been doing a marathon trading session. Will you trade the news?
Probably after at 11:30, but not on Topstep X just because I'm locked out. I hit my daily profit goal, 53,000 past. Probably on Schwab's, and I'll probably dilute probably only to like $10,000 the entry versus what I'm normally going in at, and just trying to see what it'll do. Just because 11, it's just mostly fear or FOMO or greed from all people, so it just starts going crazy with anticipation of what Mr. Jerome, hopefully his shorts, start speaking. And at 11:30, probably 10-15 minutes afterwards, after everyone just gets completely annihilated and screwed by the market, see if there's a potential opportunity to go in for a small 50 to 60 point not point tick, excuse me, scalp. So we'll see.
Sergio, just in case we don't see you by the end of the year, what are some of your trading goals at Topstep for 2025?
For 2025, I would like to, if the chat and everyone would like me to see me be back on here, would like to be on here, would like to be on the leaderboard and take it more serious on here, and hopefully break my previous record from 2023. And pretty much it. Hope happy, health, good family. Just that's pretty much it.
Man, Sergio.
That's awesome.
Sergio.
Also, you're definitely coming back, so you don't have to worry about that.
Yeah, you're definitely coming. Yes. When do you think you're going to be launching the drink?
In January. So in January, we'll be releasing it, and I'm going to be sponsoring some events in California, in Arizona, in Seattle, and in New York. And TopstepTV. Yeah, I'm going to be sending it out to all you guys. And I forgot to say, it's in a glass bottle. It's in a recyclable glass bottle, and then the cap is biodegradable. So you guys can reuse the glass as much as you want, and then even if throw it away or recycle it, that way it's like environmentally friendly. So yeah.
You be sure to send us a case of that, and we will be happy. Do you want to tell us the name yet, or do you want to save that for the launch?
I'll save that for the launch. It's pretty cool though.
Excellent. Awesome. Now you got me excited. The anticipation is building. So January, end of January, early February, you make sure to send that to us, and we will do a taste test. We'll have you back on here, talk to us about your trading, talk to us about the drink, and break down some more trading. But yes, this has been absolutely all right. So what do you think going into the market here, Sergio? What do you think? Thoughts? You sit on your hands. Any price levels? I didn't even ask you. Any levels you like for NQ, or is it just sit and wait right now?
For NQ as of right now, it's what 10:52 to 8 minutes. Still an hour, I'm guessing, or 30 minutes. What is it? Time is it? 8 minutes, right? I don't really know.
Yeah.
It says at 11.
FOMC is an hour and 8 minutes. FOMC is an hour.
Okay, an hour and 8 minutes. Yeah, because I'm like, you guys are CT, I'm MST, and then my charts are like New York based. So it's like I have 3 different times I'm looking at. Okay, so in an hour. So what I'm looking to do is hopefully that once the first part, which is just like the actual release of the news, comes out, that the market will probably finally try to take out these swing lows, these major swing lows, like we failed.
What price you got?
At this price point, it'll probably be 22,206 flat. Hopefully sweep that level and come back up and try to see if we can make all-time highs. If it doesn't, then since we have a lot of buyers coming in, as you can see on the hourly, even on the 15, we're failing to actually break below this whole area right here. If I can just mark it out. I don't have to mark it out with this, right?
Say 206, Bobby.
Yeah, 22,206.
I may be wrong, right? So if we're looking to go long, I would like for this thing to short, potentially take out 200 or 22,251 and 75. And if it is extreme, just because it is FOMC, then take out the 212 and then 200. What is that? 206, 205 level. So we have those incremental levels, and depending on what's going to see, potentially go long and then try to target pretty much the high of this. Pretty much, I don't know if that was London or not. I think it was, but yeah, try to target this level since we're showing a lot of buyers. But we'll see. I mean, it's kind of hard to pinpoint where the market will go on FOMC because they can release positive news or cutting the interest rates, and the market will still tank. Or the market will go rise. Yep. It just all depends on how, I guess, the market interprets that, whether that be good, bad. Monetary policies are always kind of tricky. A lot of people will be like, oh, I know how to trade FOMC. And it's like, if you really understand it, can you really trade FOMC understanding whether they cut or raise interest rates, just because there's a lot more factors are going into it than just price point. It's economical factors. It's either going to raise or weaken the dollar. And if it does weaken the dollar or strengthen the dollar, how is that currently with our current inflation? And then just taking into like consideration of like the NQ with like these top companies that are, well, if they raise or cut interest rates, is it going to be with inflation? It's going to be more expensive to borrow money, which then like it'll cause like the NQ to like fall back. It just causes like a whole like just mathematical equation. It just causes like a
domino effect. All right, well, we got 3 more minutes here. Is your sister smarter than you are at the age of 17, sir?
Say that again.
Is your sister smarter than you at the age of when you were at the age of 17? You're teaching her how to trade.
I mean, I feel like, 100%. I feel like every generation gets smarter just because, like, depending on the school and then what they're learning, she's 100% smarter than me for sure.
Awesome stuff. Is anyone watching?
She's a great teacher.
Yes, she did, man. This was an absolute pleasure today. We're having a hell of an episode today of TopstepTV. It's been a lot of fun. Is anyone watching today, Sergio, that you'd like to say hi to?
I mean, I don't know if anyone's watching, but to all my friends, I guess, all my friends and family, and then everyone in the chat. Hope everyone's in the chat's having a positive day. Hope everyone got their profit targets hit. no stop losses and no blown accounts. And then just thanks for having me on, guys.
Oh, wait, can we follow you on socials? Do you have socials for trading stuff or for personal?
It's a little bit both. I don't really post anything on there anymore. It's just investor, NBSTR Surge, SERG. So investor Surge.
On which one? Oh, you did.
Yeah,
cool.
Investor Surge. Well, that was absolutely exhilarating. This first half of Topstep TV has just been absolutely incredible. Mikey, okay, so what did I miss? Oh, Mike, you got to go back and watch this episode. But still, you got to stay with us because we do have FOMC decision imminent in 1 hour and 4 minutes. We got some shoulder tap and group coaching coming up next. And we got the wall-to-wall coverage from the release to the statement to the presser, the Q&A session. Anyways, that's all for us right now. We'll see you later on this afternoon. Sergio, leave us with some words of wisdom before we get out of here.
I mean, the only thing that I would say to everyone in the chat, to all you guys, pretty much every trader out there, is think about it long term, right? I like to say to myself and every one of my friends who's involved in like the finance industry, consider yourself an investor and not a trader. Investors like to look at pretty much long term, like the longevity of what their overall investments will be. And if the investment's in yourself, then try to get better, right? Get smarter, get healthier, get fitter. Read more books about pretty much how to control your emotions. I know some people in the chat are like, what books would you recommend? I mean, there's a variety of them. A great one for trading, I think, would be called The Compound Effect by Darren Hardy. That's a great one. And then 0 to 1 by Peter Thiel. Those are great books to read, which has nothing to do with trading, but everything to do with your psychology. So with those books and overall, just have a plan, entering and exiting, and don't be chasing the next shiny object, right? Don't be chasing the next, if you're trading NQ and natural gas, but we have a great trader on Topstep that's trading like Bitcoin and he's making like thousands of dollars, and you're like, maybe I should try Bitcoin, and you just blow your account. Stick with what you know, 1 or 2, 3 instruments, and then put alerts and just follow a small step. Don't try to have runners if you don't know how to run, and then don't aim for 1,000 points if you've never made 50 points consistently.
Man. Dolby, we went to school there.
Dude, amazing.
We were in the dorm room. He was the professor.
We were students.
That was incredible.
100%.
Sergio Dolby, he was cooking today. Anyways, we got shoulder tap and group coaching coming up next. We got FOMC decision. It's also a David Green Wednesday. See what's up with David Green. He has been with us in a couple of weeks. We'll see how the vacation was and what his thoughts are on the Fed. Anyways, shoulder tap coming up next. Topstep TV. What a morning so far. Let's go.
How do you manage your emotions in trading? Are you taking anything from the ski, like professionalizing your mindset to get that in the right spot that you've done over the last 20 years?
Yeah.
To do anything and bring it over to the trading world?
Yeah, I mean...
You meditate, right?
Yeah, I'm meditating, and exactly that. Because you're not going to have a great day every day in trading. Like you said, it's a love-hate business, and it's the same thing with skiing. It's a love-hate business. Not every day is going to be the most beautiful, sunny, slushy day.
Yeah.
There's a lot of days that are super icy, and you don't want to put your body on the line.
Yeah. And conditions of the day change and all that kind of stuff.
Exactly.
Yeah, you got to adapt. Yeah.
Exactly.
Welcome back, friends and traders. It is time for the shoulder tap. It's that time of day where we start picking on traders for doing dumb things in the markets. Mick handpicks them himself. But we also talk about good things that happen on the market too. Mick, what's going on today? You got some trader shout outs before we start dogging these traders?
I've got some shout outs, and don't make me out to be a bully, John. I mean, let's take a step back here. We will give shout outs and we will give shoulder taps. That's what the risk managers do. They tap you on the shoulder. It's been a thing whether you were in the trading pit or up in an office with a prop group. You get the shoulder tap. I've gotten it myself before via phone call. Yeah, I mean, we talk about good trading, poor trading, areas for improvement, and things that are good, but we're not trying to blast anybody. Now, I do get a little carried away sometimes because I take some of this trading personally, especially with the traders I've worked with. But the negative stuff is not intended to just roast anybody. It is intended to share what some people are doing that they should be doing differently, in order for our viewers and everybody to kind of learn from other people's mistakes, because this is certainly a business where you don't come into it and perform just well and have no issues. Maybe there's some exceptions to that. Someone who comes to a firm that specializes in a certain strategy and they tell you what to do and you follow that to a T. That's one thing. But for people that are bringing their own strategy, that's a different story. So I've found my own progression in trading was learning from all the frickin' mistakes I had made in the past, John. Never had the magic potion, but eventually I got very good at not replicating mistakes that I was making and bringing some consistency to my trading. And that's what, this is all about when we share the negative performance. As far as markets go and trading today, not a much to share in the markets themselves, which correlates to, the P&Ls that we're seeing. Nothing on the huge side of thing. I think our leader on the live accounts today so far is up like $6,400. That's Manavendra, and we're going to talk about him in the first card. So small P&Ls to rattle off, and take small with a grain of salt. I mean, $6,400 to Manavendra. Sebastian's up 5,900, Eric up 4,900, Daniel 4,200. These are not small P&Ls, but with how many live traders we've got, we can usually be sharing some 5-figure winning days. On the flip side, there's a lot of red on the boards. Today is a tough day. Not much in the way of a trend or anything like that. In these March contracts around the equity indices. So I think we just kind of dive into the trading cards. And let's start with Manavendra.
Let's do
the
it.
Person I mentioned who's our top trader today. So let me get myself situated. Definitely a shout out. Happy's up, the $6,400 today. This trading card is made up of 17 days spent in his live account. So, relatively new, but not too freshman in the live account. His trading brings a net P&L of $630 a day. Not too bad. Trading the S&Ps and the NASDAQ. 47% winning days. And this is the stuff that I like. Even though he's only right about half the time, his best winning day of 5,000, almost $5,100 is 5 times bigger than his biggest losing day. He's got that $50K account with the $1,000 daily loss limit, which I like. When you've got someone who's limiting their losses to $1,000, yet they can take $5,000 out on any given day. That's a recipe for success if they can put up, half of the winning days or something like that. But even more, something that I put more value on is not just the best day and the worst day, because best days can be anomalies. It's the that average winning day of 2,500 versus the average losing day of about $1,035. So why I like that is he's making 2.5 times more on his winning days than he's risking on his losing days. So only having 50% winning days, that's what really helps there. And then same goes for, it's a similar situation on a per trade basis with 50% winning trades only. I like that this trader is very selective, only 2 trades a day. They're doing anywhere from 1 to 5 contracts. But while I like that, I also like equally the 2-to-1 risk reward. It's a little bit better than 2-to-1 actually. On a per contract basis, they're making $1,177 on their winners, and they're only risking $490 on the losers. So that's really good. Those bigger numbers, on a per contract basis, almost $1,200 on the winning contracts. That tells you that, they're holding these trades for a little bit of time too. They're riding out, catching a piece of the trend for the day. So what does that pan out to actually? Yeah, Manavendra, winning trade duration, 3 hours and 18 minutes, where the losing trade duration, 2 hours and 41 minutes. So they're not in here scalping. They're being very selective with the trades that they're taking, which, it all correlates to, if I'm only looking to take 2 trades a day or 1 trade a day, I'm going to be selective. I'm going to look to maximize that reward over my risk, and I'm going to hold the trade for a little bit. And, for the numbers that he's putting up, average winning day in the 4-figure range of 2,500 and, losing about $1,000 a day on the losses, you can compare that to a trader that trades bigger size on a shorter time frame. Someone who might scalp 10 lots in and out on a short time frame might end up be putting up similar days to, someone who trades small and then rides out and catches a piece of the trend for the day. This is more my style of trading. I found, metrics along these lines with the holds and selective trade opportunities that are taken to be more my style. And I've, every time I've looked at a trade report where a trader is more like this than a scalper who's a busybody, in and out, a lot of round turns a day on size. Overall, this is the performance that stands out, and this is the performance that can last a longer period of time. So I like this a lot. And I also like that on these winning days that Manavendra is putting up, it's like he ends his winning days as winning days. There are no days that he's up a couple $1,000 and then hits that daily loss limit. So it's a really good money management from this guy on his account. And it also tells me that he's framing, not only is he, doing well with the trades and being selective, these trades are absolutely getting framed out. Before he gets in and enters the trade, his entry, he's framing out where he's going to get out if he's wrong and where he's getting out if he's right. And if it goes to, his take profit, as we call it, or this profit target, the level that he wants to get out, he's locking it in and he's walking away. So there's, no emotions around, wanting to put up larger days. He takes what the market can give him. Some of these winning days are, there's a $200 winning day. There's a $700 winning day. Then there's that $5,000 winning day. I'm not seeing any greed on this trade report. What were you going to say, John?
Oh, I just know he's got 3 $5,000 winning days. I'm looking at one in particular on December 11th, where he made 1 trade, 4 contracts. He was trading 2 lots, held that trade for 11 hours for a $5,000 profit. I'm looking at my chart right now, what happened on December 11th. It was a straight up day. So Manavendra just came in the middle of the night, bought a 2 lot, let it ride. P&L low for that day. Never took any heat on that trade.
Yeah, I cannot stress
that. Might have bottom ticked that trade.
Yeah, I mean, everybody gets lucky. You sell the high and buy the low maybe once a year. And, that sounds like it was one of those days for Manavendra. Before we move on to our next card, I just want to stress, and that I cannot stress enough, that from what I've seen in my experience watching traders for almost 10 years here at Topstep, the money is made catching a piece of the trend for the day, as opposed to the in and out scalping, trying to predict the up and down gyrations with all the price bar overlap on the charts. So I'll say it. I said it. Say it again. I've said it many times before. Day trading, catching a piece of the trend for the day, is where I've seen the most success. Might not fit your strategy now, but keep that in mind and maybe consider, tweaking things a little bit to see how that might help you perform differently with what you're currently doing. With
one more shout out for Manavendra. Number 78 on the big board. So this trader's got some chops. It's not easy breaking into the top 100 on the big board. Manavendra is in it though.
All right, I'm happy you mentioned that, John, because look at that top 100 board, number 78. This trader, he's trading 1 lots and 2 lots, ones and twos. Okay, so you can make it into the top 100 trading 1s and 2s with good risk reward, catching pieces of the trend of the day, limiting your losses, making sure that your average winning day is multiples of the average losing day. And I think that speaks volumes right there. Thanks for summing it all up with that.
You got it. We do have a question. What does it take to be in the top 100 on the big board?
You have an example right there.
I do have, there's an example. You would need a minimum account balance, though, of $28,000 total take. So current account balance plus payouts in your life funded account of more than $28,000 to make the top 100 on the big board.
I know we feature the top traders, the top 100, the top 10, big payouts and stuff like that. What I would suggest is don't aim to get in there. Aim to find good trades, and then the top 100 will be a byproduct of those good trades, along with a lot of payouts along the way and a big account balance. So if you focus on getting to the top 100, you're going to be skipping over some of the fundamental things that you need to do to get there. So focus on good trades. This was something that I heard from Hoag long time ago. The money or the profits, they're a byproduct of good trades. And if you're trading to profit and not trading to make good trades, then those profits are probably going to be that much more elusive to you. So focus on the process of the trading itself. We buy low, we sell high. We sell high, we buy low. And hopefully we profit. So do keep that in mind.
The rules are simple, folks. The rules are simple.
And if money profits being a byproduct of good trades doesn't resonate, think about this. For any of you out there watching your P&L during the day and you're trading, basing it off of what your account balance is or what it got up to or what it went down to or what your P&L high was on the day and how you want to get back up there. You're someone that falls into this category where you need to be thinking about finding good trades and having the money be a byproduct of those good trades. Because if you're trading your P&L, oh boy, that's a slippery slope that doesn't slide the right way. All right, let's cue up Lynn's trade report.
Here we go.
As John was mentioning, we talk about good trading, we talk about bad trading. I hope everybody can see this, but I'm going to walk you through this. I wanted to show this trade report. Lynn is someone who earned a live account, got called up for consistent profitability, but there's some really bad stuff on this trade report that I wanted to highlight. Lynn has 67% winning days. It's pretty good, but his winning days on average are $255. His best day is $386. And then his average losing day is $3,200. So on average, his losing days are 10 times more than his winning days. More than 10 times. Big problem
Inverted there. Yeah.
Big problem there. And he's not a busy trader. He's trading on short time frames relatively. He's got a 63% win rate on the trades, but I don't know what's happening here, John, but he's putting up consistent profits, and that's what we saw in the XFA. It's like this could be one of my favorite traders if you take out those losing days of 3,000, but he's hit the $3,000.
I'll tell you what's happening here. Look at those hold times. It is completely inverted. 4 minutes on the winners, holding the losers for almost 2 hours. Completely inverted.
Yeah. The majority of the trades are winners. The majority of the days are winners. But, this is just a trading card, or a trade report, I should say, that just really lacks discipline. And I think there's got to be something psychologically that's going on those trading days where he's losing, 3,000. You just cannot be this type of trader. And I hope he's listening. You just can't do it, because if those losing days were only $200 or $258, which is his average winning day, we called him up because of that consistent chip away, jab, jab, jab performance. But something's happened on those days, and this is a recipe for, a gravestone on the next time he's featured on the trading card. I don't want that to be the case, but this is a clear example of what not to do. It's glaringly obvious, and I thought it worth mentioning.
Mm-hmm. I'm looking at that trade from Monday, December 16th. Whole time, average losing trade whole time, just over 6 hours on a perfect trend day higher. Just couldn't take that one on the chin. Had to go for the daily loss limit, $3,200. I assume that's his daily loss limit. And just took that one. Oh. Did you have to, off the top of your head, did you auto liquidate that trade, or?
I mean, the auto liquidators, like I said, auto. So once he crossed that threshold, that's what occurred. But yeah, this is not where you want to be. Not at all where you want to be.
That was rough. Maxed out on the maxed out position. Obviously, being on the short side, trying to sell every new high and just holding on for dear life until the auto liquidator takes you out. That's tough to do. I don't know.
I know for some people in certain scenarios, especially when you have a strong bias as to the direction of the markets, it can be really difficult to not to hope that something turns around and whatnot. But if you don't frame out your trades and know where you're getting out, like I was talking about when we were talking to Manavendra here and how he did frame out his trades, you're going to find yourself in certain situations where you're losing more than you're comfortable losing. And when you get into that uncomfortable zone about risking more than you should be, you can freeze, turn, deer in the headlights kind of thing. And you don't know what to do. And it's a very, very emotional, feeling in your stomach. And that's not, it's not a good thing, but also I'll say it might be hard to take a big loss that's bigger than what you should be risking. Myself personally, this probably goes for everybody else. You always feel better after you just get that risk exposure off. You close out the trade. It makes you sick to your stomach while you're in it, but when you're out of it, you're like, oh gosh, that was bad, but thank God it's closed out and over with. And maybe it'll screw with me a little bit. It shouldn't if we're framing things out, but maybe it'll screw with me a little bit. But next step is moving on, learning from it, and finding another good trade opportunity. But don't stick in those things while you're feeling sick to your stomach. If you feel emotional about a trade, unless you're I always think it's a good thing if I kind of feel nervous about a trade that I have on. Not nervous because I'm over leveraged or it's going against me, but like nervous about like, oh, it's kind of working. Like I like this. I always find that to be somewhat of a good feeling, and found it to be like confirmation that I'm right in many cases, as a matter of fact.
And if you find yourself in that situation where you're adding onto a position just for the mere hope of scratching the trade, just try and realize as fast as possible that you are on the wrong side of the market. And it's time to reevaluate what you're doing for the rest of the day. But save a few bullets to trade again tomorrow for sure.
John, I know we're winding down on time. Do we want to try and jump into this Joe D that I have for our third card?
Yeah, let's do it real quick. We got about 2 minutes. Let's burn through it.
All right, I'll try and run through. We'll skip over a little bit of stuff here, but that's Manavendra's. Can we get Joe's up, please?
Joe Club DLL number 421 on the big board. Joe's having some trouble right now.
Do we have a card for Joe? I saw it.
Mick, Joe's card is actually a duplicate of Manavendra's.
Okay. All right. We don't have a card for Joe, but I'll just kind of wing this one. since we're live. So Joe's a trader who's been in a live account. Today was day 45. So his trade report populates a lot of metrics that, generates a good sample size. He didn't have a very big balance coming into today, about $2,300, and he's in a 50K, so he's got the $1,000 daily loss limit. Unfortunately, he hit the daily loss limit today, which is a big no-no, John. If you only have, $2,000 in your account, you don't risk 50% of it.
Big no-no.
This is, so that's one thing that I really wanted to highlight here. I feel like he might have just given up, after all these trading days and, eroding the account down. That's probably what happened.
My camera went fuzzy. Hang on, I'll be right back.
Oh, you are fuzzy.
1 second.
While you're figuring that out, I'll keep talking. But one of the problems I see here is only 39 winning days, 39% winning days. The average winning day is only $880 when the average losing day is $990. So, he's not even right half the time on his days, and he's risking, a little over $100 more on the losing days. So it's a recipe to, erode any healthy account balance over time. And then we've got the winning trade percentage is only 40% here, John, and his risk reward's worse than 1-to-1. Per contract, he's making $215 trade, and he's risking about $290 per trade. So there's a lot of backwards metrics here that need to get evaluated. So, for you traders out there, the bigger the sample size you have on your trade report, whether it's Trading Combine, XFA, live account, really dive into those numbers, especially if you've been trading in that account for a while, and find areas where, there's glaringly obvious areas. We talk about them on this segment all the time. It's like, this is what I need to fix. That's what I need to fix. If I can do that, what would the results be? How would it be different for me? So that's what I'd like to see out of Joe here, if he's listening, and anybody else who's got, 20 trading days on their trade report or something like that. So, John, we don't have your audio. Video's crystal clear. We can see your pretty face.
Clear. 44 days on this live funded account. 25 daily loss limits. Our good friend Jackie P would call that a perfect candidate for Club DLL. Very unfortunate, though. Only got about $1,000, $1,500 left in this live funded account. And he's trying to hit that home run every single day. Or actually not trying to hit the home run every day. It's either DLL or DLL or $500 or $600. Bit inverted. You still got a few. You got a few chips to play with still.
So really
Joseph,
before we quickly before we end, I'll let you sign us off. But before we do, I've been working and going to be meeting with our marketing team tomorrow. We've got something cool along the lines of me talking about big sample sizes to look at your metrics. Marketing team here is working on putting together some emails that will evaluate your trading activity across your trading combines, your XFAs, and your live account, and send an end of the year or beginning of the year kind of report out to, share some valuable metrics with you. And I think also let you know where you stand alongside other traders on those metrics in particular. So it's something I met with them a while back about, and we're following up and going to try and send out some stuff that should help paint a little bit of a picture as to where your focus areas should be as a trader, not just across one account, but across all of your trading combines, across all your XFAs, and across all your live accounts.
Awesome. That is a great tool. Very useful. I remember they had tools like that back in the day. There was a company called Trader DNA. It doesn't exist anymore. But you just send them your send them all your trade statements for the last 6 months, and they give you a complete evaluation, a complete profile of your trading habits, style. It was pretty cool. I found it very useful. But yeah, it sounds like the same thing. Perfect. All right, thank you, Mick. We are out of time for the shoulder tap. We're actually a little overtime, but that's okay. We got David Green coming in next. He's going to be here for group coaching, and then we're going to roll right into the FOMC announcement. For those of you in the chat asking, David Green will be here trading live with Andre and myself through the FOMC announcement and the FOMC Fed Chairman press conference at 1:30 Central Time. So we're going to be here with you the whole time. We're going to have the house accounts open. We'll be Probably not slinging some signs, but looking for some decent trade opportunities to catch a little momentum after the numbers hit. So stick around. Mick, thanks again. We've got group coaching coming up next. We're going to take a short break. We'll be right back, though. TopstepTV, let's go. Welcome back, friends and traders. Thank you for your patience. Welcome to group coaching. It's that time of day where we take your questions. That's right, you, from the chat, and we answer them live right here on TopstepTV. We have got David Green from Wall Street Global Trading Academy here with us today to answer questions. David's, we're going to be answering questions. We're going to be looking for trades. We're going to be talking about trades David took earlier today. And eventually we're going to slide right into that FOMC announcement. We'll get Andre in here in about 20 minutes or so, and we're going to talk our way through the market action after that news comes out. Mr. Green, how are you doing this afternoon, sir? What's happening?
Very well, thank you. It's always a pleasure to be here. Thank you guys for having me on. Looking forward to some wild and crazy action, hopefully. We'll see.
That's what we're here for, right? The action.
Everybody asked me all day today, and I see polls all over Twitter and everything. When the Fed announcement comes out, are we going up or down? And my answer is yes.
Yes.
We're going up or down, and probably both.
Yeah, if you look at the CME FedWatch tool, there's a 99% probability of a 25 basis point rate cut today. So there's also like a 99% chance that that's already priced into the market. So I think whatever the initial knee-jerk reaction is, you wait for that to peter out, and then you fade it, right?
Usually.
That would be...
Yeah, I mean, I don't think we're going to hear any surprises today. In the press conference, 2:30, then we're going to hear how many we're going to get next year. Are we going to get any next year? Usually it's the same. We're going to be data dependent. Economy's doing much better. But yeah, I usually am looking to fade the initial move and then just let things settle in. I'm not even a big proponent of being aggressively in trading during this day. We finished up very early this morning. We had a couple of decent trades. Haven't really touched much since then. And if we get, some kind of big knee-jerk reaction, we'll look to get on the other side of the trade when it happens. And then let them settle in. Usually, we'll get something at 2 o'clock. We'll get something at 2:30. And tomorrow, more often than not, is when we'll get the nice trend day, whether it be up or down, when everybody finally settles in to decide which way they want to move this market. But tomorrow early, I'll be looking for the trends to set up and try to get on the same side of it. Usually what happens.
And for those of you out there, I know there are plenty of you. You like to play those volatility sweeps or spikes. You like to put your stop entry orders in above and below the market, hoping to catch a piece of that swing. Slippage is a real thing during times of high volatility. High volatility usually means low liquidity. You're not going to get a good fill if you're using stop orders to enter the market above or below, sort of trying to predict which direction the market's going to go. And you're putting your orders in now, waiting for that move. Especially if you're trading the NASDAQ, your chances of becoming a victim of slippage. Yeah.
A lot of people try boxing orders as we get closer to it. If we get below a certain level, I want to be short. If we get above a certain level, I want to be long. And sometimes you can easily get stopped out of both of them in about 5 seconds.
Exactly. Well, Mr. Green, did you put any trades on today? Are you doing anything?
We did. We had a couple of trades, one earlier this morning, one a little bit later. In the ES as we were trading, one of the favorite things I look for. And I started off this morning by telling everybody we're in our live boot camp this week. Going to be a very light day. I am not in a hurry to do anything. Going to be looking for extremes one way or the other before we even get involved in anything. And, very early in the morning out of the gate in the ES as we got to one of my favorite setups. I'm always looking to see if we can get when the relative strength gets either below 20 or above 80. And very early this morning, we got to a really oversold position in the ESs down here. Waited for this little green, Dakota might want to call it the 3-bar reversal. Waited for that little green signal to tell us that we'd start going in the other direction, and we grabbed a little, and we were able to ride that up a little bit. And then we almost got to the same extreme on the upside. And one of the technicals that I use is my pivot points, just one of the technicals that we use. And we exactly hit our pivot point up here at about 61.48, which was a perfect resistance level. So we got short a little bit there, rode that down. Then we hit a pivot point on the way down for a little support level here, and we got a few points out of that. Now we just got absolutely nothing. Just kind of sitting in the middle, and everybody's waiting to see what happens. I have a lot of levels both up and down, but I can tell you that I'm not going to be using any of them when the Fed makes the announcement. I'm not going to be putting any orders out when the Fed makes the announcement. I always tell everybody, let's just be reactive, not proactive getting into this. Otherwise, you're just gambling. So we had a couple of good setups earlier in the day. And now everybody's just sitting and waiting.
It's true. Big economic events like this, you can basically throw technical analysis out the window. It's
100%.
The market's not going to stop at your level. It's not going to pivot where you think it's going to pivot. It's going to keep doing what it's doing until it's done doing what it's doing. And that's about it. So, yeah, we are definitely trading sideways in the NASDAQ right now. David, you were looking at the ES. I'll switch over to the ES.
Yeah, we're coming in a little bit, starting to pull back a little bit.
A little bit.
Threw
a couple channel lines up here earlier.
Now, look, if something happens in the next 10 minutes where we get a big giant move and it hits one of my support levels, I might be looking to make a little trade if it happens before the announcement. The NQs, we have a pivot point, maybe a double bottom when we made these lows all the way this morning. And then I got my previous week high all the way down here, which is down about 75 points from here. Maybe if something happens before then and we spike down 70 points, we get a little bounce off that. But again, not in a hurry. And like you said, technicals aren't going to mean anything in about 15 minutes. So,
yep, it's true. 15 minutes away. T-minus 15 minutes to the Fed announcement. 25 basis point rate cut expected. Anything else would be a
surprise.
A surprise.
Anything else would be a big surprise.
Yeah. So we're just dancing around the 6133 level, which is yesterday's value area high. Jacking around the VWAP a little bit. Not a whole lot to report in the ES. Just drifting sideways. Volatility is low. Volume's dropping off. Don't see much trade opportunity in the next few minutes going into the event.
No.
David, on the other hand, he might see something before we go in. But we'll cross that bridge.
Chances are not, unless it happens in like the 3 minutes before, in which case we're not going to want to do anything anyway.
Yep. All right, so let's take a question from the chat. We've got this question for him. First question comes from Zachariah. Zachariah's got a question about journaling. I want to journal my emotions. Any hints or tips for doing that?
Yeah,
you journal?
That's a great question.
Yeah, I know you like to journal. You jot down every trade that you make throughout the day.
Yes.
Do you ever jot down like how you're feeling while you're in the trade, or how you felt when you put the trade on? Is that something you find useful?
I'm doing this for a very long time. You try to get to the point where there is no emotion. When something sets up for me to do, I'm doing the trade. It's going to be two outcomes. It's either not going to work and I'm going to lose a little bit of money, or it's going to work and I'm going to execute the trade properly to get out of the trade. That's the hardest part of what we do, is controlling our emotions. The only thing I would say is, and someone said this to me this morning, Dave, I'm not feeling well. I just don't feel like I'm 100% here. Don't trade. Don't trade if you step on the cat accidentally, if you have a fight with somebody, if you're hungover. We got to be 100% here all the time. But the only way to get over that emotion is just by doing it. And I'm doing it for 40 years, which, it's longer than a lot of people who are here with us are alive. But you try to get to yourself to the point. When I'm trading, I don't even look at my P&L 99% of the time, because to me, it's the process. The money will come with the process. And what I find is people, and especially beginning traders, are doing this all the time. They're sitting there and they're staring at the P&L. Every time it goes up $2 or down $2, they get nervous, right? Even when they're making money. Sometimes people get more nervous when they're making money than when they're losing money, right? So, the only way to get over that is just by doing it over and over again. And like you said, journaling. I know over the course of thousands of trades that I've done, I don't know the exact percentage, maybe 72, 74%. So I know when I get into to a trade based on my technicals, then I'm going to make on more than I'm going to lose. So once you get that down pat, you just try to take the emotion out of it. And I know it's easy to say, and it's a very difficult thing to do. But you got to try. You got to try just to be robotic in this. And, by using our technical analysis, we're trying to put the odds in our favor of our trades working and being patient and being disciplined. And I don't. To me, if I have a losing trade, it's no difference if I have a winning trade if I've executed it properly. So I don't get too high. I don't get too low. Don't scream and yell when you have a good day, and don't scream and yell when you have a bad day. It's just something that takes time. That's all.
Yep.
It's just something that takes time, and it takes some people. It takes a lot longer time than others.
Yeah, it comes with maturity, comes with experience, right?
Yeah, time.
If you are one of those traders where you recognize that your emotions are a trigger for you while you're trading, our good buddy John Hoagland did come up with an emotional trading journal. I see Tim in the chat. Maybe you can grab that link and drop the link to the Hoag's Emotional Trading Journal in the chat.
I love it.
It'll help you get started. Start thinking about like what type of state you were in when you put a trade on. Were you nervous? Were you excited? Were you happy? Were you sad? Were you angry? Jot these things down, and you can, once you curate enough data, you could start making some real changes. But
100%.
Again, like we said, trading without emotion comes with experience. So just keep at it, keep going, and try and learn from every single trade. We got a question in the chat. Say again, David.
I was just gonna say, was I patient? Did I wait for the actual setup? Did I jump in before the setup? Did I jump the gun and sell it too soon or get out too soon? And all that comes, it's just time. It's like anything else. You spend 10,000 hours doing something, you're gonna get better at it. That's all.
Yep. 10,000 hours, you're considered a professional. CL Trader in the chat wants to know if you've ever used options to hedge on futures. We've never really talked about options, have we?
Yeah, I don't use options to hedge on the futures. Look, I'm a day trader. I'm a scalper. You can call it a dirty word, but that's what I am. I like to get in and out of my trades unless I'm in a trend trade, in which case I'll stay in forever until the trend tells me that it's not a trend anymore. So no, I'm not using options against any of the positions I have in futures. Stocks is a completely different ballgame, right? I use the wheel strategy quite often. I have a lot of long-term investments, and NVIDIA is one of my long-term investments. And when it gets to a point where I think it's too high, I'll sell some upside calls against it. Either I get the stock taken away from me or I collect the premium. So that's when I'll use options, mostly for the wheel strategy to collect premium or to sell some of my long-term investments at a spot where I don't mind, taking some profits on. But not when trading the futures.
And we are not here to advocate selling naked options either, everybody.
No, I'm not either. Always covered calls. I always have a
covered
position
calls
when I do it. Yes. I highly recommend never selling naked puts and calls. Ever, ever, ever.
Quick checking on the markets. Not much happening. We got, looking at the tilt, we got 56% long in the ES, 54% long in the NQ. 68% short crude oil and 57% long gold right now. So kind of quiet, very quiet, settling down, easing into these little ranges before our Fed announcement. We got a few minutes left. We're going to pull Andre in about 5 minutes or so. And
I see him getting ready.
Andre is getting ready. He's, what do you call it? Exercising the vocal cords as we speak. Let's grab another question. Let's see here.
One thing I'll say while we're waiting for the question, guys and girls, is don't feel like you have to do something. A lot of people get FOMO during these moments, right? And they'll see the first move, they want to get on the same side of it, whatever it is. Just let things settle out and be patient.
Excellent. Yeah. We got a question here from Kevin about different types of charts. Basically, they were using time-based charts, 1 minute, 3 minute, 5 minute, and whatnot.
Yes.
But Kevin wants to know, is the tick chart better to look at for better entries? I'm finding the tick chart has potential for good scalp entries at key levels around a 200 period moving average and the VWAP. You also look at the 200 period moving average. Are you ever switching over to, does it ever cross your mind to switch over to a tick chart just to see what it looks like? Yeah.
A tick chart, to me, having my relative strength is the same thing as having a tick chart, because when it moves outside its regular moves, right, that's going to tell us whether it's overbought or oversold. So it's kind of the same indicator. And so I don't use a tick chart per se, but by using your relative strength, you're basically doing the same thing. It's going to show when something's overbought or oversold. You know, if the tick gets plus 1,500 or minus 1,000, whatever it is, it's going to show the same thing, overbought or oversold. So when I see that happening and it's lining up with one of the moving averages that I use, absolutely going to make a trade. Yes, 100%. 100%.
Perfect. There is your answer. We're getting closer, guys. T-minus 5 minutes till the news drop. See if we got another good question coming in. I'm skimming through the chat too. I don't see many questions coming in though. Scott Martin is asking for a quick top-down analysis. I think we already went through that, Scott Martin. Mr. Green went through his pretty much everything he's looking at on his charts. He described everything. You could always rewind the stream and go back and take a look at that.
I tell you that nothing we have on our charts is going to make any difference in about 6 minutes.
Yeah, we might as well just wipe everything off and just look at strict price action. That would be a good button to have, like a recovery button, where you could just turn all your technical indicators and whatnot off, and then click the button, and they all come back again. Just for days like this.
I have some people that are going to be definitely looking to box this, and what I mean by that is, I'm looking at the ESs as it gets closer. You put a buy stop a little bit above where it's trading and a sell stop a little bit below where it's trading, and try to catch that first initial move. But again, you can get stopped out on both of them. I've seen it happen a million times. But the other thing you can do is try to grab the first momentum, which I'm not going to do. If you start seeing, it's starting to go up, maybe try to grab that first momentum and ride it until it does turn around. Again, we're just going to be patient and see what kind of move we get. Wouldn't it be funny if we didn't get a move at all or didn't get a big move? I mean, that's a possibility too. I don't think they're going to say anything. Maybe we get a little relief, rally to the upside because they're going to do the 25 basis points. I don't know. Maybe there's one person out of 1,000 that thinks they might not. Or, is a lot of this priced into the market already? We're up, 25% again for the year, 47% in the last 2 years. It's just not worth speculating or guessing. We'll just let them come out and see what happens.
Perfect. And I'm getting an education from the chat. I guess the feature I just talked about already exists. I didn't know it existed on Topstep.
Oh, really?
So, thanks, everybody. You can hide all your drawings. Hide all your drawing tools. Perfect. I knew the chat was good for something. All right. One last question before we pull Andre on. Beastalot says, what's a good strategy for coming up with a stop loss or limit you are willing to risk on the trade? So your trades are pretty mechanical, aren't they, David? You have a set stop loss and a set profit target before you get them.
Correct. And I'm usually, if I'm looking at the ESs, I'm usually looking at the ATR, the average true range. Right now the average true range is about 3 points in the ESs. So if it's during a normal trading day and I'm finding levels, I won't have more than a 3-point stop because that's the average true range, which is the average of the last 14 5-minute candlesticks. And the same thing with the NQs. NQs, and again, these things are very muted right now. NQs right now is 15 points. We've seen the NQs be as high as 50, 60 points at times. So generally speaking, I try to stick to the ATR for my stop orders.
Very good. Very good. All right. We're T-minus 2 minutes. I see Andre is all set. He's got his headphones on. We can bring him in whenever you guys are ready, and we'll just talk through this announcement. I'm going to start deleting some of these channels that I drew because they're going to be useless in a minute. And I'm just muddying up my charts.
Might work. I do have a level up 15 points from here at around 52, and I got a level down 22 points from here, about 14. Could be interesting if we get a 20, 25 point move in the ESs right out of the gate. See?
There he is.
Who's here?
Hey, what's up, everybody?
There is the man. Andre is here. All right. You got the three of us for the next hour now. We're going to be trading through FOMC. I think, are we going to be streaming the press conference?
I think we will.
Yeah.
Yes,
JD. Yeah, I'll be putting it in there shortly.
I didn't mean to put you on the spot there, Gabe. I typically would ask that question beforehand. but it just popped in my
Oh,
head.
I love watching Powell. Puts me to sleep.
Oh, nothing better. Nothing better.
Answering around questions, never really answering anything, just kind of talking to talk type of thing.
Man, look how thin this ladder is. Looking at the ES, nothing really. A 300 lot up at 6160 in the ES. That would be way up there.
Ooh, careful up there.
Since we're not moving at all, it's probably not a bad idea to box a little trade here because we're not really moving. I would have. Who knows?
150 down. 150 lot down at 115.
There you go.
Which is exactly
another 100 lot. Another 100 lot at 10. Oh, there's 100 lots stacked every 5 points below.
Okay, cool. Here we go. 10 seconds. 10 seconds till Fed decision. Last Fed decision of 2024. Again, 25 basis point cut is in. Here we go.
Ooh, look at that move. All those bids just got taken.
They're selling off. Knee jerk, of course.
Knee jerk reaction.
We exactly hit that 12 level, our previous week close. I mean, to the penny. Right here. Again, I wasn't doing anything off this announcement, but did bounce off a little support level.
Good. Yep. Okay, everything came in line. Figure. So
no surprises. There. We're really expecting a surprise.
No, we weren't. 14 and 07. We spiked down to 07. I'll probably start a little bit. We spiked down like 17 points. Yeah.
07. Okay.
23 half now.
That's last week's low.
What's that? 07?
Yes.
Oh, yeah. We got that on Topstep X. Yep. If you're looking at the Topstep daily levels indicator on the Topstep X platform, you will see last week's low. 6107 in the ES. Still grinding lower.
Selling off.
Still selling off.
We go.
Knee-jerk reactions.
Lows. Go ahead, GD.
I was just going to say that initial knee-jerk reaction still in play. We still got a 150 lot down at 110.
Okay.
Another 500 down at 98.
We're not really oversold yet, guys. We're sitting at a 26 RSI, so we're not really oversold yet.
Mm-hmm.
Yet, indeed. Okay.
Keeping an eye
Dow
on
selling
that.
off. What was that price? 60.98.
60.98. 524 bid.
I like that too.
Right.
07 down to the 98.
61.21. And we will have the press conference piped in here.
Looking forward to that as always.
Yes.
Good nap time, right?
Good nap time. And Fed projections imply 50 basis points of rate cuts in 2025, another 50 basis points in 2026. These are just projections for the time being. They pulled that bid on the 98s there, JD.
Because it ain't going to get there.
Yep.
And they moved it up. It's at 18 now. 300 at 18, 250 at 19. Oh, they keep moving it around. Pulled it again. They're moving it up. I wonder if they just went to the market. Nope, I see it.
Okay.
20 and 1975.
1975.
That's a program. That's an algo. That's an algo. Just waiting for an anomaly. Looking for a liquidity sweep. Yeah.
Pushing order.
There is,
wow, 5,400 people watch us right now, JD. Pretty damn good as we get ready for the Fed Jerome Powell press conference. Say, Colorado, click like, click subscribe. Big numbers right now. Welcome everyone to TopstepTV. Got David Green.
Awesome.
David Green Wednesday.
Yeah, we usually have David Green for Fed Day.
He's an expert.
Good combination.
Bro.
Let's see if we get some follow through to the downside here.
Okay.
What do you say? The huge big is around 18s now? Or he's gone?
Let's see them.
It's moving around. 15, there's a static 190 bid. And then there's an algo playing a game in there right now. Moving the bid for every price movement.
Wow. We just had a really good, I don't want to talk about it, but we had a really good trade in Tesla on an order we left out that went right down to the pivot point, down $5. Check this out. Tesla
that
went to 471.30, went down $6 to hit it, bounced up $5. But we don't care about
that. Of course, we like winners around here. Take a look at gold. Gold selling off. As expected. Last trade 26.41. 42 is now.
Look at the
new lows put in.
If we look at the overall day, I mean, the ESs are down 7 points for the day. You know, this is not a big move in any way, shape, or form. Not yet, anyway. We'll see. I like the 07s and I like the 98s. Got some levels down there.
07 and 98. 61.07. 60.98. Okay. Pretty muted move now.
It is. Just want to get the relative strength up here so we can see it.
RSI.
Yeah, we're down to like 26 now. So again, we're not oversold yet. If we get below 20, I like to go to the 1 minute chart and look for the little reversal. But it's still coming in here.
Take a look at the NQ really quick. Very, very thin, the NQ. My, oh my. Slippage for sure in the NQ.
Again, we got previous week high is down at 22,184, which is down about 30 points from here, which would start getting a little stretched on the downside. So let's see.
What's RSI at?
Now it's about, let's see, again, 25, 26. But we're starting to come in a little bit. So let's see.
Here we go. If you switch over to my charts real quick, you can see I drew this descending triangle during the opening call this morning. Pretty bearish signal. We're dipping through the bottom trend line that's been tested 4 times already. And we are starting to get some breakout to the downside at the moment. We'll see if this is sustainable. We're hitting that 07 area David just talked about, last week's low.
Yes, hit the 07s. Yes. Let's see if we get a little bounce from here or not.
Wow.
98 is the next spot. We're at about a 20 RSI now. Well, let's see if we get a little bouncy bounce coming soon.
Right, coming in on those 6100s. See if the buyers want to step in and defend the 6100s. Dow with a free fall, says Hoop. Yep. Gold as well. New lows in gold. 26.37. Some statements from the Fed. Labor market conditions have generally eased. Unemployment rate up. Fed sees progress on inflation, but remains somewhat elevated.
Nothing that we haven't heard before.
It's true.
So we bled right through yesterday's low, right through last week's low.
We're getting down.
Knee-jerk reaction actually had some decent follow-through. So
absolutely. 92 is a little pivot point. 92. 98 level held a little bit. If we get down to 92, I'll go. We get down to 92, I'll go to the 1 minute chart, look for a green bar, and try to grab a little.
Okay. We got the house count open?
Yeah.
See if we get a reversal somewhere down there.
What kind of risk are you taking a look on are you looking to take on a trade like that?
If I'm doing the ESs, I'll give it 5 or 6 points. I'm looking for some kind of reversal right in here somewhere. Let's see.
87s.
See what happens.
Looking for 92s, JD. Perhaps
over 92s.
Risk 87.
I'm on a 1 minute. Here. Oh, yeah, we're starting to get a little bop here.
Those algo boys are still playing around in there in the ES. See that there's a 200 and a 300 lot that keep popping around on the bid and the offer. They're just looking for a quick liquidity sweep on both sides, playing the odds. It's just annoying watching it.
Yes, it is. Getting dug up on both.
Yeah, and the longer we stay oversold, the less effective the trade is going to be. So let's just see what happens here. Kind of just hanging down. 92 is also a pivot point. So let's see.
92 is last trade 60.96. Now 95's trade.
So we don't have a bid in. We're waiting for 92 to print. Then we're going to wait for a 1 minute green bar, and then we execute a long trade. That sound right?
I like that.
I like it.
Game plan.
Let's switch over to the 3-minute chart real quick.
Nothing on the tilt, as to be expected. Yeah, we're
Tilt
gonna
is
have the
flat.
press
Well,
conference.
actually, ES is 66% long on the tilt, so
That's true.
not huge, but on the higher side.
Yes, we will have the press conference piped in here when it does begin. All right, here 92s now. Print.
92's print.
92s. So I'm on 1 minute chart. So I'm not going to add anything until I see a little green bar here.
Yep.
And again, this is news, so.
Yeah, there's nothing stopping this from just keep going down.
Yeah,
also,
it was just overextended. I'll look for a little green bar here to add a little bit. Just got a little bit
Green.
there.
Little one, yep.
Little pop there.
So we really have to recapture like 95 now.
Weekly kickoff low at 82. If you're looking for more downside targets. But 95 is right there.
It's hovering around the lows in the ES. Dow still selling off, just putting in new lows as we speak. Last trading Dow, 43,777. Now we're into the
like
80s.
15 RSI now. But again, this is a news event, guys, so be careful with everything.
We said it during group coaching. Your technical levels don't mean squat.
Correct.
I'm out the window.
Data comes out.
See if we can recapture
60.88.
Even for the day, we're down like 36 points. Let's see if we can recapture the 92s here.
Okay. $22,106 in the NASDAQ. Low of the day, 22,088. So about 20, 25 points off the lows in the NASDAQ. Well, 3 points off the lows in the ES.
Mm-hmm.
They are trying to stabilize a little bit here.
Just retook those 92s. We're right there. Look at a 1 minute chart. Getting a little green bar here on the 1 minute.
There we go.
Yeah. To clear like 95s to get a little reversal here.
You don't like buying on that green bar, though, that just printed?
I'd like to see it get above, this little 93, 94 that we just made there.
Yeah.
71% long in the NASDAQ right now. 70% long in the ES.
See, under normal circumstances, when you get this little green bar, we're off to the races to the upside. So we're not yet.
We got to get scout out. Trade real quick. Make sure you guys are following us at TopstepTV on Twitter.
Yep.
Keep up with us so you know what's happening. Show throughout the day. Be the first to know about special guests like David Green right here, right now on FOMC Decision Days. David Green Wednesday. Make sure to follow us on Twitter.
So that little high we just made was about 94. We'd have to get above that to get positive a little bit.
So build a little structure before we. I see some comments in the chat too. We're not catching the falling knife. We are looking for structure to get on the long side of the market in a cheap trade. If we miss that, then we'll look for opportunities in the direction of the spike we just saw.
Exactly.
So we got 250 on the 90 bid, 300 on the 90 bid. It's not moving. I'm thinking that's going to trade out.
Are they real? Okay. And we'll pin the link to Twitter at the top of the chat. But right now we are scouting a trade. David Green and JD with the house count.
Yeah, we just need to build a little bit off this on the 5 minute chart.
Staying patient right now.
Mm-hmm.
Yeah, but it's not getting a big bounce yet.
Waiting for the trade. Waiting for the
Get
trade.
above like 94s and then just, have our stop a little bit lower. But it's not giving that giant bounce yet. So patience.
74% long in the ES, 70% long on the NASDAQ.
It's growing. It's building.
Yes, it is. Which makes me nervous.
Yeah, me too.
300 lot on the 90 bid has not moved.
Bottom pickers. All right, 77% long in the ES now. Average price 60.99. Taking a little bit of heat.
Yeah, the 300 lot just traded out.
You don't want to see it break
just
these
traded
lows.
out.
That would not be good. And like we said at the beginning, technicals don't mean anything right now. The fact that we couldn't even get it back above those 94, 95s. Now, let's see. Let them settle in a little.
Still long bias in the tilt. Seeing a little bit of buying in the NASDAQ. Yes, not as much.
Yeah, we need to get above like 90, 93. We're not going in that direction right now, so. All right, let's look at some technicals now. Just want to see if we have anything on any other charts that makes sense. Nothing on a 15, nothing on a 30. 1 hour, nothing.
Coming up on that weekly kickoff low at 60.82 in the ES. Real close to that.
Here we go. I got 60.68. 200 EMA
68?
on the 4 hour. I am starting at 68. If we keep going in this direction. That is my 200 EMA on a 4 hour chart.
Okay.
60.68. Okay. $60.84 last trade.
Doesn't mean it's going to stop there, but I have a level, and we're getting way oversold now. But again, this is news.
Mm-hmm.
Doesn't mean we have to get a bounce. So I would just be taking it nice and slow.
Barely kissed that weekly kickoff low. 682.75 low print. Might get it.
E2's last trade. Also new lows in the ES. Looking for some block orders.
So
yeah, it looks like they're algo bros.
We could not get above this little pivot point here on the way back up, and that's never a good sign. So patience.
Patience
pays. We'll have the Powell press conference, I believe, starting in about 13 minutes. Typically goes for about an hour or so, depending on how many questions are asked and how long his answers are. See what kind of mood Jerome's in today.
Yeah, and we don't negate this down move until we get back above the 92s. So.
Oh, okay. A little ways to go.
Yep.
Almost bottom took the weekly kickoff low.
What was it?
80. 82 is the weekly kickoff low. 82.5 is the low today currently.
Wow. That was nice. I mean, again, it's gone up 3 points from there.
Yeah. I want to play Hoag's level real bad.
Which is 82?
82.
That's Hoag's level?
Yeah, that's Hoag's weekly kickoff low.
So I'll start a little tiny bit.
Yeah.
10-year bonds ripping, yields ripping higher. Let's take a peek over there. And where's it at? What's the 10-year yield at?
Maybe this will be the day when he starts speaking that we actually get a little rally. But we ain't getting it yet, that's for sure.
Making a move now.
Man.
Let's see if we spec down to 68s. This is when you do not want to be blowing your accounts, guys and girls. So,
this is definitely not the time to be blowing accounts.
This is why, at the beginning of the group coaching, I said I don't even like trading today. It's very, very difficult. I mean, we're not even getting. I'm going to 1 minute, right? We're getting these little tiny bounces, but not to speak of. Every little bounce has been rejected.
They keep getting slapped right back down.
Yep.
Sure do.
And when you see the relative strength staying this low for this long, you could go forever trying to find a bottom.
Yep. Yeah, that's the thing about the relative strength index. When it's showing that huge oversold condition on the market, oversold doesn't mean the market is looking for a bottom.
No, we're going to get a bounce from here eventually, but when you see it below here for 15, 20 minutes, no, we want a quick spike down, where it spikes down really quickly and then you get the bounce. You can get a bounce from here. This is just a crapshoot now. Getting a little tiny bounce now, but
weekly kickoff low. Weekly kickoff low held like a champ there.
Yeah, the 82s were perfect.
Oh, 82s? Okay, yeah.
I mean, it broke it by 3 points. Not a big deal.
Not much heat at all. Look at the NASDAQ last trade at 22,107. Bottomed out at 22,077. There you go.
Now we got to clear like 89s, 90s. Maybe get a little something. But now you have something to shoot at on the downside. 79, wherever that low just made. Where I'd have my stop if I did anything here. Hey, the 82s were good.
Those were good.
Yeah, they were.
Damn.
I know.
So we have resistance.
If you're listening, Hoag, we're thinking about you.
Shout out Hoag, man. He's saying their weekly kickoff. Yes. We'll see. We got to push higher here. Again, 60.87 last year. Watching the ES. Gold seeing some buyers, about $7 off the lows, 26.37 last trade.
So 92 is going to be the first real test if we can get there, because that was a big support level. See if we can get above that resistance level now. We just should have went with the top step level, guys. Jeez, Louise.
I know.
Beautiful.
I wanted it so bad.
10-point winner right now. If you bought those 82s, if you bought those 82s in the chat, let us know. We kept it light and tight though. It is news. But you bought those 82s in the.
Everyone bought the 82s.
They're not signaled. It's not signaled, but just prices of interest. What's weekly?
So this is a spot now.
Hoop did.
We're pushing right against what was support. So
Captain Cold Cuts got long at the 82s. Sorry, Hoop. We'll stop that one. That's not even a good joke.
NASDAQ pushing higher, about 80 points off the lows. Let's trade the NASDAQ. 22,157. Seeing the same in the ES. About 15 points, 16 points off the lows. Last trade in the NASDAQ or the ES 60.94. See what happens when we get up to the 6100s if we do get there.
So here was the reversal on the 1 minute chart, right when we hit 80. But it gave you a couple of fake ones, so that was not an easy trade. Faked you out here, faked you out here. Eventually we were going to get this big bounce, but not easy to find that bottom at all. It's not.
81% long.
Hoag knew what the bottom was. You knew what the bottom was on Sunday night.
To the penny almost.
Pretty good.
We'll see if this becomes resistance, this 92, 93 level. Now, that's really what we got to clear now.
Heavy long tilt in the ES. Just was up above 80%, now 76% long in the ES.
Wow. NASDAQ, how high did you see how high the NQ got? I didn't notice.
74%, 73%. And SPOO's got to 81% long.
Gold's at 75% long too. It's
Yo.
selling off, I believe. Take a look at gold.
The problem with both the NQs and the MES is, you had to keep buying it all the way down. That was the problem.
Let's see when. Yeah, still pretty thin to be expected. Nothing really sticking out, upside or downside.
Okay, now we're getting above this little 92 level here, which is good. All I could say is that Topstep nailed that at 81. That's all I have to say about that.
Those daily levels out. And we've got Powell in about 5 minutes.
Jerome Powell coming out. Coach Hoop says JD 10 handles in ES, 10 handles in Cicero as well. 10 handles is 10 handles, Coach Hoop.
Boom.
100%.
Captain Cold Cut.
10 points is 10 points.
All right. See, they got the camera on the podium. He has not stepped to it just yet.
Now maybe we get a little structure because we're back above. The other point was a little support, a little resistance. Now we're back above it. Well, let's see.
Just some clarity in the chat. Which says it's a weekly kickoff level, not a Topstep level. Weekly kickoff levels are included in the Topstep daily levels indicator on the Topstep X platform. They are the lines in white. 6082 and 6177 in the ES. I apologize. It'll be like a purplish color. Weekly kickoff low and weekly kickoff high.
Let's see what JPOW has to say in 4 minutes.
Yeah, it's very interesting. 82% long in the ES right now. Very heavy long. Average price 60.96. So right about here.
That's
the
good.
S&Ps
Considering how low.
Yeah.
Considering how low it went, that's not bad.
75% long in the NASDAQ. Average price of 22,172. 172. So they're taking some heat.
Mm-hmm.
20 points, yeah. All right.
So that's the question. Is this a... We've been seeing a lot of V-shaped bottoms this week in every market that we look at. Gold, crude oil, S&Ps, NASDAQ.
Yeah,
all four major
it's
markets
gonna be
that we track, we see V bottoms forming. We have another one today. I mean, buying volume is sort of petering out right now. I'm looking at a 3-minute chart. You'd see those 3 green bars, decreasing buying volume, leaving some wicks up top too. I don't know. This looks like a little bear flag to me.
Yep, me too.
Anyone want to chime in?
I agree with you. I mean, let's if we break this 92 level and get on the downside.
We can get into a decent cheap short right now.
You could have a nice tight stop too.
Yeah, we can get in
Cheap
at 95 and I mean we can get around 95, 96 with a 5-point stop. I'd consider that a cheap short.
Now we're trying to break below this 92 level again. I'm with you. How high did we get? We got to 96
and a half.
50. Yeah.
One eye on the tilt. 77% long. That's those shorts. Okay.
It's not a great looking chart.
See what happens here. I
mean, I can
looking to dive
change
in.
when this guy stops speaking. No, I'm not. You're not on the long side.
I'll do it at the podium in 2 minutes, T-minus 2 minutes.
Good afternoon.
4-hour support down around 68, 60, 68. That was a big rejection up there, right at the 96.
Mm-hmm.
60, 68, and then a pivot point at 60, 53. I'm just going to write 60, 68, 60.
Is this just a retest? Is this a double dip, a weekly kickoff low? Or are we going to blast right through it? Melt right through it
right now.
Say.
Best advice to everybody, as we said coming in, is there's no reason to even be trading this. See something crazy, yeah, but just made new lows, right?
Yep. New low by just a couple tickies. Just a couple tickies.
Man. Tilt got hurt there. Heavy longs. Back to 50-50 in the NASDAQ. Now NASDAQ actually just tilted short ever so slightly. 53% now short. ES, 60% long. We saw it above. We're making new lows right now. Last trade, 60.77. Here we go.
Seeing it roll over right now. Increasing selling pressure coming in. You see those volume spikes if you're looking at my chart. You saw decreasing volume. I suppose I should just annotate it on the chart. Decreasing volume on the pullback. And we see some increasing volume on the continuation. That's what you want to see in a healthy move.
Look at now.
He hasn't even started speaking yet.
He hasn't.
60.54 is going to be a very big level.
And I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
I swear I thought that was Jack for a second.
Overall, and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smilik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why.
Called it a close call.
Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further. so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this. Some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track, but once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
New lows.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, that considers situations in which
I don't know
might
if
be
we get there,
appropriate
guys,
to see through
on
inflation,
my weekly
and then
chart,
some conditions
60,
in which it might not
36
be. In any case,
is a trend line
that's
on
in
a
front of us right
weekly
now.
chart. That is a very big level.
Face that
And
question.
again, this is news. I don't know if we hold it or not. But I'm trying a little. If we spike down to 60, 36.
Discussing pathways and understanding
the
ways in which
trend line.
Tariff-driven
Weekly.
inflation
So it's a pretty important level.
Tariffs can affect inflation in the
Important
economy.
level for the overall market for us to hold
that.
if
So
we get down.
we've done a good bit of work, all of us.
Got it. Thank you, David.
And it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow-up. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier?
It's a very big, longer-term level.
Tariffs, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike.
Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
So the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all the financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts, included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence, or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates, and we made, look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought 2 years ago, but it's nonetheless steadily coming down as market rents start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. A good example is financial services, which is really done off of asset prices, and that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight, but overall you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
Colby.
Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. Job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So but you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think, you pointed out, participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market. And it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive? So
what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation's moving around by a tenth every few months, we'd have to weigh that against the fact that inflation has in recent months been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really mainly focused on inflation. We've now gotten to a place where the risks of the two are we think are roughly in balance. And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I think. All
right, real quick transition here, guys. We're going to do a little bit of a line change.
I think from
a little bit of line change here on TopstepTV. We got a Jerome Powell press conference going on live. We're going to bring in Nick for a tick in Dolby time. JD, out JD.
So it is
great work today, man.
We move pretty quickly.
Thanks, guys. Catch you tomorrow. I'll be on all day tomorrow. Thank you, guys. David Green, catch you later. Nick for a tick. Congratulations, buddy. The newest father in the Topstep family. Thank you, Dre. Andre, catch you later.
You got it, man. See you, man. Bring him in. There we go. We got Nick for a tick in the house. Proud new papa. What's up, Nick for a tick?
What's up, guys?
Congratulations, See you, man.
Thank you all. Yeah, it's good to be back. Fed day. How are we all doing?
You're jumping on a moving train right now. Making new lows here in the S&Ps and the NASDAQ. We got to get back to the press conference, and once it stops, we will, or perhaps if you guys want to take trades, please feel free to call them out. Right now, let's get back to the presser. New lows.
PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think, 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do.
36,
though,
David. 36.
We're looking at it, and we need policy to remain restrictive to get that work done. We think.
Again, technicals don't mean anything, but we're sitting on a weekly support level now.
Thanks, Jerry. Thank you, Chair.
Today they don't mean
Jerome
anything.
from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course, that's part of what we do, but we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of, just take the last year, we've seen inflation, over the last couple of years come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. A lot of things move financial conditions around, as you know, and we don't really control those, but I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
Ooh, here we go.
So, we're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Andrew.
Hey, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about 0.5% rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation, and that's part of the reason that explains why we moved ahead today with the action with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high, wages are at a healthy and ever more sustainable level, wage growth, and so the labor market. This is a good labor market, and we want to keep it that way.
Thanks.
Amira.
Thank you. Amara Mokway from Bloomberg News. I just want to put a finer point on the labor market. Can you keep the labor market this way, in the strong position that you have described, without further cuts? In other words, do you still view the labor market as needing support to protect against a further cooling?
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. Job creations are meaningfully positive. Wages are, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals. And we pay close attention to it, and it's worth noting that it is still gradually cooling, and in an orderly way, and that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now. Why do you think it is that inflation is proving to be more stubborn than you'd expected?
It breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had a deep recession and high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that prices went up by a great deal, and people really feel that, and it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices, and that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there, so that people are earning big real wage increases, so that their wages are going up. Their compensation is going up faster than inflation year upon year upon year, and that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year, what do you see as the biggest challenge to the economy under the next administration?
I feel very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for doing the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What % do you see and the committee believes? Where is that neutral rate?
So I'll say a couple things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance and we're looking at the way it's hitting the economy. And particularly, we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be, there are things that affect the economy that are lasting but not permanent, and the ones that are permanent are the ones that would be in our star. The ones that could be lasting but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it. And I think we're in a good place. But I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is. Because at the moment, it looks big.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to the empirical data that are coming in and also how it's affecting the outlook. And it's not made any easier by the fact that, that our policy works with long and variable lags. Nonetheless, that is the job we have. And so I think it's appropriate for us now to proceed cautiously now that we're 100 basis points closer to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape. And these cuts will certainly help to support economic activity and the labor market, while we can still make progress on inflation because policy is still meaningfully restrictive.
Victoria.
Stop already.
Hi, Victoria Guida with Politico.
New lows.
I just
New
wanted
lows,
to make sure I understood what you were saying at the beginning about inflation.
Stop
Are you
talking.
saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's what's projected in the SEP, I was wondering what accounts for that? Why do you all see core PCE going down and potentially headline inflation ticking up?
So, and as I imagine the goal overall is headline inflation because that's what people experience. People don't experience core inflation, they experience inflation, and that includes food and energy costs. So that's the overall goal. But as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately our goal is headline, not core. So your second question was what?
Why do you all see core going down but headline potentially ticking up?
So headline can be affected. You're talking about next year. Mm-hmm. Yeah. So headline can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year, but that's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy prices?
We monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks haven't really nothing has come out of those risks that has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of supply conditions, global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil, but we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Kelly.
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of course. It's partly why Americans haven't felt much relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
So inflation, again, we don't react to a couple of months of higher readings or a couple of months of lower readings. And what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation, and it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now, and we just want to hold on to it. That process will probably take some years, but that's what's going on right now. And I don't think that a couple of months of higher inflation really signal that anything of the nature you're suggesting.
And just one follow-up. Let's look more long-term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty. Very high uncertainty. We really, at that point, it's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now, and we're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down, goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong though that it's been a bit frustrating because while we've made progress, it has been slower than we had hoped. Nonetheless, we're still on track, and I think if 2 years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Go to Nancy for the last question.
Last question.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways. Appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be, we are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So, thank you very much.
All right. Ooh.
Longs.
We'll transition music. There we go. All right, everybody. He has finished. Powell has spoken, setting the markets in a nosedive, sounding hawkish, calling the rate cut today a close call and perhaps on pause for the January cut. Anyways, let's get right into it. Got Nick for a tick in the house. He is back, up $3,500 in his live funded account over the last 2 days. Nick for a tick. What is happening, my man?
Not a whole lot. Just watching Jerome Powell ruin Christmas, I think, for just about everybody that's been net long since August. Yeah, kind of wild. Only 50 basis points of cuts for 2025. I don't think the market, for some reason, was expecting that. Of course they weren't. Why would they be? So yeah, this is kind of a wild move. I would not be shocked to see us kind of get some sort of relief bounce here off this kind of 60-20 spot on ES. Kind of crazy that we've moved all the way down. I was, in fact, short from 61.40s earlier and flattened it for a couple points to go work out before I was jumping on here. So I wouldn't have held it in FOMC. That would have been just stupidity, in my opinion. But, that could have been a hell of a trade.
Nice one. Yes, we got Dolby time in here. We got the keys to the house account. We got David Green. It is a David Green Wednesday. All right, last trade in the ES. Looks like we're going to be trading the ES for the last 35 minutes or so. Here on Power Hour. Last trade in the ES, 60.27. Take a look at the tilt. Nothing crazy right now. 68% long. We did see it as high as 82% long in the ES. David Green, we pretty much ran through all the levels to the downside. We get a bit of a bounce here, like Nick for a tick was talking. What are we thinking, David?
Yeah, we're sitting, again, we're not low that much below this weekly level, right? 36 is the weekly level. We're 10 points below it. To me, for this to get positive, we got to spike through that 36 level on the upside. So I wouldn't be looking to buy anything until we got above that level. So we'll see. I mean, we're exactly sitting on the weekly level on our 9 EMA, almost to the penny now. So I don't think we get constructive unless we can get back above that 36 level.
I mean, Andre, also it's options expiration week too, and I think people are very out of position right now, and I think that is also amplifying this move to the downside. I don't think anyone was really positioned that well below 6,000 SPX, and people are a little off sides. It looks like now if you were sitting in some calls or had call exposure as a market maker.
Yeah, we got
stocks. Nvidia's getting a smackdown, Tesla's getting a smackdown, Amazon, Meta. I didn't see anybody who wasn't long all these things going into this.
Oh man, just blood in the streets. Okay, new lows. Yes. Yeah, go ahead, Nick.
I bought some puts for this potential move. When I bought them on Monday when we were sitting around 6,100 SPX, or a little below that. 6,100 ES. Kind of was getting theta decayed the last couple days, but I'm glad to see they finally have moved into some profit or almost in the money here.
Look at this thing.
I've been doing some selling some upside calls against long positions for the last couple of weeks. So collecting
that's probably
premium,
the smart play.
Yeah, just collecting premium, some Nvidia and some Meta and a bunch of other stocks, and look for spots to get back in. I do have another level. I'm going to stop buying some. I'll tell you what it is. 59.69. That's my level. That is a daily 65 EMA. It's only down 50 points on me. I mean,
we'll see if we get there. Dow new lows. Again, looks like Dow's going to be down for its 10th day in a row. Keep an eye on the NASDAQ. NASDAQ, just sellers everywhere. Red everywhere, Nick.
Anybody know when was the last time we had a 2% down day? Was it August?
It's been a long time.
Where's my man, Coach Jay? Coach Jay will be on that.
That's usually a good marker of like cycles up and down is 2%. Like when do we have one? And I can't remember the last time. I feel like even if we go down 2%, we always recover back up 1%, up maybe down 0.5% on the day when we you get those V-shaped recoveries so much intraday, it looks like. So this would be interesting if we actually close this far down. NQ down 2.6% already.
2.6.
Ideally, we
2.6.
close on the lows. We close on the lows today. We open down tomorrow, and that's when we can start picking at some stuff. But that usually does not happen.
And Andre, of course, the Fed and Goldman decides to finally get the VIX out of bed for my return to TopstepTV.
What is it? Is it real? That's my question. Is the VIX real today?
It is just under 20, so it is on the border of being real and mattering.
I missed you, Nick, for a tick. I missed you. No air horn day
I've missed you
today.
guys.
Oh, man.
No air horns. I think we had enough air horns for the rest of 2024. Maybe it's just me. But I had to knock this out too while I was gone.
Hey, well done. Well done. Look at that.
Nice job.
Great job for a tick. All right, more
I gotta
selling
be
coming
honest,
in
I
here.
failed the first time, and I felt better leaving or finishing that test the first time than I did yesterday.
Figure. All right, do we test 6,000s in the ES? What do we do with the 6,000s if we get there? Last trade 60-11, 60-10 now. Now 9's trade.
Sell them down to
Coming to the
6,000?
bottom of
Sell it down, yeah.
last week's range on NQ.
What level do you have, Nick? Is it 7/16?
Previous week low is
619s. Yeah, I have like 620s.
For the March
what
or
was that
D's?
wick?
Make sure it's March.
Oh, I'm looking at March. All right. Yeah, I forgot we all switched, so it could be a little off, depending on how you back adjust.
I got 2619. We'll go all in down there if we go down another 100 points.
Right. And S&P's down about, 140 points from the highs today. High of the day, 61.48. Last trade, 60.13. So we got some buyers jumping in here. See what they do at the 6,000 level if we get down there. 60.15 last trade. Man, oh man, just pure meltdown mode. Well, today's rate cut, a close call. Not see that coming.
Yeah,
It's a 99% probability. 99% probability. Called it a close call today. Interesting.
Imagine if they didn't cut rates, where we'd be right now.
Whoa. I don't know. I don't want limit down. I don't know. All right. Got some buyers in the
This is
ES.
healthy, regardless of like we were basically to last week's lows. Like us pulling back a little bit, 2%, 3% should not be that horrifying, I guess. I stopped trading at 11 o'clock basically. I just didn't hit the lockout button in case something presented
And
itself.
most people did. Very
two trades.
FOMC.
Happy.
I could see SPY's 586, 586.50. Down 7 points from here. Just be a normal little pullback.
Yeah. All right. Defending the 6,000 level for now. Looking at the ES 60.09, 6,009. Sell every pop. I don't know. This is we are.
That's the thing you got to worry about, right?
No.
Maybe there's some big short covering towards the end of the day. You say the magic word, Dope. Tell us when.
Short 50. That is the magic word. Short 50. Why not?
All right, here we go. New lows in the ES. Looks like they're going to gun for these 6,000s.
Yeah. Too close to not touch.
I mean, that is a scary looking 4-hour candle. I will say that.
I've thought 10 times since we've been on the air, we got to get a 15, 20, 30 point bounce from here. We've got nothing.
Nothing.
We can go to mine. Look at that 4-hour.
Let's see this.
On ES.
Jesus Christ.
Wow. Oh, man. Off a cliff.
Apocalyptic.
Off of a cliff.
Yeah, that's...
Wow.
I went down 100 points, right? 110 points.
Yep.
Mm-hmm.
Just violence.
Yep.
Somebody in the chat asks, what happened? Well, Powell canceled Christmas.
He did cancel Christmas. He did indeed.
But he had to take an hour to talk about it. but he did cancel.
There were a lot of
I might have to
Bitcoin
go-
questions.
I might have to go
How's
put on my
Bitcoin?
Grinch sweater.
How's
Yeah,
Bitcoin
how is
doing
Bitcoin
today?
doing?
Bitcoin is down to 101,500.
Okay.
Wow. Sellers.
All right.
oh, man,
It's hard to
close.
it's hard to
4
look
points
at
off.
everything that's going on, and Powell saying restrictive monetary policy when you have every meme coin having higher market caps than some of the Fortune 500.
Yep. Mister's down 40 points today. Coin also getting a smack it down there. Coin is 30 points off its highs.
Man, oh man.
Ooh, yes, very close to 6,000.
Yes, it is. Everything just
Short
got
50.
out.
Short 50, Nick.
Yeah, here we go.
Short
Let's
50
do it.
at 6,000?
Not me.
6,000's incoming. Here we go. Ooh, all right. They printed.
I'm looking to buy 59.60s. I'm going all in. We got to bounce from somewhere, don't we?
I mean,
Famous last words.
right? Can't go
Yeah,
on
right.
lows.
I mean, I'm seeing options activity on the put side, 10 points further down. Like they're still rolling these down, right? Looks like.
I mean, I would short 708s in NASDAQ. Literally any pullback.
It looks
I would
like that.
probably just try to get short.
That like 617 level Dobie, there was your reoffer again, but it's so hard to short.
617s?
I think when
I mean,
kinda
you got to go to like
we peaked back up.
small,
That was
small
I mean, we
time
already missed
frame,
it.
and I know.
That
I
was-
was talking about it.
That
we
was the
lost,
high
like,
of the last
20,
bar,
30 points.
17s. The actual
Yeah.
trend is up at 29. That could be a real good
Ooh, look at
spot
that.
if we rally. 26
Plus 3
points.
points. Bounce. And would we like shorting 710s? I mean, that would be the stair step short. They can't even pull back that far. Who am I?
Wow, here we go. Now we're in the 59 handle. Here we go. Look out below.
We were talking about it too, like at the 750s, where I was like, well, we see NQ with room down to the previous week low, and there you go, 100 points.
Wow, look at this.
I mean, if you guys want me to turn off this sell-off, I can just buy one or sell one real quick in the hole. And this thing
Yeah,
will jump
go with the
100
short
points
hole.
like that.
Let me know when you're about to, though, because I'm going to buy a 0 DT call as soon as you do it.
Okay, do you want to time it? We'll try to time it.
Go.
Now, our weekly support level, weekly, is 59.54. That is the weekly 15 EMA trend line. 59.54. I have to start buying some down there. We go down another 40
I feel like I need to
points.
start peeling off my January puts right now.
Bulls, Bears, and Pigs, Nick.
I know.
Slaughtered.
I'm going to
Wait,
do it.
everyone's going long right now? Is this
No,
the,
just
sign?
covering
No,
shorts, Nick
I'm
said.
just
Oh boy.
I'm just taking profit on swing shorts for January. That I would, when you kind of get a little piggish at all time highs, I feel like you take a couple of those, or you sell some premium, like Mr. Green is saying.
So you're saying you're becoming a buyer? Is that what you're saying?
Look at this thing go.
I'm just
what he's
taking some
saying.
profit
Taking
on a
profit.
wild short that made 300% today.
Done, Nick, for
Nice.
tick. Jack is reporting behind the scenes that the 10-year is now 10-year yield 4.5%. Yikes. Equities are not liking that. New lows here, 59.90 in the ES, 21. Just
Colby's itching to pull the trigger.
Oh my god! Someone say something.
I see room down to 75 with option.
It
Funny
can't
enough.
go lower than 59.60. Mr. Valentine
Yeah,
is setting the price.
David Green. Okay, here we go.
Going to zero.
Good
Gosh, look at this. I sold too early.
Oh, man,
Why?
man.
Why?
Let me look at these. Oh my god, they're up almost another $1.
Everyone head and hands. So we didn't.
This is just an ugly-
We didn't sell.
Look at this thing go.
Ugly looking day.
Holy
What are we
moly.
talking about?
But we didn't
shorting
sell,
at
so we're gonna continue melting.
680s? That was like 100 points ago. That was only 30 seconds ago. What? 3 minutes? Oh my goodness. Oh my goodness.
Oh my goodness is right. S&P's down about 160 points off the highs. Let's trade 59.80. Look at the NASDAQ. NASDAQ's down about 800 points off the highs in the NASDAQ. Holy cow.
59,
Need that charity
52.
account, Trey.
I
Need
know.
that charity account. Start selling this thing.
Look at this
We're
thing.
going to be at a zero
Selling in the hole for
RSI in a
charity?
couple of minutes.
What is like the 4-hour RSI or 1 hour?
Oh, David Green's got that.
4 hour. 4 hour is about 18 right now.
Oof.
Yep. 1 hour is about 15 right now. It's almost time, Dolby. It's almost time.
To buy?
Almost. I have a
An
bid
ES?
out at 60 and 50. Very small.
All right. 50 evens? 60 and 50 evens?
52 is the exact number. 59, 52 is where I'm going to stop by.
All right, I have an order in with you.
52.
To get long?
Yeah, I mean, like 40 points lower.
That could be there in 2 seconds, my friend.
Look at
Yeah,
this
it
thing
could
go.
be.
It's only 25 points lower now.
Still going.
Start counting it in real time.
It's only 20 points lower now.
Holy cow! Look at this
Yeah.
thing go. My,
We were just saying at 59, 80 something, like, hey, this is Jerome down to 70.
Yeah, I'm trading the MESs. I'm doing it small if we get to 52. And then I'll look for a far from moving average trade and add to it down there. How low we
Short
just get?
600s?
70 we just got.
For tick.
I'm selling another,
like
I'm
2
selling another
seconds.
10 of my puts.
This will be a really good setup if we can stay on the lows here and open down tomorrow morning.
Wow, what a sell-off.
Look at this thing go.
This is
Man, oh
crazy,
man, oh man.
man.
59,
I'm down to
60.
half.
Wow. This thing.
Half size on my January swing short.
There you go. Chakalaka.
So covered. It's a profitable trade no matter what now. I'm completely
Job.
green on it. Oh, wow.
Another leg lower. Another push lower. Here we go. 59,
I mean,
58.
I can turn this whole thing off right now by selling one in the hole. Turn this
Do
whole
it.
thing around.
Just hammer it. Just
Short it.
No, I'm getting along with you in this ES thing.
How the Fed
Wow,
chairman
we
still
just-
Christmas.
Did we just miss 52? We got to
Yeah, we did,
53.25, you son of a... Oh, come on. 15 points.
A little bit of a bounce here.
Are you
60 point
selling it
bounce
now?
in the Nasdaq.
Tesla down 10%.
I'd like it
Is
to
it
hit
really?
the first time, Dolby, when we get there. You know?
Are we pulling it?
First time.
You know, Andre, I think it was last night I was sitting on the couch and you start seeing like extremely bullish like 500 calls. And you remember last Christmas, Tesla was teetering at 100.
Yes, it was.
And you just kind of scratch your head. And was it like 250 a couple, like 2 months ago, whatever it was? So I think, yeah, we reached that level of like, this is now getting a smidge silly. So, of course, once you see 500 calls coming in.
I'm also thinking about BOA saying that they had like a record high, like $7 billion worth of retail inflows last week. Buy side,
Mhm.
the equities. Yep.
I think Hoag was talking about that yesterday.
Mm-hmm. JD, yes. And just look out below. S&P's down 190 points ish off the highs. Yes, we did hoop. What do we do?
What's up, Dolby? That stunk on ice.
That was a
Son
tough,
of
that was a
beast.
tough one. That was a tough one, David.
We missed it by 1.25 for 15
Oh, my
points anyway.
goodness.
Yeah, I would pull it now because if we go back down there, we're probably going to make new lows.
Watch the ES ladder, very, very thin. Nick, I mean, you just watch, right? I mean, try to dip a toe in.
I mean, now we're just in close your eyes and sell it, I guess. Like we've been close your eyes and buy it for 4 months.
Probably.
I mean, look at the ladder though. This is it's a whipsawing.
Might get a little bit of consolidation here, actually.
Yeah, I mean, we should get a little bit of short covering towards the end of the day.
Starting on the 30-second chart, which is a little bit desperate, but we are starting to get a little bit of a range on smaller time frame.
Oh, and Andre, the VIX is real again.
Above 20?
Oh,
Above 20. At 22.
Roger that. 6 minutes till MOC. 6 minutes till MOC.
Yeah, what is
UVX? We are back.
But we are completely back. All those.
It's violent, but when we get like this, I'll take it as because there tends to be a lot of two-way trading.
We are back. Nick for a tick is back. We got Dolby in the house. David Green in the house. Man, oh man. Powell Presser really set this thing in motion. Click like, click subscribe. Got 5,000 people watching right now. Good
Short 540.
UVXY today is up 18%. That is the VIXY. 18%. How's believe it or not, my next spot below this is like 58.90.
That's 890.
It's down 60 points from here.
Here it is. The longs are going to be.
This is ugly.
Yes, it is.
Yeah, on the H contract, next area down is really like 420s.
I mean, you can't be buying here. If we get any short covering at all, it might be in the last 5 minutes of the day.
Yeah, maybe the last 5 seconds.
New lows.
I mean, what is MOC going to be? Just billions in selling?
Yeah, exactly.
Holy cow,
if it starts off with billions and billions, that might actually be good. The market on close.
Wow.
Rally from.
S&P is down 200 points off the highs. 200 points off the highs. NASDAQ down 900 points off the highs. Last trade in NASDAQ, 21,460, call it. This is just
no relief in sight. This
Looking at the banner at the top of the screen, some people have had some very nice days.
So they're real good or real bad.
Yep. Sure, a lot of MLLs and a lot of personal profit highs for some people.
A lot of PRs. Oh, Dre, what would you do for your above below line in NQ?
Above below. I mean, there's going to be, oh boy. I mean, 59.50. Maybe lower.
I don't. I have no idea.
I don't know. This is just short covering.
All right, I sold another chunk of mine. I'm sitting pretty in this swing short.
We can get above 550s in NQ. Make it interesting.
No, I'm managing my January swing short with options.
Oh, nice. Man, oh man. Here's the pop. We got 3.5 minutes till MOC. Got a 20-point pop.
Yeah, I mean, 51 wasn't a bad spot. We went 10 points below it. Not a bad spot.
We're going to close at 5,900, aren't we? SPX. 10 points higher. 59.70s. Yeah, that would make a lot of sense. That was the level we were talking about.
What level? Wait to get
59.70s was like, hey, the max downside I think we were seeing, and then we kind of melted through it, but
we did.
That would make sense for a close.
Do a poll. I mean, I don't.
The scalping is so good.
I left out 50 in my real account.
Who's trading this?
That's a bounce. That's a freaking bounce. That's it. Really?
20 points.
What's the question?
This could be an interesting, a cheap buy here, right now, with the stop below 490s. You're still taking like 30 points of risk right now, which is bananas.
I mean, the spread is like 3 to 4 points on NQ.
Oh, bye-bye.
Right, bit of a bounce here.
Giant bounce.
Well, I mean, NASDAQ just bounced 100 points.
The NQs?
NQ, yes.
Oh, yeah. 120 and counting. in
430,
3 minutes?
yes. 100-point bounce there. If you're able to peg those lows at 21,430, we are now trading 21,570. There's a 140-point bounce for you. Look at the ES go.
MES
with a
is
little
20
30-point pop.
20 points, 30
Look
points
at
in
this.
the MES.
Man.
50 was the right place to start, Nick. Why'd you talk me out of it?
David Green. I did not.
Insane.
It's still going. God, what? I mean, who's knife catching that on NQ at 450?
Would love to know.
Seriously.
Who threw the stop sign up? Who threw the red light up? And like, nope, this is where we stop.
Everyone panics and covers.
Well, yeah, there's probably a ton of people who've been waiting like a year to get short and finally had their opportunity.
There's nothing. On
Finally
the
back to
ladder.
break even, Dolby. Trying to short since August.
Trying to short since
Yes. Nick for a tick is back, everybody. We're looking at a 35
finally
35-point
Finally,
bounce
I'm right.
in the Nasdaq. Here we got a 170-point bounce in the Nasdaq, 40-point bounce in the ES. Man, oh man, markets are just
should be wild.
Well, we knew there'd be some kind of short covering before the bell. There it is.
That might be it. Let's see what MOC
Oh, we got
does.
MOC coming. We're playing all the hits today.
30 seconds, baby. What a power hour. What a day.
If the ES is spike up to 96, I'm shorting them. If we go up 25 points from here.
96, okay.
I wonder how bad the slippage is in a live account right now in the NQ.
Look at, do you see that ladder,
Probably pretty
Dolby?
gnarly.
It's like 5 points.
Oh, you can't.
Brutal.
Okay, MOC in 8 seconds. 8 seconds. Buckle up, everybody.
I forgot about that. Jeez Louise.
Long 50 right now into MOC.
Here we go.
That action.
15 points of spread on NQ during MOC. It looks like the release statement. Like that's what this looked like.
Called it a close call. Close call.
God, I would still even consider longs. I think it might be like re-stair stepping. I know the time frame's super short, but 500s held, 550s held. Like, are we going to start seeing a new uptrend develop here on potentially like a V bounce?
Up above 78, Nick, you could maybe try a little something. That was the recent little high there.
Oh yeah, the cash on the sidelines definitely licking his chops.
Yeah, I mean, pull back to 70s could be interesting in ES.
Where is this?
If you love Tesla at 500,
what's it at?
You're gonna love it at 40, whatever it is.
Yes, you will. Come on, MOC. Where is it? Late to the party here. It's still nothing.
See, this is not a great setup for tomorrow now. It would have been much better if we closed on the lows. I mean, we still got 10 minutes. I guess we can, but would have been much better to close on the lows and open down tomorrow.
So it's a V bounce for Vendetta right here.
there is a stat where if you make a low of the day in the M period, that
here we go. All right, minus 2.4 billion S&Ps, minus 200 or 920 million Nasdaq, minus 540 million Dow. We're talking minus 4 billion plus sell side.
So, Nick, now if you get a little sell-off from here, you're probably all right on the long side because that's going to change. I bet you a lot of that pairs off. Would be my guess.
8 minutes till the bell. Starting to see some buyers stepping in here. Look at the tilt. 75% long ES, 75% long in the NASDAQ. They're long in the money. ES long from 60-12. Oh boy, nope. We're getting let's trade 59.
60-12?
60-12. 60-12.
Well, the 70s almost got touched again in ES.
I show a little 69.50 right. Oh, in the ES. I show it hit 69.50.
59.50. Sorry, I'm talking about 59.70 for a possible long off a 30-second consolidation.
Just a little 200-point bounce off the lows in the last 8 minutes in the NASDAQ.
Casual.
Oh
my God.
Jesus.
Oh my God.
Just
holy mackerel.
This volatility is so good.
It is. Tomorrow should be a good one.
It should be. It should be really fun.
Or did I just jinx it?
No, I don't know.
Do nothing. Well, Nick for a tick, welcome back. You came back on a good day. You brought some volatile. Remember the first time you came on? Did I kill the volatility? Well,
Right. I think I did the first time, but now I guess the Goldman interns know to turn it up when I'm on.
Great to have
Nick,
you back, man.
Nick, you covered at the exact right time. That's a great job, man. You covered.
I did.
I
did not. I guess diamond hand this, hoping for Armageddon or something in the swing short. But I mean, come on, when you're losing option premium to just time decay, it's like, hey, if you get a good solid move in one shot, take as much off as you can.
Well, that's a good.
I don't really trade options that much.
Seriously, Hungus, don't print a hat.
Great timing, not good timing. Great timing.
Dakota in the chat is ready to buy the dip, it seems, but he's nervous.
I think
Dakota, I hope you're feeling better, buddy.
For dip buying. It's very good for dip buying.
If you get a little pullback here, might not.
I don't know if it's going to let people in.
I mean, this is all one big pullback if you think about it, right?
That's true.
Yeah, 59.80. We're beneath 6,000. We're beneath 6,000 in the S&Ps. My goodness. Yeah. Powell killed
Louise.
Powell killed Christmas. Canceled Christmas.
He did.
No, it's back. It's back now. Christmas is back.
You're so back.
You're so back. VIX is back. Volatility's back. 10 seconds till the last, I guess call it injection of liquidity.
Yes, is only up 40 points off the lows.
Only.
I mean, yeah.
Remember the range we were
Here we go.
Like the 10-point range we were stuck in for like 2 weeks?
Yes, we were.
Check out. Put up my chart for a minute. I want to show you the weekly. Look at this. That's where it was. I mean, we went 10 points below it and bounced 40 points. That is the weekly 15 EMA. At 51 it was. 59.51. So if we close above that, it's good. I mean, we just pulled back. Yeah, we look here. We pulled back to the trend line. We went up 150 points, and now we just pulled back to the trend line again. So big level.
Melting another 100 points in 30 seconds.
I wouldn't be shocked. Well, you're getting your chance, Dole, if you want it.
Oh, I've wanted so many things, David Green. I've wanted so many things in the last 55 minutes.
Look, this is always one of the most difficult days. It's always difficult day to trade this when the Fed comes out. It just is. Not easy.
We were spectators. We had our popcorn out and we just watched the show.
It's impossible to pick these bottoms. Like I said, tomorrow, if we start out with a nice trender, either way, get on the same side of that. Yeah, I'd rather see us close on the lows and open down tomorrow for trading.
Why do you say that, David?
Because, today everybody's doing what they got to do. If we close on the lows at the end of the day, people are going to be coming tomorrow and say, oh, my God, it's Armageddon. Things are going to just really start crapping out from here. We get some follow through tomorrow morning, and that's when we get the nice bounce. But I have to tell you that works. It just very rarely sets up for that. Very, very rarely. Because tomorrow, if we open down significantly, now people are going to start getting scared. And that's the time when you start buying.
To see what London does.
Yeah, the reopen. Indeed. Overnight should be interesting. See what the domino effect is across the globe. It's major, major solve. Less than 3 minutes here on Power Hour. 59.60 last trade. Low of the day in the S&P is 59.40. Again, we were down 200 points off the highs in, casual 110-point drop in the NASDAQ. It's a doozy.
Yeah, bottom line is the NQs couldn't get above the trend. It got right up to the 9 EMA and went down a nice 100 points. But again, impossible to do a trend trade this late in the day because you can get blown out of the water both ways. But good no buy, Dobes.
Hey,
it's not
you guys didn't see a trade? Didn't take a trade.
Nope. Yeah, just went down 100 points in the NQs.
Yes, we did, David. Blink of an eye. Look at the NASDAQ ladder. It is thin, thin, thin. I mean, it's just algos. Just algos just cannibalizing themselves. I mean, how do you trade this?
You don't. You wait for tomorrow.
That's the answer. 90 seconds left in this day. Man, Nick for a tick, absolutely great to have you back.
It's good to be back.
All right, how's the sleep? You getting some sleep?
Good days and bad days. Some nights
Gotcha.
are better than others. It just really depends, is what I'm learning.
Yep.
Nick, enjoy every minute of it because it goes fast.
I mean,
every
we had
freaking second of it.
Our 1 month checkup this week, and it's crazy how fast it's already gone by and how big she already is. Yep. So I can only imagine.
I'm going to be a grandfather, guys. I just found out a couple of weeks ago.
Congratulations.
Congratulations.
Yeah,
that was
one. My daughter's pregnant.
That was really cool too, because we are the first grandchild on both sides as well. So seeing both of my in-laws and my parents get to experience it was really cool.
That's great. I can't wait. Can't wait. My little Sarah having a baby.
Unbelievable.
My baby's having a baby. That just shows how old I am. We're going to close on the lows now?
Yeah, it looks like it, man.
Jeez Louise.
Looks like it. 30 seconds.
30
Here
seconds.
we go. David Green.
200-point melt turn Q.
200 more. Going to close on the lows. Here we go. My 15 seconds left. David Green, I need you to hang on for just 1 second after this closing bell. Got a little something in store for you, David Green, so do not go anywhere. 5 seconds to the close. We are closing on the lows. S&P's 59.35 and going lower. Holy cow. David Green, don't you go anywhere. Closing bell. All right, I want to throw it to my main man for the outro, David Green. Get ready for this. Who we got? Take us out of here.
Hello?
Who we got? Oh,
Hello? Is this TopstepTV? It's me, Peter Tuckman. And I'm here live downtown in Chicago, Illinois, on Jackson and LaSalle streets. There's a city bus behind me that can't make the turn, and the train is going through the city. We are alive and well. David, my partner, my friend, how are you doing?
Told ya.
Oh, that's spectacular.
Just wanted to call in and tell all my favorite TopstepTV people that we had a blast at the FOMC meeting today. When I see a purple tie, I know rates are getting cut and hobbies is getting got. So I'm here downtown looking for the place that has the meats. And Andre, I'll be meeting you at the Chris Kindle Mart later. We're going to be eating doner kebabs and drinking mulled wine until the cows come home. So TopstepTV, this is Peter Tuckman wishing you a very happy holiday. Trade well. Always trade for tomorrow. And of course, always trade for Topstep.
Thank you, Peter Tuckman. David Green, there you go. Congratulations on becoming a grandfather. Great work. Thank you to all the bell to bellers. Yes, thank you. One hell of a day. Stay tuned. We got At the Buzzer coming up next. Oh, man. New lows. This trading is not done. David Green, thank you so much for joining us. Everyone, to stay tuned for At the Buzzer and throughout the entire night. Wow, what a day. This is TopstepTV. Let's go.
I've never felt so good in my life. I'm on an absolute roll, podiuming at every single competition during the year.
5.75 for the kid from Aspen. A tremendous showing.
And this is our 5th contest, and I'm feeling like I'm on cloud 9.
First thing with this system is the wind starting at 20 to 30 mile per hour range with gusts easily up and over 40.
And then in one fell swoop, literally 1 second, and my whole season, my whole world flips upside down on itself. I thought for sure I had broken my ankle, at least torn some tendons in my ankle, maybe have torn my ACL in my knee, and all the work I'd put in was coming to a screeching halt. When the doctor read the MRIs, it looked like he couldn't even believe the screen. No ligaments were torn, and I couldn't believe it. The dream is still alive. It had really only just begun. And I knew that I needed to work so hard in order to make it happen. My life 100% consisted of healing, day after day. Wake up, 7:30 sharp, morning meditation, PT exercises. Eat breakfast, oatmeal, blueberries. Physical therapy, an hour. Hyperbaric chamber, an hour. Novathor bed, 30 minutes. Drive to the gym, stretch 20 minutes. Bike 20 minutes. Workout 45 minutes. Hot tub 20 minutes. Drive home, sauna with visualization. Every run over and over again. Heat, ice, heat, ice, heat, ice. Over and over and over again. Go to sleep, do it all again. Wake up, 7:30 sharp. The only thing on my mind, the only thing I could focus on, the only thing I could possibly do was get better. Feels like the bone in the bone. I'm gonna do every single minute detail that I possibly can, because if I leave anything on the table, I'll regret it for the rest of my life. The day after I got injured at Mammoth, I was probably at 30%, exactly a month and 2 days after, close to 100%. I'm feeling like me and me more and more every day. Wake up, 7:30 sharp, repeat, every day, every day. The reality is there's no roadmap to tell you, okay, I can do this trick right now or I can't do this trick right now. It's like, how do I feel? Okay, I feel pretty good. Can I do a 540? Okay, can I do a 900? Okay, I can do the 900. Can I do the 900 the other way, to the right?
Getting better every one. All right, switch those up. Nice and big, good takeoff. You got this. Come on, baby.
Backwards to the left, switch left. That feels good. Can I do backwards to the right, switch right?
Come on.
But that hurts pretty bad, actually. Can I do a double? Because I won't be able to compete the way I want to without being able to do a double.
Right up 12. Same trick I hurt myself on in Mammoth. All right, I got this. I can do this. I was freaking nervous for that.
There's a difference between going to the Olympics and just going, and then going knowing that you can do something great. And I'm nervous because I know I can do something great, and I believe I will, but it hasn't happened yet. I'm excited, I'm ready, I'm prepared, but yes, I'm nervous. And I think being nervous is actually a benefit. It makes me more focused. Can I do the left side double cork 1620? heart's pounding out of my chest. Never been so nervous in my life. Oh my God, am I going to be the same? Am I the same? Can I do this? Does my ankle feel good? So many different thoughts running through my head. What if I fall here? If I fall here now, this is going to be really bad. But if I land, I'll have so much more confidence in order to bring it into the Olympics. Okay. Boom, drop in. Take off. Land. It's like, got it. Got it. And that was the moment I was kind of thinking to myself, this is doable. I believe in myself again. This is good. This is really good.
I can do this. I got this. I am this.
Man, today was so much better than yesterday. Just wait till tomorrow. That's what I tell myself every day.